Hello everyone, good morning and welcome to our CA Final Full Syllabus GST Marathon. And today's video is going to be in 100% English. Hindi Marathon we've already completed, GST as well as Customs uploaded in the playlist of revision for November 23 on this channel only. And today and tomorrow's target is to wind up entire IDT, GST as well as Customs in 2 days. Yes, thank you everyone for Teachers' Day wishes. All set is audio, video, everything clear. We shall start with the marathon. So the purpose for today's video is full syllabus GST marathon, except for import, export and refunds chapter that we will cover tomorrow along with customs. Dan Shubham will see after the session. Chal. Target GST. Is it exemption? No, it is 70 plus. We are going to study that ways that your minimum target should be 70 plus, and my batch students already know their target is 83 plus. Why ma'am? Because your teacher had scored 83 in IDT and I am looking for a student who would beat my score. Yes, everyone. Sure. Audio, video, everything clear, all set. Then let's just proceed. First of all, I'll just quickly give the overview of what today's session is going to be. We are going to cover maximum possible provisions. Obviously, it is going to be a 10 to 11 hour marathon. So starting now at 8 a.m. and we might stretch the session till 7 p.m. in the evening. So make sure that you stay till end, because it may be possible that after lunch you feel like little sleepy and you think to drop out of the session thinking that we'll cover it later. That later is never going to come. So make sure, no matter how painstaking it becomes, but we are going to stay till end. Quickly give me a promise here that yes ma'am, we are going to stay till end and we will wind up entire subject together. Second, do not worry about the amendments, because all the amendments applicable for November 23 examinations means till 30 April 2023. Whatever amendments have been issued by ICI, we are going to cover all of these amendments in our marathon only. Ma'am, are you going to solve some question answers in the marathon? No, because question answers video I have separately uploaded, and the agenda of marathon is to cover all the provisions to make sure that you know what is the linking right from section 7 till the last section of GST. Yes, but however, if I feel at some places that this particular topic you will understand better with question answers, in that case we'll cover the question answers also. Paper writing tips, ma'am. This is going to be tomorrow after the customs session. Last half an hour, I will show you my certified copy of May 22 examinations, how I scored 83 marks, what mistakes I did that you are not going to repeat, what good things I did that you can take away. So how to approach the MCQs, how to write the paper, language and everything that we are going to discuss tomorrow after the customs marathon. Yes. So this is all. I think this much background is enough, and let's just quickly start with the marathon. Whenever you feel like your energy is getting low, quickly put dil, agag, bomb emojis in the comment section. Heart, fire and bomb emojis in the comment section. It will flow energy, and I would also love to see the comment section going throughout the entire session, because it is 11 hours I have to speak. So it's your responsibility also to keep me going and my responsibility to keep you going, and together we'll wind up entire subject. Done everyone? Sure. So let's begin with the first chapter, which is GST in India and introduction. Everything we are going to cover from the handwritten notes. Link is already in the description box. So if you do not have the notes, open the notes. And if you have the notes, just keep the book open alongside and keep listening to whatever I am saying. If I ask a question, obviously it's your duty to answer in the comment section. Okay. So GST in India and introduction, very much simple. Chalo, GST came in India on which date? On 1st July. 1st July 2017 is happy birthday of GST. Understood, ma'am? Okay, to bring GST, we had to make certain constitutional amendments. So question number 1, why was a need? Why was a need to amend the constitution in order to bring GST in India? Because there was Article 246, which had a 7th schedule to it, saying that there are 3 lists: union list, state list and concurrent list. So there There was a list of taxes covered under union list. Let's say customs, which was the exclusive power to levy customs income tax is with center. If I talk about state, then we have state levies, we have VAT on alcoholic liquor, on drugs, on opium, etc. So all of these things covered here. Some stamp duties kind of thing, some criminal penalties covered under concurrent list. There was this residual entry saying that if any tax is not covered in any of the list, it would automatically get covered under union list. So we had a residual entry here saying that any tax not covered in any list would automatically get covered under the union list. Now we wanted GST to be dual model. What do we mean by dual model? We wanted to give center as well as states concurrent power so that they could levy GST together. But owing by the residuary list, GST would automatically fall under union list. Therefore, it was a need to amend the constitution. So question number 1, what is the need to amend constitution? Point number 1, to integrate the earlier taxes. We had VAT, we had excise, we had entertainment taxes, local taxes, purchase taxes, municipal taxes. So point number 1, we wanted to integrate all of the taxes into GST. And point number 2, we wanted to give concurrent power. We wanted to give concurrent power to center as well as state so that they could levy GST simultaneously. So this was the need to amend constitution. What did we bring after amendment? Article 246A. Article 246A simply said that for GST, we give simultaneous power to center as well as state. Means simultaneous power to parliament and state legislature so that they could make laws with respect to GST and levy GST. But there is an exception to this. What is the exception saying? The exception says that all the matters with respect to interstate supply, all the matters with respect to interstate supply are exclusively going to be dealt by parliament only. Why? Because when two states are involved, obviously both of these states would be having a conflict of interest as to I should be the place of supply so that I get the revenue of GST. Therefore, all the interstate supply, place of supply related matters are exclusively given to parliament only. Right. Then Article 279A, extremely important, GST Council. Article 279A, GST Council. Who constitutes the council? So quickly everyone in the comment section, who constitutes the GST Council? President of India. So President of India constitutes the GST Council. But is President of India a member of GST Council? The answer is no. President of India just constitutes the council. So who is the chair? Who is the chairperson of the council? It is the Union Finance Minister. So whoever is India's Union Finance Minister will automatically become chairperson of the GST Council under Article 279A. So currently Nirmala Sitharamanji is the chairperson of GST Council. Now how many members are there? How many members are there in the council? Come on, you have to keep giving me answers every time. Whenever I ask the question, you have to be extremely active. Just keep typing and typing. So members, there are total 33 members. How did we get 33 members? So there are 31 members of states. 31 members of states and 2 union members. Out of these 2 union members, one we understood, the finance minister means the chairperson, and one more minister is a minister in charge of all the union territories. And for 31 states, now there are total 31 states under GST, 28 geographical states are there, and plus 3, Delhi, Jammu Kashmir and Puducherry. 28 states are there plus 3 union territories, Delhi, Jammu Kashmir and Puducherry, which have their own legislature. So total 31 states. So one minister in charge from every state will become 31 members. And these 31 members choose a vice president among themselves only. So these ways we get total 33 members, 2 from union and 31 from 31 states respectively. Understood? For a meeting to be valid, we require quorum. Now what will be the quorum? 33 divided by 2 you do. So it will be 16.5. We round it off to 17. That in order for a meeting to be valid meeting, we need at least 17 members as a quorum. How is the decision taken? How is the decision taken? The decision is taken with a 3/4 majority. The decision is taken with a 3/4 majority, means you can say 75% people voting in favor of something would become a majority. But is this 3/4 majority a simple majority? The answer is no. For 3/4 majority, we give weights, and weights are assigned as 1/3 weight to center and 2/3 weight to states. So we understand that 1/3 weight is center, it means 33.33% power is with center only. So even if all the states member agree, going by weightage, it would only be 66.66%, which is less than 75%. So unless center assents to something, we can never take a weighted decision, because we need 3/4 majority, understood, but it will not be a simple majority. We will see weighted majority by giving 1/3 weight to center votes and 2/3 weight to states vote. What are the recommendations? That a GST council gives? Now we understand throughout GST, whatever is done, wherever you read a provision, everywhere it will be written notified by government in official gazette in recommendation of GST council. Government notifies, but who recommends to government? GST council. So every single matter means what will be the threshold for GST registration, which goods should be subjected to GST, which goods should be exempted to GST, with respect to special category states, what should be different provisions in case of some natural calamity, earthquake or fraud or flood or anything like that, what emergency provisions you want to levy, which goods should be exempted, then these products. The NAP products. When to levy GST on these NAP products, which is high-speed diesel, motor spirit, natural gas, aviation turbine fuel, and petroleum crude. So a future date that council is going to recommend from which date we are going to levy GST on our NAP products. So all of these recommendations regarding all of these things are given by GST council. So these are the important constitutional provisions, right? Now, I just mentioned special category states here. So what are the special category states under GST? Come on, everyone. How many special category states are there under GST? We know there are 11 special category states under GST, and we remember them as no asthma. No asthma in Uttarakhand and Jammu Kashmir. How do we remember our 11 special category states? They are no asthma in Uttarakhand and Jammu Kashmir. Do you all remember the full form? Yes. No for Nagaland. No for Nagaland. A for Assam. Sikkim, Tripura, Himachal Pradesh. Nagaland, Assam, Sikkim, Tripura, Himachal Pradesh, and whenever I say M, it is Manipur, Mizoram, Meghalaya. M means Manipur, Mizoram, and Meghalaya. A for Arunachal Pradesh, Uttarakhand, and Jammu Kashmir. These are our 11 special category states under GST. Then we study taxes subsumed and taxes not subsumed. Taxes subsumed and taxes not subsumed under GST. So we know before GST we had VAT, we had excise, we had other taxes, but there were some limitations to the earlier taxation regime. Like there was double taxation, there was cascading effect, tax on tax. The taxes were not integrated, therefore multiple compliances were required. Also, certain transactions like restaurant software, where the distinction between goods and services was not clear, were levied under both VAT also and excise also. VAT also and service tax also. To overcome all of these limitations, we subsumed GST. We subsumed all of these taxes into a single one nation, one tax, which is GST. Now, GST is a value-added tax. There is no double taxation under GST. Every subsequent supplier gets the credit of whatever taxes he or she has paid. Means there is a continuous chain of credit, and ultimately entire burden of the tax is borne by the final recipient. So this is all about the concept of GST. So we know that a lot of taxes were subsumed under GST. That is not very much important. Important is taxes not subsumed under GST. Means today, even if we say one nation, one tax GST, but there are certain earlier taxations also which are currently being levied. First is alcoholic liquor for human consumption. Now understand, in order to manufacture a sanitizer also, we require alcohol. So alcohol can be for industrial use also and can be for consumption purpose also. We are specifically talking only about alcoholic liquor for human consumption. So in Act itself, in charging section itself, it is written that GST shall be levied on all goods services except alcoholic liquor for human consumption. So we were not levying GST earlier, we are not currently levying GST, and in future also we do not have any plans to levy GST on alcoholic liquor for human consumption. So today also On manufacturing of alcohol, state excise is being levied, and on sale of alcohol, if it is intrastate sale then VAT, and if it is interstate sale then CST is being levied. Yes. Then second we talk about our nap products. What is this nap? So to these 5 products we say what you do, you go and take a nap. You go and take a nap. There will be a future date from which we will start levying GST on you. So today, currently we do not levy GST on you, but you go and take a nap. From a future date, we are going to levy GST on you. This is high speed diesel, motor spirit, natural gas, aviation turbine fuel and petroleum crude. So the council is going to recommend a date, a future date from which on notification of government we will start levying GST. Till then, on manufacturing of nap, we levy state excise, and if it is intrastate sale then VAT, and if it is interstate sale then CST. Okay, then entertainment taxes. Now, as such, entertainment taxes are subsumed under GST, but the entertainment taxes which were levied by local bodies, the power to levy those entertainment taxes still lies with the local bodies only. Other than that, all of the taxes are subsumed. Entertainment taxes are subsumed. Then talking about tobacco. Now, there are only 2 products under GST. There are only 2 products. One is alcoholic liquor for human consumption and another is on which GST is not being levied. Other than that, GST is being levied on sale, on supply of all other products. Means we understand that on sale of tobacco, GST is going to be levied. But also government has not discontinued the excise. Means today also on manufacturing of tobacco, central excise is being levied, and plus on sale of tobacco, GST is also being levied. Then if I talk about opium, narcotics, Indian hemp, I can simply say all of these drugs. Again, on sale of all of these opium, narcotics, drugs, Indian hemp, GST is being levied, but also on manufacturing, government has not discontinued the excise, so the state excise duty is also being levied. And last, we understand immovable property. The sale purchase of immovable property is outside the purview of GST. So whatever are the stamp duties, etc., the land revenue charges, stamp duties are only levied on all of these immovable properties. So these are the taxes. These are the taxes which are not subsumed under GST. Sure. So alcoholic liquor for human consumption. Now, okay, we understand that only these 2 products are not levied to GST, and therefore VAT CST will be levied here. Other than that, for tobacco and opium, GST will be levied. This understood. Now talking about excise. How to decide state excise or central excise? I always give a simple trick. In Hindi saying nashe wali cheeze means things that keep you high, intoxicating items, which is alcoholic liquor. You have alcohol and you get intoxicated, therefore state excise. So for all of these things that keep you high, we levy state excise. So for alcohol, state excise, and for drugs, state excise. Other 2 remaining things, which is the nap and tobacco, we levy central excise. So the simple technique that you can remember is intoxicating things, state excise, other things, central excise, and only these 2 products outside purview of GST. So VAT here. And other than that, on tobacco and drugs, we levy GST. Yes, everyone clear? Understood? Yes, we are remembering, we are understanding, and we are also enjoying. All 3 answers, yes. Do you understand? Do you remember? And do you also enjoy with me? Yes, ma'am. So here we complete entire chapter 1, all the important portions of chapter 1. Now, other than that, there are these benefits of GST, what are the common portals, which is not relevant for examination purpose at all. Sure. So starting with chapter number 2, which is supply under GST. Okay. Starting with next chapter, which is supply under GST. Now we have to study 2 sections here, section 7 and one small topic, section 8, composite and mixed supply. So let's start with section 7. S for 7, S for supply. Come on everyone, we'll also try to remember the section numbers alongside. S for 7, S for supply, section 7, scope of supply. So section 7 talks about what is a supply. Section 7 talks about what is a supply. Why there is a need to understand what is a supply? Why there's a need to understand what is a supply? Because under GST there is one comprehensive taxable event. Under GST there is only one comprehensive taxable event, which is supply. Means if you supply goods or services. What is the name of the act? GST means a tax essentially levied on goods and services. A tax essentially levied on goods and services. But what to do of the goods and services? Today I just have a pair of specs lying with me. These are goods. I have to pay taxes? No. If I supply these goods and services, then I have to pay tax to government. So we understand that the taxable event is supply. Now, before starting section 7, we also need to understand what are goods and what are services. So, simply talking about what do we mean by goods. Okay, the definition we'll study from book only, it would be quicker. Sure. So, chapter 1 we've completed. See, 11 special category states. Then what are the taxes not subsumed under GST? The entire table given here. Then these constitutional provisions, Article 246, 246A, 279, whatever was important, we have covered. Okay. Taxable event under GST, supply. Now let's talk about goods. How to remember the definition, how to understand the definition. We'll break the definition in 3 parts. Good means other than and but includes. Goods means other than and but includes. So goods means every kind of movable property. So whatever is movable property will be considered as goods. Other than. Now money and security might be movable properties, but we are specifically excluding it. So first of all, goods means says that every kind of movable property is a good. But other than money and security, so money and security might be movable properties, but they will never be considered as goods. But includes. Now if I talk about actionable claims are not movable properties. Actionable claims are not movable properties and it's not falling under the means part. But they are saying still you specifically include the actionable claims. What are actionable claims? Claims which you can enforce in court, let's say lottery, betting, gambling, any claim to unsecured debt or anything like that. Means the happening, not happening is kind of contingent. We call them actionable claims. Or any growing crops, grass and things attached to or forming part of the land. Means today, if I say there is this land and these crops are growing, so they are attached to land, means they are not movable as of now. But I have entered into a contract saying that I am going to sever these crops from the land and sell them separately. I have already agreed that I am going to cut all of these crops before supply or under a contract of supply and supply them separately. So even if they are not movable at this point of time, still we are going to consider them under the definition of goods, right? So we understand here goods means every kind of movable property. Other than money and security might be movable property, but we are never going to consider them as goods. And then but includes means these two things, not movable property, but still a part of definition of goods. One is actionable claim and other is anything attached to land, forming part of land, growing crops, whatever that you have agreed to sever under a contract of supply or before supply. Okay, let's understand what is money and what is security. Money is very much simple. Indian legal tender means talking about Indian INR, the Indian rupee, or any foreign currency, or any bill of exchange, letter of credit, promissory note, means whatever instrument RBI has recognized, which you can use as a medium of exchange for your transactions, everything is money. But remember, if you are having some ancient coins or anything like that, which you are holding for their numismatic value, say for example, I collect a lot of notes of a single series number, means I decide to collect all the notes ending with 999 series, and then those 100 rupee 100 notes. If I have 100 rupee 100 notes, they would be worth 10,000, but I am selling it for more than 10,000. Means now I am having money, some ancient coins possibly, or any series of numbers, anything like that. I am having money, but my objective is to use those money as goods. Means 10,000 worth of money I am not using for 10,000. I am getting more amount in exchange of that money. We call them as money held for numismatic value. Now any of these coins or notes or any collection that you have which you are going to sell and collect more amount compared to what is the worth of money, it is called numismatic value, and these are considered as goods. Why? Because they are not included in the definition of money, right? So anything which is recognized by RBI as a valid medium of exchange, everything is money, but money held for numismatic value is not money. Understood? Commercial paper and certificate of deposit are also considered as money. Security, very much simple. Any shares, bonds, debentures, stocks, or any share of government security, everything is considered as security only. And security is also outside the purview of GST. So today, if you sell a share, you purchase a share of any particular company, no GST would be levied on it. Do securities also include derivatives, forwards and futures? The answer is yes. Derivatives are also securities. So today if you buy certain forwards, futures, and you decide to net settle it, cash settle. Say for example, I enter into a forward contract of soya bean. Now, I do not take the physical delivery of the soya bean. At the expiration of the contract, if I am at loss, I will pay amount. If I am at gain, I will get the amount. Means we are cash settling it. We are net settling it. Then it is considered as security, no GST levied. But I decide to take delivery of the commodity derivatives, delivery of the commodity forward or futures. Then in that case, GST will be levied because now I am physically dealing with the goods. Understood? So this is all about goods, which says goods means every kind of movable property other than money, security. Understood? What is money, what is security? But includes actionable claims and anything attached to land which you have agreed to sever before the supply or under the contract of supply. Now talking about services. Again, we break the definition in three parts. Services means other than, but includes. Now services means anything. So simple. Services means anything other than goods, money and security. Means if anything specifically falls under the definition of goods, then first you consider it goods. Money, neither goods nor service. Security also neither goods nor service. So money and security have been excluded from both of the definitions. Hence we can conclude that no GST would ever be levied in a mere transaction in money or security. And if anything is goods, you simply consider it as goods and not service. Okay, so service would mean anything other than goods, money, security, but includes. Now they are saying money and security are not services, but dealing in money and security for which a separate consideration is charged. Say for example, I convert my currency of one form currency or denomination into another form currency or denomination. I decide to convert $1 into whatever rupees I get. Or let's say I decide to exchange a 100 rupee note in exchange of 10 rupee 9 notes. Why? Because 10 rupees consideration that person has charged to exchange my 100 rupee note. So this ways, if from one form currency or denomination I decide to convert my money into another form currency or denomination for which a separate consideration is being charged, then it will be treated as supply. So if I give you a 100 rupee note and you give me 10 rupee 10 notes, there is no supply, there is no service. But if you give me 9 notes of 10 only, saying that 10 is my consideration for exchanging your note of 100, then in that case that would be treated as a service. And also if you facilitate any transaction, simply if you facilitate any transaction in money or security, it will be treated as service only. So buying a share is a security, not covered in service. But if there is some brokerage, there is some commission being charged, there is some brokerage or there is some commission is being charged by the broking agent in between who facilitates you to buy and sell securities, then that commission would be considered as a service, right? So understood what is goods, what is service. Now let's talk about related person. So all of my students know the definition of related person, that sofa copes. Sofa copes is what? Sofa copes is related person. What do we mean by sofa copes? So means sole agent, sole distributor. Now understand, we are not talking about a normal agent. Not talking about a normal agent, we are talking about sole agent. Sole means, say for example, I only have one agent. So whatever goods I supply, I give to this agent, then it is the agent's duty to find prospective buyers and sell the goods. This person would then be known as my sole agent, and this sole agent or distributor would be my related person. But this is my factory and I have multiple agents and I supply goods to all of them. Then these agents are not my related persons. Only and only a sole agent or a sole distributor is considered as a related person. Understood. Then FA. So sole agent, sole distributor. FA means family. The family under GST, extremely simple. Your spouse and children will always be your family. Your brother, sister, parents, grandparents. Only if they are dependent on you, then they would be considered as your family. Other than this, any other person, your aunt, uncle, niece, nephew, whoever, any other person would never be your related person under GST, even if they are dependent or independent. Only and only these people, your children and spouse, irrespective of the fact whether they are dependent or independent, will always be your related person, always be your family. And parents, grandparents, brother and sister, only if they are dependent. Even partial dependency would be fine. Only if they are dependent, then they would be considered as your family. Okay, then COPS. C means control. So two entities also, see, if today A controls B, means A have the power to appoint all the directors of B, we can simply say A controls B. These both are related person, no doubt. But if A controls B and A controls C, then B and C would also be considered as related person. You can draw a small triangle and remember this way that these two people will be related person, no doubt about it. But if two entities are being controlled by a common person, then these two entities would also be considered as related person. O means officer director in one another's business. P means legally recognized partners. E employer employee. And last shares says if you hold more than equal to 25% shares of a particular company, you both become related person. So today if A holds, let's say, 30% in B and A holds 40% in C, in this case AB and AC are related person, no doubt about it. But B and C would also be considered as related person. So if I directly hold more than equal to 25% shares, we are related person. But if two entities and there's a common person holding in both of them, again the triangle structure you need to remember, then B and C would also become related person in this particular case. Right. What is business? We understand. Supplier, okay. Recipient, okay. Consideration. Let's see consideration. So consideration, again, extremely very much simple. Any payment, now it can be in money terms also, it can be in other than money terms also. In order to receive goods, services, whatever payment you are making is considered as consideration. Always remember, government subsidy, central government and state government subsidy, if any day received, it will never be a consideration. Local authority subsidy is a consideration. Therefore, I have specifically written and striped it off that local authority subsidy is a consideration, but any subsidy received by central government and state government would never be considered as a consideration. And also, if there is some deposit, let's say I stay in a PG and I give certain deposit before taking the possession of the house. Now in this case, this is not an advance, this is nothing, it's just a deposit. Whenever I leave the house, I will get the deposit back. Or let's say I default on any particular payment and my deposit is being used, then in that point of time when my deposit is actually applied, I would consider it as consideration. Simply giving the deposit is no consideration. I, let's say, did not pay rent of 1 or 2 months and the owner used my deposit for that rent purpose, applied my deposit. Only then it would be treated as consideration. Yes, ma'am, understood. Then distinct person. We always remember one golden rule, same PAN, separate registration. Same PAN, separate registration is known as distinct person. So now same PAN, separate registration can be in same state also, can be in different state also. If I do not give you any information, and I simply give you, I simply say Mumbai, Pune. I have one branch in Mumbai, another branch in Pune, and I have transferred stock from Mumbai to Pune. Now here no other information is given. Our by default assumption would be that since both of these branches are in single state, they would be under a single registration only, and hence they are not distinct person, because you need to satisfy two conditions, same PAN and separate registration. Now if I say that I transferred stock from Ahmedabad to Surat, Surat both are in Gujarat. I transfer stock from Ahmedabad to Surat, which means they are under both same registration. So here they are not distinct person, but if I tell you that they are voluntarily separately registered. See, if I say Ahmedabad to Mumbai, you will not have any doubt only, because both are in separate states, hence automatically we understand that both would be under a separate registration only. Then they are distinct persons. But I say that Ahmedabad, Surat both are in Gujarat. Unless the question mentions that they are separately registered, our by default assumption would be that they are not separately registered. But if Surat and Ahmedabad branch were separately registered, then even though in same state, then we would call them as distinct person. You forget the state rule, you simply remember same PAN, separate registration, we consider them as distinct person. And establishment of distinct person, I have one establishment, one registered establishment in a state, and then any establishment in other state. Might be registered, might not be registered. I have a normal registered restaurant in Surat. I have an unregistered liquor shop in Goa. Both are mine only, same PAN. Both of them would be considered as establishment of distinct persons. Understood. Then export of goods. Simply taking goods from India to a place outside India. Taking goods out of India to a place outside India is known as export of goods. You can physically see the goods going from India to any place outside India. So as soon as the goods cross territorial waters of India, we say export of goods has happened. But in case of services, you cannot physically see the services going, right? So for services, we have some additional conditions saying that in order for a transaction to qualify as export of service, you need to satisfy all of these conditions. Supplier has to be in India. Obviously, we are talking about export, means supplier is in India, recipient is outside India. Supplier, the location of supplier is in India. The location of recipient is outside India. Place of supply is also outside India. So these three basic conditions understood. Supplier, India. Recipient, outside India. Place of supply, outside India. Also, since this is a case of service, you cannot physically see the services going, but you can see the money coming in into India. So the payment has to be received by supplier in convertible forex currency. Or let's say if RBI permits somewhere, we would allow INR, but otherwise the default general rule says that you have to receive the payments in convertible forex currency. Then we call it as export of service. And you and your recipient, means the supplier and recipient, are not just mere establishments of distinct persons. If you satisfy all of these conditions, if you satisfy all the 5 conditions, we term it as export of service. Supplier India, recipient outside India, place of supply outside India, payment has to be received in forex, and you both are not mere establishments of distinct persons. Done. So here we complete all the definitions, all the important terms under GST that would be relevant for your examination purpose. Quickly tell me, समझ आया, मजा आया, याद हुआ? Hey ma'am, what did you just say? Did you understand? Did you remember? And are you enjoying the session? Everyone, come on. Give me some heart, fire emojis in the comment section. Spam the comment section, guys. Come on. Yes, understood. Sure. Then let's start with supply under GST. So I already mentioned S for 7, S for supply, section 7, scope of supply. Now talking about subsections, 7.1 says supply includes. What is included in supply? 7.2 says supply excludes. So 7.1, what is included in supply? 7.2, what is not included in supply? 7.3 simply says government has power to notify certain transactions as goods not service or service not goods. And 7.1a, we have an entire list saying what is goods and what is services under schedule 2. Yes, everyone. Sure. So starting with 7.1, supply includes. Now for ease of understanding, we can break it into 2 parts, saying that for a consideration and without consideration. So if supply is for consideration, we understand under section 7.1a, all forms of supply. Now supply of what? Goods and services tax, GST, levied on goods and services. So all forms of supply, supply of what? Supply of goods, services, or both. Such as, what are the forms of supply? Sale, transfer, barter, exchange, license, rental, lease, disposal, everything that you can think of, we call them all as supply. Made, agreed to be made by a person in course furtherance of business. If you satisfy all of these conditions, means 99% of the cases fall here only. The general case is saying that all forms of supply, supply of what? Goods or services or both. What are the forms of supply? Sale, transfer, exchange, license, barter, disposal, lease, agreement, everything is a supply. Made or agreed to be made by a person in course furtherance of business. So if I sell my personal old jewelry, are they goods? Yes. I sell my jewelry. Yes, it is supply. Am I a person? Yes. But am I doing it in course furtherance of business? The answer is no. Therefore, it will not be a supply. So all of these conditions have to be satisfied for you to fall under section 7.1a and call the transaction as supply. 7.1b simply says that importation of service. Now, when for a consideration you import certain service, not talking about goods. Why? Because for goods, Customs Act comes into picture. So we are talking about import of service for a consideration. Now it will always be a supply. You will not see the purpose. So today if I import any service for a consideration, be it business purpose, be it personal purpose, it will always be considered as supply. Then 71AA says that if I am a person not being an individual, means I am a partnership firm, I am a club, association of person, body of individuals, anything like that, and I do any transaction with my own members or own constituents. So let's say a club doing any transaction with its own members, for which any consideration is charged, means a club charging a membership fees, would also be considered as supply. Why? Because of this explanation saying that this person and the constituents are two separate people. So partnership firm and partners are separate people. Club and the members of club are separate people. Therefore, even if they do any activity transaction amongst themselves for consideration, it will be treated as supply only. Understood. So this is the for a consideration part. So for a consideration, very much simple. 71A, 71B for import of service, and 71AA for person and its own constituents. Now 71C. So see, understand. The general rule says that no consideration, no supply. General rule says that there has to be a consideration. Then you see 71A, 71B, 71AA, and it will be a supply. But if there is no consideration, it would not be a supply as per general rule. There are only 4 exceptions to it. So 71C says that all the activities specified under Schedule 1, would be considered as supply even without consideration. The four activities specified under Schedule 1 would be treated as supply even without consideration. What are these 4 activities? Come on, everyone. 4 activities in the comment section with me, everyone. Point number 1 says permanent transfer of business asset on which ITC availed. All 3 conditions to be satisfied together. There has to be a permanent transfer or disposal of business asset. On such business asset, ITC must have been availed. Then even without consideration, we call it as a supply. Example, a holding company transferring asset to subsidiary company for nil consideration. Or let's say another example. My laptop is my business asset. I have availed ITC on the same. Today I decide to gift this laptop to you and I am never going to take it back from you, means there's a permanent transfer of laptop which is my business asset and I had availed ITC. Even without consideration, it will be treated as supply of goods or service, whatever the respective case. It would be supply of goods only because we are permanently transferring the goods. So would be supply of goods. Understood. Then supply between related person or distinct person. Now who are related person? Just now we read sofa copes. So supply between sofa copes or distinct person. Same PAN, separate registration. So supply between related person or distinct person, but only if it is for business purpose. Now understand my spouse. My spouse is my related person? Yes. So today if I gift a diamond ring to my spouse, I gift some let's say clothes to spouse. Whatever if I am gifting, would that become a supply? Just because we both are related person? The answer is no. Why? Because that gift was not in a business purpose. So any supply between related or distinct person would be a supply even without consideration, but with a precondition that it has to be for business purpose. The most common example would be 2 branches transferring stock amongst themselves because they would be distinct persons and the stock is transferred in business purpose for further sale. But there is one exception to this. Now sofa copes. Sofa copes covers employer-employee, E for employer-employee relationship. So if any employer is gifting anything to employee up to 50,000, that would not be considered as supply. If the amount exceeds 50,000, then entire thing would be considered as supply. Say for example, the gift is worth 60,000. Then not only just 10,000 would be supply, the entire 60,000 will become a supply. So till 50,000, no supply between employer-employee gifts. But if the amount exceeds 50,000, the entire amount will become a supply. Para number 3, goods. Again, not talking about services. We are not talking about service. We are only and only talking about goods. So any goods transferred between principal and agent would become supply automatically even if it is without consideration. And last point says that import of service. Now see, If import of services for consideration, it is covered under 7(1)(b). Any purpose, business purpose, personal purpose, if for consideration there is import of service, it will be a supply. But without consideration, if you want to consider an import of service as supply, you need to satisfy two conditions. One, it has to be from related person or own establishment, and second, it has to be in course furtherance of business. See this. Clarification regarding import of service, not talking about goods. If it is with consideration, even if it is in course furtherance of business, not in course furtherance of business, it will always be a supply. But without consideration, I need to satisfy two conditions. One, that the supply has to be from related person, own establishment, and two, it has to be in course furtherance of business. If both conditions satisfied, then supply. Otherwise, it is not a supply because of the general golden rule saying that no consideration, no supply. Understood everyone with me? Yes, ma'am. Okay, examples you can just self-read. So here we complete entire 7.1. Section 7.1 saying that supply includes, Section 7.1 supply includes, which has two parts: for consideration, without consideration. Without consideration, we see 4 activities under Schedule 1. And with consideration, we see 7.1a, 7.1b and 7.1AA. Understood, ma'am? Sure. Now section 7.1a, very much simple. What is goods and what is service as per Schedule 2? Now I don't think there is a need to cover this particular point in marathon, because we understand if I temporarily transfer something just as a use, or I give any right to intellectual property, or there is any rent or a easement, anything on any property, all of these things would be considered as service. Whereas transferring the title, transferring the ownership, hire purchase, all of these things will be considered as supply of goods. So I don't think there is a need to explain this to you. If I do any treatment, any process on some another person's goods, let's say job work, it would be a supply of service. But business assets itself, if I permanently transfer, it is goods. If I temporarily transfer, it would be service. Renting of immovable property, again service. Then sale of a completed land building. Sale of a completed land building is outside the purview of GST. I just now taught you taxes not subsumed, where the last point was immovable property. But before, means before CC or FO. What is CC or FO? Completion certificate or first occupation. Before the completion certificate or first occupation, whichever is earlier, is received, at that point of time, if the builder receives consideration, means now that consideration is for construction service. Now that consideration is for construction service and not for that immovable property. Hence, it would be considered as supply of service. So here, construction of complex building or civil structure would be treated as supply of service. The condition being, whatever is the consideration must have been received before CC or FO, means before completion certificate or first occupation, whichever is earlier. Why the word before is so much important? Because if the consideration is received after CC or FO, in that case it would be treated as a sale of land building, and sale of land building is outside the scope of GST. Any development, design of software, obligation, agreeing to obligation to refrain from an act, to tolerate an act, to do an act, all of these are services. Example, non-compete contracts, etc. Then any right you are transferring for use of any goods, it is also service. And then works contract and restaurant. These are composite supply, means you go to a restaurant to have food also and for ambience also, means you get goods also, you get services also. Same goes with works contractor. He gives you service of construction, he also gives you the materials used for construction. But both of these cases, government has clarified very much clear that it will always be treated as supply of service only. So this is section 7.1a, which talks about Schedule 2. What is goods and what is service? 7.3, not of use, simply says that government has power. Today government can come and say, hey, this is not goods, this is service, or this is not service, this is goods. So government may, on recommendation of council, notify transaction to be treated as supply of goods and not service, or supply of service and not goods. This is about 7.1. Thank you, Sandeep. Thank you, everyone. Wishing happy Teachers' Day. Thank you so much to all of you. Sure. Now let's talk about 7.2, which talks about supply excludes. Means it might fall under the definition of goods or service. It would also fall under the definition of supply. But still, specifically, we have said that under 7.2, you are not going to treat them as supply only. Means understood We understood that all of the conditions of this transaction being a supply are satisfied, but still we are saying that you specifically exclude these particular things from the definition of supply. So 7.2 says that supply excludes. Okay, now we have two things. 7.2a, two clauses, 7.2a and 7.2b under supply excludes. Now 7.2a talks about a negative list under Schedule 3. So 7.2a says that whatever is covered under Schedule 3. 7.2a says that whatever is covered under Schedule 3, under a negative list, we are not going to treat it as supply. Now, just to remember these things, just to remember the entire Schedule 3, we use a technique which is FB changes. A technique to remember entire Schedule 3, which is the negative list of GST, is FB changes. Okay, what is FB changes? Come on. Now, without me asking, I quickly want the full form of FB changes in the comment section. One word you can write, like F for funeral, B to bond, everyone. Come on. Everyone, I want all of you to write the negative list, the Schedule 3 under GST, which says supply excludes. Okay. F means services of funeral, mortuary, burial, crematorium, including transportation of deceased, let the person die peacefully. So all of the services in relation to funeral, mortuary, burial, crematorium, or even transportation of the dead body would not be considered as supply only. Understood. B means bond to bond transfer. So when your goods are lying in the customs bonded warehouse, you have not yet cleared the goods and you sell these goods in warehouse only, the bond to bond transfer, it is also not considered as supply. C says that any service by court or tribunal, right? Justice is our natural right. How can they charge any GST for us to get justice? Very much simple. So any service by court or tribunal, so whatever fees or anything you pay in court or tribunal for justice, in that case, no GST would be charged. Now, here they've given a clarification saying that Consumer Dispute Redressal Commission is also treated as a tribunal only. And therefore, if you go to Consumer Dispute Redressal Commission and pay certain application fees there, that would also not be subject to GST. H means high sea sale, means the goods have, let's say for example, I am importing certain goods from USA. So the goods have left the port of USA, they are still in the high sea, means the ship is still in the high sea, not reached India. And I decide to sell the goods here only. So I meet a person, I say, hey, do you know there's a consignment coming in 4-5 days? I've ordered something from US, and this person says, oh, you sell it to me. I will clear these goods from customs. So while the goods are in high sea, I sell these goods at that point of time only. This high sea sale is excluded from GST. Now, ultimately, when the second buyer, the subsequent buyer clears the goods, at that point of time, that person would pay the applicable duties and GST. But for this high sea sale transaction, no GST would be levied. Supply of goods by consignee to any other person after goods dispatched from the port of origin but have not reached India yet or have not been cleared for home consumption, such high sea sale is outside the purview of GST. Then talking about actionable claims. Now, I taught you the definition of goods. Which says that actionable claims are specifically included in goods. Means by default, generally, there should be GST being charged on actionable claims, but under Schedule 3 negative list, they have specifically excluded actionable claims other than lottery, betting and gambling. Means these three actionable claims, only these three actionable claims, which is lottery, betting and gambling, would be subject to GST. Other than that, all other actionable claims, let's say claim to any unsecured debt, would not fall under the purview of GST. Why? Because they have specifically excluded it to be a supply. So all actionable claims are excluded other than lottery, betting and gambling. Means lottery, betting and gambling are supply. Other than that, all actionable claims are not supply. Then N means goods going from one non-taxable territory to another non-taxable territory without goods entering into India. Goods moving from USA to China. Now, it might be possible that a person in India has arranged this transaction, but still, did the goods physically enter India? No. Means you cannot levy GST on those particular goods. It will not be a supply in India. So, from one non-taxable territory to another non-taxable territory, goods going without entering into India would not be treated as supply. Then G means government. Means you are a constitution post holder, member of state legislative assembly, you are a member of panchayat, municipality or member of parliament, performing your duties as a post holder in some government entity. So all of these, whatever remuneration you receive at these government places, no GST on it. E means employer, employee, and we understand has to be an employer-employee contract only. Means today, let's say I have an employee who looks after the delivery of the books, the encryption of lectures and everything. And I have some carpenting work in my house. Now he said that, ma'am, I also know how to fix the furniture. I say, okay, you come to my house, fix the furniture, I will pay you whatever amount is the consideration. Now that fixing of furniture, carpenting service is separate from our employment contract. That would be subject to GST. So they are saying that whatever is in relation, in course of employment, only that would be excluded. Anything outside the employment contract would still continue to be a supply. And last, S means sale of land and building, subject to Schedule 2. Why subject to Schedule 2? Because we saw a point before CCFO. So if the sale is before CCFO, then considering it as a construction service, GST would be levied. But after CCFO, whichever is earlier, it would come here under sale of land building, not leviable to GST. So this is the negative list. Yes, everyone, I want all of you to give answers in the comment section. Once again, Schedule 3 negative list under GST, which is just how fast the night changes. No, it is FB, changes. Funeral, mortuary, burial, crematorium, including transportation of deceased. Bond to bond transfer. Court, tribunal. High seas sale. Actionable claim. One non-taxable territory to another non-taxable territory without goods entering into India. A, actionable claim. A, high seas sale. C, court or tribunal. B, bond to bond transfer. F was funeral. Right. Then G means government, E means employer, employee, and S means sale of land and building. What is this? This is negative list under GST section 7.1a, Schedule 3. Now 7.1b says that government can also notify certain transactions which are undertaken by government to neither be supply of goods or supply of service. Is anything notified here? Yes, two things. Any activity done in relation to Article 243G or 243W. Any activity done in relation to Article 243G or 243W. And second, grant of alcoholic liquor license by state government. Grant of alcoholic liquor license by state government. These two things done by government are neither supply of goods nor supply of services. Yes, ma'am, understood. Sure. Now there are some clarification circulars which you can self-read, like donation. If the payment, the character is, the purpose is philanthropic and you donate anything to a charitable organization, there is no GST. But you have to satisfy these conditions that the purpose should actually be philanthropic. If you're trying to advertise something, then it would attract GST. Just merely displaying the nameplate for gratitude that Mr. So-and-so donated so-and-so amount, thank you. That is not an advertisement. That would be permissible. Now, artists sending their artwork to art gallery to display is no supply. Why? Because no consideration is flowing and it is not falling under Schedule 1 also. Ultimately, when a person comes and selects this painting, at that point of time, it will become supply. Okay, business, the intention is important. Even if I sell only one particular good in entire year, but my intention is business, it will be considered as business. But selling my personal car, selling my old jewelry is not a supply. Also, a famous actor who paints painting, sells them and donates the earning to a trust. Will it be a supply? Yes, it will still be a supply. See, today if I do business, you give me lecture fees. Now, what I can do? I can burn the money, I can donate the money, I can use that money for my personal needs, I can give that money to my parents, I can do anything of that particular money. That would not be relevant at all to consider whether whatever fees you are giving me would be subject to GST or not. So after the transaction is being done, the actor might donate the money to the trust, might use the money for own purpose, might use the money for a date with a girlfriend. It will not make any difference. Means donating will have no impact. The business is business. You are selling painting, it is business, it will be a supply. Any perquisites by employer to employee in employment contract, means whatever is in the employment contract cost to company. So if the employment contract says that you deserve some perquisites or you are entitled to some monetary benefits, they give you any car facility, cook facility, rent-free accommodation, everything which is a part and parcel of cost to company, nothing will be supply. Why? Because Schedule 3 simply says that whatever happens between employer and employee under a contract will never be a supply. Principal agent, simple rule. Invoice is in whose name? If the invoice is in the name of agent, the agent is agent as per Schedule 1, means even without consideration there would be supply. But the original invoice is in the name of principal, then it will not be a supply. Let's see, Mr. Kirit appoints Abhishek to procure certain goods from market. So Kirit is principal and Abhishek is agent. So Kirit has said Abhishek to procure certain goods. Abhishek identifies suppliers and asks them to directly supply the goods. So Abhishek says that Abhishek identifies the ultimate suppliers, but he tells them to directly supply the goods to Kirit and issue invoice in the name of Kirit only. So when the invoice is issued in the name of principal. There is no agent. The agent is not agent only. The normal provisions will apply. But in this case, if Abhishek had told the other person to issue invoice in the name of Abhishek, and then Abhishek transfers the goods to Mr. Kirit, now this can happen without consideration, but it would still be treated as a supply. Why? Because of going by the invoice rule. If invoice issued in the name of agent, agent is agent covered under Schedule 1. Then any transaction between principal and agent, even without consideration, would be treated as a supply. Okay, and here we will see supply of goods. Supply of service does not fall under Schedule 1. See, import of service. I said import has to be of service, not goods. But the principal agent point, I said it has to be goods. Means if principal and agent are supplying any services, then consideration would be received. Only for goods, principal and agent do not require consideration if going by invoice rule. Agent is an agent. Then talking about del creditor agent. So what is who is a del creditor agent? Who guarantees payment to principal. A del creditor agent guarantees payment to principal, that even if the ultimate customer is not making payment, still this del creditor agent out of own pocket would make payment to the principal. Now what happens here is, the del creditor agent makes payment to principal. Later on recovers the payment from the ultimate customer. Now because this customer has late paid the amount, it is possible that del creditor agent would also collect certain interest or late fees or penalty charges from this customer. Why? Because on due date, del creditor agent had to make payment to the principal. Now this ultimate customer is late paying to the del creditor agent. So obviously for this late payment period, interest would be charged by the del creditor agent. The question is, should this interest be taxable or should be exempt? Why? Because under supply, we know, under value of supply chapter, we've studied this, that whatever is the interest or late fees or anything like that, it is a part of the original supply only. So whatever is the rate of GST on original supply, you levy on this interest for late collection. But we also know that the normal interest, if I give a loan to someone, the normal interest that I receive is exempt under GST. So the normal interest is exempt, but the interest with supply is taxable. So what kind of interest is this? What kind of interest is this received by del creditor agent? Again, going by the simple rule, you see, original invoice is in whose name? If invoice is in the name of agent, means agent is agent. If invoice is in the name of agent, then agent is agent. Now in this case, any interest or any late fees is received, it will be treated as a part of original supply. Means the original goods were levied at 18% interest. Whatever interest amount I have, 18% GST, whatever interest I have received will also be levied under 18% GST only. So interest on loan will form part of value of the original goods supply and not a separate supply. But if invoice is originally in the name of principal, so the original supply was made in the name of principal, means the agent is not agent only. Now we will treat that the agent has given a separate loan to the ultimate customer and whatever interest is received will then be exempt under GST. So simply remember the interest received by del creditor agent. If invoice is in the name of agent, then make it a part of original supply only. If invoice in the name of principal, then this interest received separately will not be subject to GST. All sale promotion, no consideration, no supply, we understand. Tenancy rights is a supply of service. Distinct person already covered, same PAN, separate registration. Okay. Cost petroleum. Cost petroleum is not a supply, not a transaction only. There is no consideration. And profit petroleum, the government's share of profit petroleum. Now I am not explaining the entire concept here because for examination purpose what is relevant is neither cost petroleum nor the government's share of profit petroleum are subjected to GST. Okay, so what is the total petroleum? What is the total petroleum or whatever? Any petroleum, mineral, whatever I am exploring, natural gas, whatever I am exploring, what is my total exploration? I subtract the cost petroleum from it and I get the profit petroleum. Now, whatever government is taking from this profit petroleum, it is exempt from GST. So your next question would be, what about the remaining portion which not government is taking? That would be a normal supply under GST. So the total contracted extraction minus cost petroleum. Cost petroleum is nothing. No GST on cost petroleum. Whatever is left, known as profit petroleum. Now the government takes certain share of profit petroleum, which is exempt from GST. The remaining petroleum that I am selling to the local normal people, now if they are covered in HMNAP, if it is covered in HMNAP, then no GST. If other than HMNAP, then normal, it would be a normal sale, GST would be levied. Understood? Financial transactions, I've already taught you that for forwards and futures, if it is net settlement, then no GST. But if it is delivery settlement of commodity futures, then it will be liable to GST. Security lending fees. Now we understand that today if I want to sell a particular share, there is no need that I should be the owner of those shares. I can any day borrow shares under security lending scheme, short sell them, and then again purchase the shares and give it back to the original lender. So here they are saying that lending is not disposing. See, we know that sale and purchase of securities is outside the purview of GST. Why? Because securities are neither goods nor services. But facilitating transactions in securities are leviable to GST. So here they are saying that whatever fees the lender is charging from the borrower, whatever fees, lending fees, the lender is charging from borrower would be subject to GST. And also any commission being charged by this approved intermediary, that commission will also be leviable to GST. Priority sector lending certificates are goods, not services, taxable at 12%. Always consider them as IGST, taxable under RCM. There's nothing much important here. Just have to remember that PSL, this is just a circular saying that priority sector lending certificates are not services, they are goods, 12%, IGST, always RCM. Now for joint venture, if any direct cash call is given, so this is joint venture. Let's say we have 3 members, member A, member B, and member C. So here, obviously, these persons would be giving some cash contribution, some capital contribution to this joint venture. So this is a mere transaction in money. Why? Because I have money, I am giving that money to joint venture. So cash call, any capital contribution by members of JV to JV is a mere transaction in money. Therefore, not taxable, no GST. Why? Because money is neither goods nor services. But let's say these 2 members give money to member B, an operating member. This member B uses own machinery to supply services to joint venture. In that case, it would be a taxable supply. Why? Because B is giving services to other members and to joint venture also. But if this contribution is given to operating member who uses own machinery and is providing services to JV and other members for consideration, then it will be a taxable supply. Then liquidated damages, we understand, agreeing to refrain from an act, to do an act, or to tolerate an act. It is all supply of service covered under Schedule 2. But there are 2 conditions. There has to be a contract. There has to be a contract and there has to be a consideration. So today, let's say you say, ma'am, I want to teach GST. You've cleared CA and you decide that you want to teach IDT. I tell you, please do not increase the competition. You keep 10 lakh rupees, you go get a job and do not enter teaching. Means it is a non-complete contract. You are agreeing to not teach. You are agreeing to refrain from a particular act, and we have a contract. Contract may be express or implied, and I am giving you some consideration. It will be treated as supply of service. Then let's say, normally any hawker cannot come in front of a shop and start selling. So let's say there's a shopkeeper who is allowing the hawker to operate for a monthly payment. So there's a pani puri stall, pani puri, puchka, golgappa, whatever you call it. There's a pani puri stall in front of my shop. I say, okay, I will tolerate. I will tolerate you to keep your pani puri shop here. I am allowing you, I am tolerating, but you pay me 10,000 rupees per month. So I am tolerating your act for a consideration. Or you are simply agreeing to do any act. So there is no legal obligation on you, let's say, to install a zero emission equipment. But the neighbors come to you. The neighbors of the industry come to the industry owner saying that our kids play here, their health might get affected. We know that the emission is under government rules, but still please install equipment. We will give you consideration. So here industry agrees to install zero emission equipment, even though there was no legal requirement. Again, a sum paid by the neighbors. So again here there is a contract and there is a consideration, means it will be treated as supply of service. Understood? But simply paying for someone's injury. Paying for someone's injury is not taxable. So taxability of some transactions in this regard, when amount is paid only to compensate for injury. Say for example, today you pirate my lectures. You pirate my lectures and in an unauthorized way you sell the lectures to people. I get to know it later. Obviously, because you sold those pirated lectures, I suffered some loss of revenue. So you are only compensating my loss of revenue. You are only compensating my injury. I never contracted with you. Because I suffered injury, I took consideration from you. But was there ever a contract? Did I ever tell you to pirate my lectures? Either express or implied? No, there was never a contract, even express or implied. There's only consideration, means condition 1 is not fulfilled, and hence it will not be treated as supply of service. Then you cannot say that ma'am tolerated the act. You cannot say that ma'am tolerated the act of us pirating. No, I did not tolerate, because I suffered injury. Therefore, I had to take compensation from you, and this will not be taxable. Why? Because this is not a supply only. So there are these examples given. I would highly recommend you to read and to remember these examples. High chances that if any question comes from this point in exam, it will come out of these examples only. These things are supply and these things are not supply. Make sure to just read once the examples. Similarly, any check, dishonor, fine or penalty. No person ever agrees under a contract that you bounce the check, you dishonor the check, you bounce the check, you dishonor the check, and we want to receive. Why? Just because we want to receive check dishonor fees. No, every person would always want the check to get honored, and therefore the check dishonor fees is not taxable. Any law, if you violate today, so today if you violate red light, is government saying that we will tolerate your act of violating red light against fine? No. Government has put fine so that people do not violate the red light signals. That's why. So any traffic pollution violation that you are doing, there is no contract on the side of government. So all of these examples you can just simply self-read once. Understood. Now, interstate movement of various modes of conveyance. So here, let's say between two distinct persons, I have a shop in Ahmedabad, I have another shop in Mumbai. One shop in Ahmedabad and one shop in Mumbai. Now there is in Mumbai go down, I have a lot of goods lying, but I have a shortage in Ahmedabad. So what I do, I send a truck. I send a truck which goes to Mumbai go down, gets goods and comes back. Now in this case, when a conveyance can be anything. Conveyance can be train, bus, truck, tanker, trailer, vessel, container, aircraft, anything. Simply going interstate between distinct person, it will not become supply. See, we have studied schedule 1. Which says that any supply for business purpose between related person or distinct person would be supply. So in this case, every time a truck goes from one distinct person to another, you cannot levy GST on that truck amount, right? So they've given this clarification saying that it will neither be treated as supply of goods nor supply of service. So simply the movement of conveyance between two distinct persons is not a supply. Also, carrying other than C, for carrying passengers, goods or both, or for repairs and maintenance purpose. See, understand why my truck is going, why my conveyance is going, because to carry passengers or goods means to bring certain goods or to carry passengers, let's say a bus which normally runs to carry passengers. So carrying passengers, goods or both, or for repairs, maintenance purpose. So there was let's say the engine of my truck failed and there is no mechanic in entire Ahmedabad who can fix it. Hence, I had to send it to my distinct person in Mumbai to get it repaired. So my truck is going either for transportation purpose of goods or passengers or for repair purpose. So in that case, they are saying no GST will be levied. But if the truck is to be further supplied, so from Ahmedabad branch, I send my truck to Mumbai. Why? Because they will further sell it. They will further supply it. Now in this case, my truck is as such essentially a goods only for us. It is our stock because I am sending that truck for sale. So it is a kind of stock only. Then it would be treated as supply. So except in cases where such movement is for further supply, that would be supply. Other than that, simply for repair purpose, for transportation purpose, if my conveyance is going, it will neither be supply of goods nor supply of service and no GST would be levied on it. This same circular applies to if I send any rigs, tools, spares, any of the crane or any other thing which is on wheels. So all of these provisions applies mutatis mutandis. Mutatis mutandis means as it is. Mutatis mutandis means as it is. So today if I send any rigs, tools, spares to my distinct person interstate, no GST would be levied on it. Right. And for a supply to be leviable under GST, two conditions need to be satisfied. Supply has to be made by taxable person, means if I am unregistered person and I sell something, no GST, I have to be a taxable person, a registered person, or a person liable to get registration. And the goods or services also have to be taxable. Now understand, I have a grocery shop, and I am registered, but I supply milk. Now milk in itself is not taxable, so no GST would be levied on it. So two conditions we need to satisfy. Supplier has to be taxable and also the goods or services has to be taxable so that we can levy GST. So simply we understand, if two unregistered persons, so you give a chocolate to your friend, is GST being levied? No, because both of you are not taxable person. Chocolate is a taxable goods, but supplier, recipient both are not taxable. See, the condition of being taxable is anyways on the supplier only. Recipient might be registered or unregistered. Today you go to buy a mobile, right? The shopkeeper is registered, hence GST is charged on mobile. You are unregistered only. So recipient can be registered or unregistered. The supply has to be made by a taxable person and supply in itself has to be taxable. If both conditions are satisfied, then we levy GST on the same. Supply between two non-taxable person would never attract GST. Quickly tell me yes or no, everyone. Chalo. Everyone in the comment section, if you haven't liked the video yet, quickly like the video and give me a thumbs up, heart, fire emojis. Yes, everything is clear, understanding, remembering and enjoying. Yes, ma'am. Done. Sure. Now let's start with composite and mixed supply. So we winded up. S for 7, S for supply. S for 7, S for supply, section 7, scope of supply. Now next section which says that 2 zeros. See how you used to write 8 when you were small. Now we write 8 like this. Earlier we used to write 8 like this. So 2 zeros when I mix. 2 zeros when I mix, they become 8. Therefore section 8. Mix, composite and mix supply. How to remember? 2 zeros getting mixed. 2 zeros getting mixed is an 8. Therefore section 8 is composite and mix supply. What simple chapter it is, saying that whenever two or more goods or services are bundled, say for example I supply a hamper which is worth 10,000 rupees. Now this hamper has a nail paint, this hamper has a perfume, then this hamper has a lipstick, or let's say there are some flowers. So this hamper worth 10,000 rupees having multiple products in it supplied for a single price. Now the rate of GST on nail paint can be separate, on perfume can be separate, on flowers can be separate. Certain goods may be exempted also in this particular hamper. And I do not know the individual prices of them because I am supplying all of them for a single price. In this case, GST will be levied on what percentage is the question. So here we understand two types of supplies, one composite and one mix. Now see, section 8 we understood is composite mix supply. Now 8A is composite supply and 8B is mix supply. Now composite supply says that whenever the supplies that I am mixing, so any supply made by a taxable person comprising of two or more taxable supplies. Now, if they are naturally bundled, supplied in conjunction with each other in ordinary course of business, and one of them is a principal supply. Say for example, today if I buy a laptop, I normally get a laptop bag free with laptop. Or let's say today if I buy a calculator, by default I will get one pair of cell in my calculator. Or if I buy a mobile, I get a charger alongside. So all of these are naturally bundled. Like majority of the people supply it that way only. In that case, and one of them is a principal supply. Now, do you buy laptop for laptop bag or you buy laptop bag for laptop? We buy laptop and it is okay, laptop bag is secondary. So one is the principal supply out of both of them. So the entire bundle, the entire composite supply is chargeable at the supply which is of the principal rate. See, understand what is principal supply? It is the predominant element. The ancillary or the secondary supply is just so that we can enjoy the principal supply in a better way. Large number of customers have such perception only. So today, large number of people have this perception that, okay, if I buy a phone, I will be getting a charger free with it. Some companies might be exception. Or let's say if I buy a television, normally all the television providers gives a 1 year free warranty with the television. So large number of customers and recipients have this perception, and also many suppliers are supplying similar bundle. They are normally advertised together only, and the ancillary supply would help me enjoy the principal supply better. I call it that they are all ordinarily bundled in natural course of business. Example, television with warranty, travel ticket with food, stay in hotel with breakfast, or let's say laptop with laptop bag. All of these are composite supplies. And whatever is the principal rate of GST, principal rate of GST will be levied on the entire combo. Yes, everyone. Done. Understood. Sure. Now talking about some clarifications. See, understand. This is a printer. Ma'am, person, printer. Arey baba, person. Printer who prints, not talking about the goods wala printer. So here, and this is me. Sure. Let me draw me. Okay. So this is me. Now what I did, I sent a PDF to this printer saying that you print the IDT handwritten notes. So I sent the content. I sent the content to the printer. The printer printed the books and sent it to me. Now the printer essentially has given me two things. One, goods, means books. The physical books, the paper, which are books, which are goods. And second, I sent the PDF. He gave me printing service. He gave me printing service. And do we understand that this is naturally bundled in ordinary course of business? If you any day go to take any printing service, you would not take papers from your home normally, right? So you would be assuming that in normal course of business, a printer would be supplying printing service along with papers only. So we have two supplies here. One is goods supply. He has supplied me physical paper. And second, he has given me printing service, and I understand it is a composite service. The question is, what will be principal out of both of them? The printing of books would be principal, or giving the service would be principal. So here they are saying that if the content is primary, if the content is important, say today, if you purchase the handwritten notes, will you be more concerned about the quality of the pages? Is it the quality of the pages that matters to you, or is it the content that matters to you? It is the content that matters to you. Therefore, printing service becomes important, and quality of papers can be little 19 sikke as we call in Hindi, that would be fine. So here, when the content is primary, means when I get books, pamphlets, reports, brochures printed, in that case, I will treat it as supply of service, and whatever is the service rate will be applicable to the entire combo. But if let's say I get an envelope printed, so along with the books that are dispatched to you, there are some tissue papers and envelopes given where we have this logo. We have this logo on the envelope. Now in that case, will you be ever concerned about the logo? I have only given the logo to my printer, means the content which has to be printed on the tissue paper is given by me only. But would that be relevant, or would the quality of envelope or tissue paper be more relevant to you? It would be quality. Today, if you go to a restaurant, do you ever take this 1 second to pick up the tissue paper and see the logo on the tissue paper? No, you just use the tissue paper, use it and throw it away. You are concerned with the quality of the tissue paper. Now, in that case, again, I have given the logo. I have given the logo to printer. Again, printer has given me two services. One of giving me tissue paper, another of printing logo on that tissue paper. But now here goods becomes primary, and the rate on goods will be applicable on entire transaction. So if content is primary, treat everything as service. If content is not primary, let's say envelopes, logos, tissues, everything where design and everything is ancillary, but physical goods are important, that would be supply of goods. Understood? Yes. Sure. Bus bodybuilding, in each case. Retreading of tires, if the tire is of recipient, then service. If the tire is of supplier, then goods. This is all about composite supply. Then section 8b talking about mixed supply. So anything that is supplied for a single price and it is not a composite supply. So not composite supply means not naturally bundled. They can be independently supplied of each other. Both of them are important. Then we call it as mixed supply. And here, whatever is the supply attracting highest rate in the combo, whatever is the supply attracting highest rate in the combo, that rate will be levied to the entire combo. Say for example, I make a hamper of perfume, cosmetics and chocolates. What is the highest rate amongst, let's say, perfume 12%, cosmetics 18% and chocolate, let's say chocolate again, let's say 5%. So what is the highest rate? It is 18. So on entire single price, 18% GST will be levied. Understood? Or let's say there's this complex where the ground floor is a commercial property and the first floor is, let's say, residential property. I hire both of them together. Now let's say the rate on commercial complex is 18%, but residential property is exempt, but I give them on a single price under a single contract. See, I had this option. I could have made two separate contracts. In that case, this would be exempt and this would be 18%. But I decided to supply it for a single price. It is not in natural course of business. Therefore, it is a mixed supply. So even if this is normally exempt, still entire thing would be chargeable at 18% only, because the supply attracting highest rate is 18%. And if everything is billed separately, if you go to a mall, right, you purchase let's say 10-15 types of products, there's a single bill, but in the bill they have given breakup of every single item, means they are not charging one price for everything that you have bought. The invoice would indicate independent supplies and independent rates applicable to independent supplies, and in this case, whatever will be the respective applicable rate on each particular goods or services will become applicable. Yes, everyone. So we have completed section 7, S per supply, S per 7, S per supply, S per 7, S per supply, section 7, scope of supply. Two zeros getting mixed. Two zeros getting mixed becomes 8, section 8A, composite supply, and section 8B, mixed supply. Clear, everyone? Yes, done. Sure. Quickly take a small 2-3 minutes break and then we start with next chapter, which is charge of GST. Again, charge of GST, we all know, is a category important chapter because we have RCM provisions here. So we are going to take little time and get things clarified here itself only. So take a 2 minutes break and then we start with charge of GST. Sure. Yes, thank you everyone for the Teachers' Day wishes. It is my first Teachers' Day as a teacher because I started teaching in 2022 December. December 13, 2022 was my first YouTube video. So yes, it is the first Teachers' Day as teacher and it feels great. Thank you all for being the most amazing students. Chalo, have some water, eat something if you want. 1-2 minutes, we take a small pause and then we begin with charge of GST. Subscribe the channel if you haven't already. Like the video if you haven't already. Yes. Chalo, back everyone. Energized, pumped up. Quickly, quickly, quickly. Everyone in the comment section, you have to stay active, all of you. Yes. Priya, Vijay, Ayush, Sandeep, Rahul, Rakesh, everyone. Yes, ma'am. Sure. So let's start with charge of GST. Now section 7, section 8 we've completed, starting with section 9. Before that, what is India? What do we mean by India? So we call land, water and air. The land mass of India under Article 1 of Constitution, water, the territorial waters of India, and the airspace above the land territory and the territorial waters of India is considered as India only. So 12 nautical miles from baseline. 12 nautical miles from baseline is India, territorial waters of India. After that also, till 200 nautical miles, we call it Indian waters. Means if any vessel enters here, the officers of India have the power to stop the vessel to investigate and everything. But till 12 nautical miles, it is complete India, territorial waters of India. And here, only the designated areas of exclusive economic zone, where let's say oil exploration and certain things, activities are carried out, these designated areas under exclusive economic zone are considered as India. Done. Now section 7 of IGST Act. As I've already told you, that all the matters dealing with interstate supply, dealing with place of supply are dealt with Parliament only. Parliament means it is all covered under IGST Act, not under C or SGST Act. So now see, unless otherwise I mention, in entire GST we are always studying CGST Act only. Only section 7 till section 13 of IGST Act we are going to cover in the syllabus. Section 7, 8, 9, 10, 11, 12 and 13. 7 sections of IGST Act that you need to remember. Other than that, all the section, unless I otherwise mention, all the sections would always be of CGST Act. So S for 7, S for supply of CGST Act. Section 8, composite mix supply of CGST Act. Now let's once see 3 sections of IGST Act, because they explain us what is interstate supply, what is intrastate supply and territorial waters of India supply. See, interstate extremely simple. If the location of supply and place of supply, location of supply and place of supply are in 2 separate states or union territories, or 2 separate states or 2 separate union territories, means let's say if I say Maharashtra, Gujarat, means 2 states, or if I say Maharashtra, Chandigarh, 1 state, 1 UT, or 2 different UTs, whatever it is, it would be considered as interstate supply. What 2 things you have to see? Location of supplier and place of supply. Location of supplier and place of supply. If in 2 different states, 2 different UT, or 1 state, 1 UT, it will be considered as interstate supply. Means IGST is charged on all interstate supply, and C plus S or C plus UT GST are charged on intrastate supply. Then import, be it import of goods or import of service, always interstate. Also export. Now we do not use the word export, we say location of supplier in India, place of supply outside India. So we understand supplier is in India, place of supply outside India means it is simply export of goods. So be it import of goods or service, or be it export of goods or service, everything is considered always as intrastate only. IGST is only being levied. Also, any supplied to or any supplied by S is a unit or developer. So in India only, if I supply anything to S is a unit developer, or if I take any supply from S is a unit or developer, it will always be considered as interstate only. And there is one residuary entry saying that we are never going to leave the taxes. Means if anything is determined to be a supply in taxable territory, it is not falling elsewhere, not getting covered in intrastate or not falling elsewhere, we will automatically cover it under interstate supply residuary entry, and we will charge IGST on the same. So any activity taking place in taxable territory not being intrastate supply and not covered elsewhere will automatically become interstate supply. See, this is all inter-CA level things. You, even if I do not teach you, you understand that what is interstate, what is intrastate, but still it is in syllabus, and I want the marathon to be extremely exhaustive. Therefore, I am trying to cover maximum possible things. So location of supplier, place of supply. 2 different states, 2 different UTs, or 1 state, 1 UT becomes interstate. Import, export and S is a unit, always interstate. Then talking about intrastate, simple if location of supplier and place of supply are in same state UT. Location of supplier, place of supply are in same state, same UT. We call it as intrastate supply. Again, import, export, or let's say SEZ unit developer or supplies made to tourist under section 15. It is always interstate. Other than that, if same state, same UT, we call it as intrastate supply and we levy C plus SGST. Now, it might be possible that the SEZ unit in the same state. So, Gujarat. From Gujarat only I am supplying to SEZ unit in Gujarat. But still it will be considered as interstate. Why? Because of this exception and this specific coverage here. That SEZ unit might be in same state, separate state, but it will always be covered under interstate and IGST will always be levied. Right. Now, so first of all, understand this thing that always location of supplier and place of supply. These two things are important. Location of supplier and place of supply. Location of recipient is not relevant to determine whether it is interstate supply or intrastate supply. You see location of supplier and you see place of supply. Location of recipient is irrelevant to determine whether it is interstate supply or intrastate supply. Right. Then section 9 says that territorial waters of India. Section 9 simply says that, see, this is India's baseline. Oops. This is baseline. Till 12 nautical miles, we know that there is territorial waters of India. So, if location of supplier or place of supply, any of the two, location of supplier or place of supply, any of the two is in territorial waters of India, we assume it to be on the nearest coastal state on the baseline. See, after this we have EEZ. Now, exclusive economic zone is in itself a union territory. So, when we study the list of union territories, exclusive economic zone is in itself a union territory, a separate union territory. That is not an issue. What to do of the territorial waters of India? So, your government has said that either location of supplier or place of supply, any of the two is in territorial waters of India, you assume it to be located on the nearest coastal state on the baseline, and then you decide whether it is intrastate or interstate. So, Section 9 of IGST Act says that location of supplier in territorial waters or place of supply in territorial waters, you assume it to be located at the nearest coastal state or UT. Understood. So, location of recipient is never relevant, place of supply is relevant, and who is this tourist coming to India for legitimate non-immigrant purpose, not more than 6 months. If any supply made to these foreign tourists, even if intrastate, you still treat it as interstate only. Done. Now, starting with section 9 of CGST Act, corresponding section 5 of IGST Act, but it is okay if you do not remember section 5. You remember section 9 of CGST Act because it is charging section of GST. So, first of all, 9.1 and corresponding 5.1 under IGST Act talks about normal levy. So, they are saying that we will levy GST. If intrastate, C plus S. If interstate, IGST. So, GST will be levied on what? On supply. Because supply is a taxable event. Supply of what? Supply of goods, services or both. So, GST shall be levied on supply of goods, services or both. GST will be collected by taxable person in whatever manner prescribed. Three things important. Except alcoholic liquor for human consumption. As I had said that it is written in Act only, where in section 5.1, in section 9.1, in Act itself they have mentioned that we are never going to levy GST on alcoholic liquor for human consumption. Now, how do we get amount of GST? So, say for example, I sell you 100 rupees worth of goods taxable at 12% rate of tax, means 12 rupees is the GST amount. So, how do we get the amount of GST? By multiplying value into rate of tax, right? If I know the value of supply and I know rate of tax, I can derive the amount of GST. So, here, how to determine the value? Whatever value we study under section 15 of value of supply chapter, and rate as per the HSN code, as per the harmonized system of nomenclature and the scheme of classification for services. HSN is for goods, scheme of classification for services. So, for every single goods or service, government has notified a rate on recommendation of council. Now, that rate can maximum go till 40% under IGST and 20% under CGST. Why? Because plus 20 would also be levied under SGST, which will in aggregate become 40%. So, government has power to levy maximum GST up to 40%, but today on this date, government has maximum levied 28% only. It still has the power to take this rate till 40% for any particular goods or service, but presently, practically only 28% is the maximum cap which is applicable now. So 9(1) simple, levy GST on all supplies except alcoholic liquor. What value? Section 15. What rate? Whatever government notifies, it can maximum go to 40%. I request all of you to stay active in the chat section. If I start section 9(1), whatever you remember about section 9(1), you have to write in the chat section. Stay active, or at least sit with a rough page so that you can keep scribbling things. All of your senses have to be active. You are watching the video, you are listening to my voice, you are writing, you are speaking out things loud, means there is no way you can get distracted. All of your senses have to be involved. By end of this marathon, you should be extremely exhausted, like you've done what work entire day. Then you can call that yes, actually actively you have attended the marathon. So make sure to engage all of your senses for better active learning. This is normal levy. Now we understand that high-speed diesel, motor spirit, natural gas, aviation turbine fuel and petroleum crude. GST on all of these products not levied today will be levied from a future date on recommendation of council. Then RCM. Okay, most important, reverse charge mechanism. So to understand reverse charge mechanism, first of all we need to understand what is forward charge mechanism. Then see how normally GST works. So this is a supplier. Let's say Priya. Okay. So we have Priya here. Priya is a supplier supplying goods to, let's say, Parvati. Okay. This is Parvati. So Priya is a supplier because Priya is supplying goods. Parvati is a recipient. Why? Because Parvati would be paying consideration. Now this consideration would include two things. One, the taxable value of the goods, and another, the GST on the same, right? So if Priya is selling goods worth 1,000 rupees to Parvati, on which 18% GST is being levied, therefore 1,000 plus 18%, 1180 would be the total amount, the total consideration collected by Priya from Parvati. What Priya will do? Priya will keep 1,000 in her own pocket and pay 180 to government. So she would collect 1180 from Parvati and keep 1,000 in her own pocket and pay 180 to government. This is known as forward charge mechanism, where the recipient pays the tax to supplier and supplier pays the tax to government. Normally how indirect taxes work. But under reverse charge mechanism, let's say we have Divya. We have Divya here and we have Rahul. Now here Divya is supplying certain goods or services to Rahul, again worth 1,000, which are leviable at 18% rate. Now here when Rahul pays consideration to Divya, Rahul would only pay 1,000 to Divya, which Divya will keep in her own pocket, and the 180 tax Rahul will directly pay to government. See, understand, in both of the cases ultimately 1180 goes out of recipient's pocket, 1,000 stays in the supplier's pocket, and 180 goes with government. This thing will happen here also. See, 1,000 goes in Divya's pocket, 180 goes to government, and total 1180 comes out of Rahul's pocket. So no one will be in a beneficial position. The amounts will remain same with everyone. It's just about the compliance. So in forward charge, tax collected by supplier then paid to government, but always it will be out of the pocket of recipient only. In reverse charge mechanism, this tax is directly paid by recipient to the government. Understood? This is known as reverse charge mechanism, RCM. Now government has notified certain goods and services on which RCM has to be levied. Means the recipient will automatically directly go and pay tax to government, will not give that tax to supplier. Now the goods notified under RCM are not applicable for our examination purpose. We only are concerned with list of services, that what services are leviable under reverse charge mechanism. So let's just quickly see the entire list of services which is leviable under reverse charge mechanism. Okay, so first is goods transport agency. Now first of all here you write any individual truck owner would not be covered here. Any lorry person would not be considered here. We are talking about goods transport agency. We are specifically talking about a goods transport agency. It's supplying transportation service by road. In this case, you have to ask 5 questions. You have to ask 5 questions. What are the 5 questions here? Question number 1. Is the GTA registered? Question number 1. Is the GTA registered? If answer is no, okay, wait. We'll see what to do. If the answer is yes, come to next question. Has the GTA opted the option for forward charge mechanism? Now here goods transport agency has two options. Either it can opt for reverse charge mechanism or it can opt for forward charge mechanism after taking registration. These are two main questions. These are two main questions which normally in exam you are going to see. If no information is given with respect to the remaining 3 questions, you will assume the answer to be yes. So the two most important conditions for examination point of view would be these 2 questions. Is GTA registered? Yes or no? If registered, has it opted the option for forward charge mechanism? These 2 questions practically relevant for exam. Remaining 3 says that the GTA is issuing invoice, collecting tax from the recipient and has given declaration in annexure 3. So remaining 3 questions are very much simple. Is the GTA issuing invoice? See, in exam we will always assume that okay, invoice would have been issued, applicable taxes would have been collected and the declaration would also have been given in the annexure. So these 3 questions are not that much relevant, but there are total 5 questions. Most important questions would be, is the GTA registered and has it opted for the option of forward charge mechanism? If the answer to all of your questions is yes, if the answer to all the questions is yes, means yes, GTA is registered, opted the option for forward charge mechanism, issuing invoice, collecting taxes. Now forward charge means he would be collecting tax from recipient and paying to government, and whatever declaration is required is also being given in annexure 3. If yes, then you have to see who is the recipient. If recipient is a specified recipient, who are specified recipient? Wait for 2 minutes. If recipient is a specified recipient, then forward charge mechanism means supplier, the GTA would be liable to collect tax from recipient and pay it to government. But if the answer to any of the question is no, means let's say GTA is not registered, or let's say GTA is registered but has not opted for the forward charge mechanism option. In this case, again you ask who is the recipient. If recipient is one of the specified recipients, again, then reverse charge mechanism would be applicable. Means one thing we understand, if the recipient is a specified recipient, then tax will always be levied. One thing we understood, that if recipient is specified recipient, tax will always be levied. If the answer to my above questions is yes, then forward charge. No, then reverse charge. But no one can save specified recipient from not paying the taxes. Means taxes will always be collected from the specified recipient. If the GTA is registered opting for forward charge, then forward charge. If no, then under reverse charge also these specified people will have to pay tax to government. But if the recipient is any other recipient, let's say you are an unregistered individual, you want to send a gift to your long distance relationship girlfriend and you are taking the services of a goods transport agency. You are not specified person. In this case, you are least concerned with the answer to this question is yes or no, because for you transportation will always be exempt. So one thing we understood, that for us to levy taxes on GTA services, recipient has to be specified recipient. Otherwise than that, anyways exemption is given. Now, specified recipient under FCM or RCM, for that you need to ask these questions, right? Now, who are specified recipient? So we have a simple trick to remember. It is CF scrub. It is CF scrub. So if I am a cooperative society, factory, society, I understand all of these have to be registered. Means the cooperative society under any act. Factory under Factories Act, Society under Societies Act. Then C, casual taxable person, CTP, are any registered person. This is a very broad point, saying that if I am any registered person, I am already a registered person under GST, means I become a specified person, and for all GTA transaction, I will pay tax. If GTA is registered forward charge, then I will pay tax to GTA. GTA will pay to government. But if GTA is unregistered, or let's say GTA has not opted FCM option, then under RCM also, I will be required to pay. U means any registered or unregistered partnership firm. B means any body corporate established under any law. So body corporate, let's say established under Companies Act. So all of these people are specified recipients. Quickly in the comment section, everyone who are specified recipients, we have CF scrub. Now see, understand, it might be a case where an unregistered GTA has given transportation service to a factory. which is established under Factories Act, but it is not registered under GST. Still RCM will be applicable? Yes, RCM will be applicable. We study section 24 under registration, saying that if a person is receiving inward supply on which there is RCM liability, then compulsory now first this factory will have to get registered in GST, then discharge the RCM liability under GTA service. Why? Because factory has become a specified person, and as I said, tax will always be levied from specified person. Because GTA is unregistered, under RCM we will tell the factory to pay taxes. But here had GTA been registered, collecting under forward charge, then it would collect from the factory and pay it to government. Everyone who are the specified recipient who will always pay tax under GTA services, they are CF scrub. Cooperative society, factory society, casual taxable person, registered, unregistered partnership and body corporates. Understood. Now, along with these other recipients, you write plus 3 people, plus 3 TDS people under section 51. So these 3 people, department, establishment of CGST duty, local authority, government agency, who have taken registration only for the purpose of TDS under section 51, not their normal registration, their specific exclusive registration for TDS purpose. If there is these 3 people, then we consider them with other recipient and we give them exemption. See, as such, if you see, they become registered. Why? Because they have taken registration, be it only for TDS purpose, but they are registered. Still, government is saying that we give them exemption with other recipients here. Right. Who is recipient of GTA service? Very much simple. Any person who is liable to pay the freight. Any person who is liable to pay the freight, be it consignor, consignee, becomes the recipient to the GTA service. Okay. Now this thing is only for information purpose. Whenever there is RCM, so whenever the specified person is paying tax under RCM, it would be 5%. For GTA, we have 2 options. Now GTA can opt for FCM, right? Now if GTA opts for FCM, he can decide to collect tax from recipient at 12% also or at 5% also. But if tax is collected at 5%, ITC becomes restricted. 12%, you get free ITC. So RCM, there is no choice. RCM would always be 5%. But then after this amendment of May 23 examination, earlier it was RCM 5%, FCM 12%. But after amendment, it is now RCM 5%. But FCM GTA has an option to either go for 12% or 5%, and this question will always mention. So do not worry about it. Understood. Then second, we talk about legal services. What are legal services? Any advice, consultancy, assistance in any branch of law. Now understand, today me being a chartered accountant can give you any consultancy with respect to direct taxes or indirect taxes or any company law also. So I can also give you legal services, but I am not an advocate. This particular entry is only for legal services given by advocate, be it an individual advocate or a firm of advocate. So here we are saying that legal services specifically by advocate. See, question can give you legal services given by a consultant, chartered accountant, cost accountant, CMA. You can just simply write here that CA or a consultant or a CS or a CMA will not be covered here. Only and only legal services given by individual advocate or firm of advocate will be covered here. If they are giving legal services to another advocate, another firm of advocate, CGST, UTLA, government agency, government establishment, or any person other than business entity, it is all exempt, because understand, justice is our natural right. We are going to lawyer for justice. It is our natural right. So person other than business entity, say for example, we have Ayush here, Ayush Lunawat. So Ayush is going to an individual advocate to get married or to get divorce done. Ayush is not a business entity normally going to get court marriage done or to get divorce papers filed. In that case, whatever consideration advocate is charging from Ayush, it will be exempt under GST. Okay, but here ma'am, you covered person other than business entity. What if we are business entity in taxable territory? If we are a business entity, then you need to check what is your preceding financial year's turnover. If you are business entity, then you need to check what is your preceding financial year's turnover. If your turnover in preceding financial year was greater than the registration limit applicable to you, then whatever amount you've paid to your advocate, RCM will be applicable. Means you being a business entity will pay tax under reverse charge mechanism. And if the turnover. If the turnover was less than the threshold limit, then in that case, it will again become exempt. Okay, understood. So any legal service given by an individual advocate or a firm of advocate to business entity, if the threshold, if the turnover of business entity exceeded the threshold, then RCM, otherwise exempt, and given to any other person, any other advocate, firm of advocate, CGST, UT, LA, GA, GE, person within business entity, it will always be exempt. Okay. Now talking about senior advocates. Again, everything is same. Only one difference there is. See, normal advocate and senior advocate, there is only one difference. If a senior advocate also directly gives service to CGST, UT, LA, GA, GE, person other than business entity, exempt. Service to business entity, preceding financial year turnover greater than registration limit, RCM, otherwise exempt. Everything is same. One difference, see. What is the meaning of senior advocate? A senior advocate cannot file wakalat. Means a senior advocate directly cannot take up your case to represent you in the court. Then what this person does, once you become a senior advocate, other normal small advocates would come to you with their clients, that on their behalf you represent them in the court. Then you are known as a senior advocate. So here, whenever a senior advocate who is designated as a senior advocate by court gives service to an advocate with respect to representational service for some another underlying business entity, in that case the underlying business entity will pay 2 RCM. Once again, senior advocate, a normal advocate, and the business entity comes to this advocate comes to senior advocate, that you please represent my client. Consideration here, this underlying business entity will pay 2 RCM, one on this consideration and one on this consideration also. So here we are saying, for whenever representational service given to advocate, firm of advocate in relation to business entity, such business entity shall be liable to pay 2 RCM, one between the service of advocate and senior advocate, and another between the service of advocate and the underlying business entity. But if understand, there is no business entity, means a normal advocate goes to a senior advocate. See, if a normal advocate goes to a normal advocate, there is exemption. But if a normal advocate goes to senior advocate, see, there is no exemption. So a normal advocate going to a senior advocate for consultancy, for some advice, then RCM will be applicable. Means the individual small advocate going to the senior advocate, we will check turnover of this person. If the turnover is greater than the registration limit, then this small advocate will be required to pay tax under reverse charge mechanism for availing any advisory or consultancy legal service from senior advocate. So services by senior advocate to advocate or firm of advocate preceding financial year turnover greater than registration limit, then it is taxable under reverse charge mechanism. See, there is this one point. Say for example, my preceding financial year's turnover was 5 lakh rupees only, but I decided to take voluntary registration, right? I was not required to take registration, means my turnover was less than the registration limit, but I decided to take registration. Then I will get exemption. No RCM required to be paid. The condition is not whether you are registered or unregistered. The condition is your turnover. So even though you take voluntary registration, but your turnover was less than registration limit in preceding financial year, no RCM will be applicable. You will get exemption. Understood, Ayush? Done. Sure. So this was all about legal service. Then talking about arbitral tribunal. Again, everything same like advocate. Arbitral tribunal giving service to CGST, UTLA, government agency, establishment other than business entity, exempt. Business entity, you check preceding financial year turnover, exceeds, yes, RCM, no exemption. Same, everything like advocate only. Then services provided by way of sponsorship to any body, corporate or partnership firm. Now quickly tell me, let's say Navratri is coming. Now I stayed in Gujarat, Navratri is coming and we have this Garba event organized here. So let's say we have some Garba organizers who are organizing Garba. And there is this person, let's say there's Riddhi. I decide to sponsor the Garba event. So therefore, I sponsor Garba event. I am paying the sponsorship amount. Who is supplier? Who is recipient? Quickly, everyone. In this transaction of sponsorship service, tell me who is supplier? Garba organizers are supplier, recipient, or Riddhi is supplier, recipient? Quickly, everyone. We understand that Garba organizers are the suppliers. Why? Because Garba organizers are giving sponsorship service they are allowing me, Riddhi, to sponsor the event. Also, whenever you get stuck in deciding who is recipient, who is supplier, simply think from the viewpoint of consideration. The person who pays the consideration is always recipient. So Riddhi is paying the amount. If I am paying amount, I am recipient. What I am receiving against it are the sponsorship services. Means I am sponsoring event, means I am paying the amount and they are allowing me to sponsor. Therefore, they are suppliers and I am recipient. So here the RCM provision simply says that supplier can be any person. Supplier can be any person, any person. Means registered, unregistered, individual, body, corporate, partnership, any person supplier can be, no restriction. But if the recipient is a partnership firm or a body corporate, if the recipient is a partnership firm or body corporate, in that case RCM is applicable. Otherwise exempt, no. In GTA and legal services, otherwise you get exemption, but here otherwise it is taxable under forward charge mechanism. So see, IPL, giving sponsorship services. IPL can be any person. But if recipient is Riddhi Limited, means body corporate or partnership firm, then RCM. But Riddhi Baghmar being an individual, not body corporate, not partnership firm, then FCM will be applicable. Very good, everyone. Sure. Now next, services by CGST to business entity. Okay. Now here, all services given by government. All services given by government except four services of Pati. Now Pati in Hindi means husband. Pati in Hindi means husband. So here you leave Pati. Hi ma'am. What are you saying? Arey, just leave Pati. Now what to do of Pati? Where will Pati go? Do not worry, we will catch back with Pati in exemption chapter. So in charge chapter, while studying government entry, you leave Pati. What to do of Pati now? Do not worry, we will catch back Pati in exemption chapter. So leave husband as of now means all the services given by government to business entity. All the services given by government to business entity. Now there are some small exceptions that up to 5,000 rupees. Up to 5,000 rupees no consideration and up to 5,000 rupees exemption, all that we will study in exemption chapter. Here we are seeing general provisions of RCM. Saying that once you just leave Pati here, four services. P, services by Department of Post. A, aircraft vessel inside outside the presence of port airport. T, transportation of goods passengers, and I, renting of immovable property. So leave these four Pati services here. Understood, ma'am? Except this, any service given by government to business entity will be liable to pay tax under reverse charge mechanism. Right, now PAT we will see in exemption chapter. Let's see what will happen of I, immovable property. Now here we are saying that any immovable property rented by government to any registered person. See the difference here. This point was saying business entity. Now business entity can be any person. You might be registered, you might not be registered, but if you're a business entity, everyone covered here. Immovable property point specifically covers only and only registered person. So if I rent an immovable property, I means I being a government, CGST rents any immovable property to any registered person. If the consideration exceeds 5,000 rupees, this registered person will be required to pay RCM, will be required to pay tax under RCM, and up to 5,000 rupees it is exempt under GST. So we had left Pati in government to business entity. Out of Pati, we catched back with I here only. Now with PAT, we will catch back in the chapter of exemptions. Understood, everyone? Yes or no? Simply, business entities required to pay tax under reverse charge mechanism for government services. But what will happen of these four services? Now here it might be RCM also for certain cases, FCM also, or exemption also, whatever is going to happen, FCM or exemption or RCM, that we will see later in another entries. Understood? Yes, registration and composition scheme is also considered as registration only. So if you are a composition person who is availing an immovable property on rent from government, and if the consideration is greater than 5,000, you will be required to pay tax under reverse charge mechanism. Done, ma'am. Then renting of residential dwelling for residential purpose to any registered person. Now understand here, I have a shop named Riddhi Traders. I have a proprietorship firm named Riddhi Traders and I am registered under GST. Now today, if I take a residential dwelling for residential purpose, I take a house on rent to stay with my family. It is my individual thing. I am not taking that rent as my business expense. So this would be my P&L of Riddhi Traders. whatever rent I am paying is my personal rent. I am not taking that rent in my P&L as an expense. So there no GST would be levied. But let's say I have an employee. I have an employee in Riddhi Traders. Now this employee is from some another state. So I take a house on rent for my employee to stay. Now that is obviously my business related expense. So this rent of employee, I will be taking in my business expense. Now here government is saying, even though the employee is using that house for residential purpose, but you being a registered person paying rent will be required to pay tax under reverse charge mechanism on this particular rent. See, if the property is commercial, no problem, because normally rent of commercial properties are taxable under forward charge mechanism only. We are specifically talking about residential dwellings. Why? Because generally, if an unregistered person takes any property, any residential property on rent, it is exempt under GST. So here government is saying it is still exempt. But if taken by any registered person, the recipient is any registered person, let's say a company taking house for directors, a proprietorship firm taking house for its employees, in all of these cases, these rents, even though paid for residential houses, are taken as business expenses, and therefore you have to pay tax under reverse charge mechanism. Other than that, normally today also renting of residential dwelling for residential purpose, personal purpose, it is all exempt under GST. Done. Then any person, supplier can be any person, transferring development rights, floor space index or long-term lease in which you get the amount, let's say upfront or in parts, whatever it is, the promoter, the builder, the constructor would be required to pay tax under reverse charge mechanism. Any director supplying services to a company or a body corporate. Now see, director can be a whole-time director also. Means director can be in an employment contract with the company. If your TDS is deducted under section 192, 192 is a salary section under income tax, right? So your TDS is deducted under section 192 of Income Tax Act if you receive salary. So you being a director, if you receive salary where your TDS is deducted under 192, then it is not a supply only. Why? FB changes. So FB changes, we know that employer-employee, not a supply only. But if you receive any remuneration, any sitting fees, any professional fees where TDS is deducted under section 194J of Income Tax Act, then RCM will be applicable. Means whatever sitting fees company pays to director, deducting TDS under 194J, the company being recipient will only pay tax under reverse charge mechanism, because we understand a company would be having a lot of directors. So it would be better that we keep the compliances on company, because company would together pay RCM on all the directors, and let us not make the director liable to collect and pay tax to government. Understood? Sure. Next, again simple, an insurance company is a bigger person and it would be having hundreds and thousands of insurance agents. Let's not make agents liable. So insurance agent supplying agency service to insurance company being a recipient, be it life insurance, general insurance, will pay tax under reverse charge mechanism. We have recovery agents in banks, NBFCs, financial institutions. Again, these are bank would be a bigger person compared to the small recovery agents. Let's make bank and insurance companies only liable for their insurance agents and recovery agents to pay tax under reverse charge mechanism. Then today, let's say you write songs. You are a lyricist, you write songs, or let's say you've composed some music, you've sang something, you've painted a painting, anything like that. So you're a music composer, photographer, artist, where you have your original work and you are giving the right of that particular work to some music company, producer, or any other person like that. In that case, the music company, the producer who is using your original work, you are giving them copyright, they are using your original work, these people will be required to pay tax under reverse charge mechanism. But specifically for author, if an author gives rights to publisher, for the original literary work, still RCM is applicable. Means it is just like this only. You compose a music, you give to music company, RCM. You write something, you give the rights to publisher, RCM. But specifically only for author, we have given an option to author that if author wants to take registration, just like GTA, we have given option to author that if author wants to take registration in GST, author can collect tax under forward charge mechanism and pay to government. Hiccups. कौन याद कर रहा है? Sure. So here, author permitting use or enjoyment of copyright. Now, author, just like GTA, has an option. If wants to take registration, collect in the forward charge and pay it to government. Why would an author ever do that? Because if you make supplies which are taxable in reverse charge mechanism, your ITC is blocked. But if I collect tax under forward charge mechanism, I can get ITC. So if author wants ITC on certain inputs, he would be willing to take registration and collect and pay tax under FCM. But once the author exercises the option of this forward charge mechanism, he cannot go back to RCM option for 1 year. Means there is this 1 year lock-in. Yes, guys. So there is this 1 year lock-in period. There is this 1 year lock-in period that if you as an author take FCM option for once, at least 1 year you have to continue. Then you can again go back to RCM option. Members of overseeing committee giving service to RBI. Then DSAs. Who are these DSAs? Direct selling agents. So banks and NBFCs have a lot of products. Now these DSAs, direct selling agents, advertise these products, try to explain to people about these products and sell these products. So we call them direct selling agent. Now understand here, if you are individual direct selling agent, this thing was, I guess, in RTP or MTP of May 23 only. Yes, this was an RTP or MTP of May 23 only. So it is kind of relevant also. Not a recent amendment, but tested in examination in every 3, 4, 5 attempts. So if individual direct selling agent gives service to banking or NBFC, then RCM is applicable. What if direct selling agent is not individual? Means direct selling agent might be a partnership firm, might be a company. In that case, no exemption. It would be taxable under forward charge mechanism. So if I am an individual DSA giving service to banking company or NBFC, then this banking company, NBFC being recipient, will pay tax to government. If I am, let's say, a body corporate direct selling agent giving service, then I have to collect tax under forward charge mechanism and pay it to government. Do not get over emotional in exam just by seeing DSA. Hey, DSA RCM, hey, DSA RCM. No, you have to see whether DSA is individual or body corporate or partnership firm. Only if DSA is individual, then RCM. Otherwise, in all cases, it would be FCM. Right. Now, point 12 and 3 together. Point 12 and 3 together. See here. We have agent of business facilitator and we have bank here. Now, business facilitator being a supplier gives service to bank. Bank is a recipient. Understood. Agent of business facilitator being a supplier gives service to business facilitator being a recipient. Now all the girls in the comment section here, all the girls watching live, one golden life lesson I am giving you today. A BF would never take responsibility. A BF would never take responsibility means what? When BF is supplying to bank, BF will say, A bank, you being a recipient, pay tax under reverse charge mechanism. BF does not want to collect and pay to government. BF will say, bank, you only pay to government under reverse charge mechanism. When the agent of business facilitator gives supply to business facilitator says, A, you being a supplier, collect and pay to government under forward charge mechanism. Means a BF in life is never going to take any responsibility. Where BF is supplier, he will tell recipient to pay under reverse charge. When BF is recipient, he will tell supplier to pay under forward charge mechanism only. And exact opposite is the case of business correspondent. Now here I will not use short form. So a business correspondent is exact opposite case of business facilitator. So when this business correspondent always takes responsibility. So when business correspondent is supplier and bank is recipient, it will say, oh, I am supplier, I will pay under forward charge mechanism. And when agent of business correspondent gives service to business correspondent will say, hey, I am recipient, I will pay under reverse charge mechanism. So a simple trick to remember, a business facilitator would never take responsibility. Means when he is supplier, reverse charge. When he is recipient, forward charge. But a business correspondent would always take responsibility. When he is supplier, forward charge. When he is recipient, reverse charge. With this trick, you will never forget. And if anything is happening with respect to a rural area branch, it would be exempt. Covered in exemption chapter, that if the question says that service of business facilitator with respect to a rural branch of the bank, then it will be exempt. Understood, everyone? Yes, ma'am. Let's just quickly see once. See See, so business facilitator, we are studying RCM provisions for now. So business facilitator to banking company is RCM. This is FCM, means BF will never take any liability. But agent of business correspondent to business correspondent is RCM, because this guy takes liability in both of the cases. So if you ever happen to forget what was the provision of business facilitator or business correspondent, you can simply draw the chart that I explained you, that this person will always take liability and this will not take liability, and you will get your answer automatically. Yes, ma'am. Chalo. Now, any person except body corporate. Now, who are person except body corporate? Individual, partnership firm. Individual or partnership firm. These are person other than body corporate. If they are supplying security services, now by security services we mean personal security service, means security guard, watchman we are sending, not like installing CCTV camera or anything like that. That is not covered here. A security personnel giving services. So if there is any person except body corporate, see, understand, there are security companies, right, from which you can call watchmen and all, so, or bodyguards and all. We are not talking about those companies. We are talking about individual people giving service as watchman or security service, or some partnership firm giving such service. To any registered person, this registered person will always pay tax under reverse charge mechanism. So today, if I am registered and I keep someone as a watchman, I avail security service from an individual person, then I am required to pay tax under reverse charge mechanism on whatever consideration I am paying to the security personnel if I am registered person. Ma'am, if you are not registered person, then normal FCM would apply. There is no exemption here. But there is exception. See, these three common exceptions: department, establishment of CGST duty, local authority, government agency. If they have taken registration only for TDS purpose, in GTA we used to give them exemption. Here we are not giving exemption. Here we will say forward charge mechanism, because security service is not that essential service that exemption is required. Therefore, either RCM or FCM would be applicable. So, department, establishment of CGST duty, local authority, government agencies giving availing, being recipients, they are registered, right? They are registered, but still FCM will be applicable. And one different point is composition taxpayer. See, if a composition person avails legal service, or let's say avails GTA services, in all of these cases they get exemption, right? They get exemption, or they are covered under reverse charge, whatever is applicable. Today if I am a composition tax, sorry, I would not get exemption, I would be required to pay. So if I am a composition taxable person and I avail GTA service, means as per CF scrub, I am registered person, being a composition taxpayer, I will pay tax under RCM if the answer to those questions is no. But here, specifically for security services, they have said that these three exceptions remain same. One more exception being added, which is composition taxpayer. For security service, a composition taxpayer will not pay tax under reverse charge. A composition taxpayer will pay tax under forward charge mechanism only. Right. Now, service by way of renting of motor vehicle designed to carry passengers where cost of fuel is included. Now, again, there are two options. If you are a supplier who is giving motor vehicle on rent, again I have two options. I can opt for 12% also, I can opt for 5% also. If I opt for 12%, I can get unrestricted ITC. If I opt for 5%, there are certain restrictions on ITC. Now you simply write three things here. Simply write three conditions here. 1. 5% option taken. 5% option taken by supplier. 2. Supplier is other than body corporate. 3. Recipient is body corporate. Supplier is other than body corporate, recipient is body corporate, 5% option taken. If all of these conditions are satisfied together, yes, then RCM will be applicable. If answer to any of these questions is no, then forward charge mechanism will be applicable. There will never be an exemption. If any answer is no, then FCM. There is never exemption given for renting of immovable property. You can just note this thing down. Now let's check. See, as per this chart I have taken from ICI module only. So GST payable at 12%. Now, irrespective of any fact, see here, 5% option not taken means directly forward charge will be applicable. If the GST is payable at 5%, supplier becomes body corporate, means answer to point number 2 is no. Supplier has to be other than body corporate. Supplier is body corporate, again reverse, again forward charge. Recipient is other than body corporate, means recipient is not body corporate, again forward charge. only for one particular case. Only for one particular case where 5% option is taken, supplier is other than body corporate, recipient is body corporate for renting of motor vehicle, then reverse charge mechanism will be applicable. In all of the other cases, forward charge mechanism will be applicable. Nowhere exemption is given. Clear everyone? Yes or no? Hanji madam. Sure. Now, lender giving security lending scheme service to borrower. Now, I had already explained this to you that this is a supply. This is supply when a lender gives security to a borrower for the purpose of short selling. Now, here they are saying that always the borrower will be required to pay tax under reverse charge mechanism. And also, all of these things are done through approved intermediaries. So, a borrower never actually knows who is the original lender. So how to determine whether it is intrastate or interstate? So your government has said that for security lending scheme purpose, always you pay RCM under IGST only. So transaction takes place through approved intermediary of SEBI. Borrower does not know who is the original supplier, and therefore RCM is always paid on IGST interstate basis only. Yes or no, everyone? Understood, ma'am? Sure. So this is the entire list of 16 services which are taxable under reverse charge mechanism as per CGST Act notifications. There is this one small issue saying that are transportation services and renting of motor vehicle same? The answer is no. See, we studied that renting of motor vehicle is covered under reverse charge mechanism. Today, if I hire an entire bus, I decide the route of the bus, what the bus is going to do, where the bus is going to travel. That is renting of motor vehicle. There RCM is applicable, but only buying a ticket of the bus. I cannot take any decision. The bus moves on its predetermined route. I have only taken ticket. Means that is passenger transportation service. There RCM is not applicable. So understand there's a difference between renting of motor vehicle and transportation of passenger. Taking entire motor vehicle on rent, deciding the route is covered in the RCM provisions, but only taking a ticket of a particular conveyance, that is not covered in RCM because that is transportation service and not renting of motor vehicle service. Yes, ma'am, understood. Now there are two additional supplies also covered under IGST Act which are levied under RCM. One, if any service being supplied by a person in non-taxable territory to a person in taxable territory is simply, can I say, import. If there is import of service, the importer is required to pay tax under reverse charge mechanism. Other than NTOR means we know about OIDAR services. So if OIDAR services, let's say I take a subscription of Netflix, that is also supply of service. Now that is Netflix is covered under OIDAR service and I am non-taxable online recipient. We are going to cover this in place of supply chapter and import under GST also. But just to give you an overview here, if I avail any OIDAR services as non-taxable online recipient, then that OIDAR service provider means Netflix will be required to take registration in India, collect tax under forward charge and pay it to government. Other than that, any other service being imported, reverse charge will be paid by the importer. And second, if any service supplied by a person located in non-taxable territory, supply with respect to what? Supply with respect to transportation of goods by a vessel from outside India to India. Say for example, I am an importer who has ordered certain goods from USA. I hire a German shipping company. There is a German shipping company who will ship the goods from USA to India. Now your government is saying that on whatever freight this German shipping company is charging for transportation in a vessel from outside India to India, on this freight, the importer located in taxable territory will be required to pay tax under reverse charge mechanism. So services supplied by a person located in non-taxable territory by way of transportation of goods by vessel from outside India to India's custom station, the importer in India will be required to pay tax under reverse charge mechanism. Understood. Now this amendment, since it is amendment, important for examination point of view. Here they are saying that with effect from 1st March 2023, whatever RCM provisions are applicable to government. We saw some points, Vipatti and all those points for central government, state government. Whatever RCM provisions are applicable to government will also apply to parliament, state legislatures, courts and tribunal. But ma'am, court and tribunal are covered under negative list. See, understand. Today if I go to court to file a case, I pay application fees to court. That is covered in negative list because that is for justice purpose. Now court also gives chambers to lawyers on rent, right? That is not in respect to the justice process going on. So other than those services, a court, other than the justice services, court also provides some other services that you consider at par with CGST only. Means today, if a court is renting chamber to lawyers, or let's say Parliament or state legislatures give premises on rent to telecom companies for installation of towers. In all of these cases, you treat the Parliament, state legislature, court and tribunal at par with CGST only. So all the RCM provisions applicable to central government, state government will also apply to Parliament, state legislature, court and tribunal also. Quickly tell me yes or no. Everyone clear? So whatever RCM provisions, any service given by government to business entity, we know RCM. So now any service given by Parliament, state legislature, court or tribunal to business entity will also attract RCM. If immovable property, then up to 5,000 exempt, greater than 5,000 registered person, we will collect RCM. Same provisions applicable to these people also. Understood? So this is all about section 9.3 RCM. Now let's talk about section 9.4. Now there are two RCMs in GST, one under 9.3 and another one under section 9.3 and another under section 9.4. 9.3 we understood. 9.4 says that when an unregistered person supplies certain specified goods or services, when an unregistered person supplies certain specified goods or services to some notified or specified registered person, then these people are required to pay tax under reverse charge mechanism. This is not a general provision. It is not saying that if I purchase anything from any unregistered person, me being a registered person is not required to pay tax under reverse charge. They are saying only for specified goods, services and notified people only section 9.4 is going to apply. So has government notified anyone till date? Yes. Government has notified real estate sector till date. So government says that now this particular chart is not applicable for exam. So I am skipping in marathon. This is not applicable for exam, saying that for construction of these types of properties, affordable houses or other than affordable houses or residential properties where the carpet area for commercial properties only up to 15%. So for construction of all of these houses, government says that the promoter has to purchase inputs and input services. Now there are three things: input service, capital goods, right? In order to construct a particular property, promoter would be requiring input service and capital goods. So your government says whatever input or input services in a real estate sector the promoter is purchasing, at least 80% of total will be required to purchase from registered person only. So say for example, total 10 crore worth of inputs and input services were being used, everything. If I say, like, let's say I purchased bricks, paints, steel pipes or the normal water pipes, taps, furniture, everything. The builder purchased 10 crore worth of inputs and input services. At least 8 crore will be required to be purchased from registered person only. And you exclude these things. Say TDR, FSI, anyways, RCM is applicable and electricity is exempt. Electricity is exempt under GST and TDR, FSI, anyways, RCM is applicable. So you exclude that. Other than that, whatever input services are remaining, at least 80% purchase from registered person, means of 10 crore, at least 8 crore worth of input services you need to take from registered person. Ma'am, what if I took only 7.5 crore? So remaining 0.5 crore, you will be required to pay tax at 18% under RCM to government. Now the underlying thing, it might be possible that whatever you have purchased from unregistered person, actually the rate applicable is 5% only, or let's say 28% only. Then we will not see that. We will levy a blanket rate of 18% on the shortfall. So here, all the input services ka total, at least 80% of that take from registered person. If not, whatever is the shortfall of 80% minus whatever you have taken, 18% on that you are required to pay tax under reverse charge mechanism. Now for cement, now as such cement is also an input. Let's say of 10 crore, I purchased 8 crore from registered person, but the remaining 2 crore was cement. Which I did not purchase from registered person. Government is saying then again you will have to pay tax under reverse charge mechanism. So the 20% bandwidth that you have, you use for other goods or services. Because cement anyways 100% you are required to purchase from registered person only. Even if 1 rupee worth of cement I am purchasing from some unregistered person, I am required to pay tax at the rate of 28%, because as per HSN code the applicable rate to cement is 28% only. So RCM applicable at 28%, which I am required to pay under reverse charge mechanism. And last we talk about capital goods. So if any capital goods are purchased from unregistered person, not even 1 rupee capital good you can purchase from unregistered person. Everything you have to purchase from registered person only. If any capital goods purchased from unregistered person, then as per HSN code, whatever will be the applicable rate on those particular capital goods will become applicable. Yes or no, everyone? Chalo, clear to everyone? Why only 4 students are replying? What are everyone else doing? Chalo re chalo, I want replies from each and every student. The most active student at the end of the marathon is going to get a gift from me. Chalo, you know this, right? In Hindi batch also I had sent a pizza. For the Hindi marathon, the most active student had got a pizza end of the day. So today also we have a special prize for the most active person. Chalo. So your purchase input services at least 80% from registered person. If not, shortfall 18%. Cement 1 rupee also on registered person, 28%. Capital goods, whatever is the applicable rate. Understood, ma'am? Sure. Now let's talk about section 9.5. See, what does section 9.5 says? 9.5 is about e-commerce operator. 9.5 says that neither supplier or recipient is paying tax to government. ECO will collect tax from recipient. ECO will collect tax from recipient and pay to government. 4 ECOs are covered here. I call them HUTRE. For housekeeping and accommodation. Housekeeping means, let's say I booked a carpenter from Urban Club or Urban Company as we call it now. Or accommodation. Let's say I booked a room from OYO. In this case, for housekeeping and accommodation, if the original supplier is liable for registration. Means, let's say I booked a room from OYO and the underlying restaurant was in itself registered or liable for registration. Then OYO has no role to play. The supplier will only collect and pay tax to government. So for housekeeping and accommodation, if the original supplier is liable, then the original supplier will only be liable to collect and pay tax. If not, let's say the restaurant is not registered, or let's say the carpenter that I have called from Urban Company is not registered. In that case, ECO will become active, and now the e-commerce operator means the Urban Club, OYO, Trivago, whatever is the e-commerce platform through which I have booked all of these. ECO will collect tax from me and pay it to government. But for transportation and restaurant, always e-commerce operator will be liable. Means, let's say I booked a taxi via Ola or Uber. Now in this case, it might be possible that the taxi driver in itself is registered, but still I have booked through Ola, through an e-commerce operator, means the e-commerce operator will become liable. Same applies to restaurant. If I order something through Swiggy, Zomato, the restaurant might be registered or unregistered, but always Swiggy or Zomato will be liable to collect and pay tax to government. Understood? But there is one exception for restaurant, saying that if I order from a specified premise, what do you mean by specified premise? So there is this hotel which has accommodation rooms also and it has a restaurant also. Now the room rent, the declared tariff of a room in that particular hotel is greater than 7,500 per day. So per unit, per day, if I want to stay in this hotel, the consideration I have to pay is greater than 7,500. Then ECO will not be liable. Means now if I order from the restaurant of this particular hotel, then restaurant will only collect and pay tax to government from me. But other than that, any other restaurant, any other hotel, if I order food from Swiggy or Zomato, the e-commerce operator will be liable to collect and pay tax to government. Yes, understood. So HUT-RE services, housekeeping, accommodation, transportation, restaurant. For housekeeping accommodation, you check whether original supplier is liable or not. If original supplier liable, then liability on original supplier. If original supplier not liable, then liability on the e-commerce operator. But for transportation restaurant, always e-commerce operator liable. Restaurant, we have one exception of 7,500 rupees. Understood, everyone? Yes, ma'am. Chalo. Also for housekeeping, only housekeeping is covered, not person keeping. What do you mean by this? See, from Urban Clap, you can book a painter who would come and paint your house. That is the housekeeping service. I can also book someone to come and do spa, manicure, pedicure, haircut, massage. All of these are person keeping service, not housekeeping service. Their e-commerce operator provisions will not apply under section 9.5. Sure, let's see once. Okay, so always eco-liable, transportation. Eco-liable except when supply not liable, accommodation, housekeeping, but person keeping not covered here. Let's say for example, makeup artist. Restaurant, always eco only liable, but one exception saying that declared tariff if greater than 7,500 per unit per day, then that hotel in itself will become liable. There are small clarifications which you can read on your own, that even if eco is liable if the restaurant owner is registered or unregistered, and all of these things you can just self-read and understand. TCS and 9.5 cannot coexist, right? If you are an e-commerce operator covered under section 9.5, then TCS provisions under section 52 will not apply to you. But if you are not covered under 9.5 and you are an e-commerce operator, then TCS provisions under section 52 will start applying to you. So in no case, TCS as well as 9.5 will coexist. If you are an e-commerce operator, first if you are covered under section 9.5, then 9.5 will apply. If not covered under 9.5, then TCS provisions under section 52 will apply to you. Then these things are very much simple. For GST, we use HSN code for goods to classify the goods, and there are these kinds of rates notified. For services, we use new scheme of classification of services, and all of these rates are notified for services. Also, we understand that if any service is, you are not able to find your particular service in scheme of classification, by default rate would be 18%. So 18% applicable to services which are not covered under any specific heading. Yes, everyone, you need a break. I thought to give a break after completing composition levy, but if you want, we can take a 2 minutes break now also. You want a short break? Okay. We can go for 1-2 minutes small break. It is 10:39. We can resume at 10:41. Go. Chalo, let's resume everyone. Back. Okay. So let's start with composition levy. S for 7, S for supply, section 7, scope of supply. 2 zeros getting mixed become 8, section 8, mix and composite supply. Then 9 is levy and collection. Now 10 is composition scheme. In Hindi I teach it as 10 bahane karke bharenge kam tax means we are going to make 10 separate kind of tantrums just so that we can pay less tax, means the normal applicable rate of taxes are higher on those particular goods or services, but for composition person you get a benefit of concessional rate of tax 5%, 0.5 plus 0.5% means 1%, 5% and 6%. So we are going to make 10 separate kinds of tantrums. We are going to make 10 separate kind of tantrums. Why? Just so that we can pay less taxes. Therefore, section 10, which is composition levy. Now, is composition levy a compulsory scheme? The answer is no. No one can force you. No one can force you to opt for composition scheme. It is a very well optional, a voluntary scheme that if you fall under the criteria and you voluntarily want to opt for composition scheme, you may opt. Otherwise, no one is going to force you. Okay. Now, before beginning, let's discuss what is a quarter. See, normally we understand that we have 4 quarters in a year. Means a period of 3 months. A period of 3 months would be considered as a quarter. But the quarters under GST are fixed. The quarters under GST are fixed, which means Jan, Feb, March, April, May, June, July, August, September, and October, November, December. These are fixed quarters, means even if I say that my period starts from February, my quarter would still end in March only, and it would not be like Feb, March or April. No, the quarters under GST are fixed. Understood? So say for example, we know that every composition taxable person is required to pay taxes under CMP 08 in every quarter. So if I start my business on 20th March, I get my registration effective from 20th March, still my quarter would end on 31st March only, and for these 11 days whatever supply I have made, I will be required to file CMP 08. Then I will not say that from March to April, May, June, my quarter ends there. No. Your quarter would end when the quarter for GST ends. So quarters under GST are fixed, saying that it is the period comprising of 3 consecutive calendar months ending on March, Jan, Feb, March, June, April, May, June, July, August, September and October, November, December of a calendar year. Yes, ma'am, understood. Sure. Now, who can opt for composition levy? So for goods and restaurant, if I belong to special category states are no Asthamai, Uttarakhand and Jammu Kashmir. You strike off Assam, Himachal Pradesh and Jammu Kashmir from here. Why? Because for composition purpose, Assam, Himachal Pradesh and Jammu Kashmir are not special category. Other than that, all of these states means Nagaland, Sikkim, Tripura, Manipur, Mizoram, Meghalaya, Arunachal Pradesh and Uttarakhand. If I am supplying goods or I am supplying restaurant services, only restaurant or other services, goods or restaurant services from all of these states, then if my turnover is 75 lakh rupees in a particular financial year, I can opt for composition levy. For remaining states, means all the other states other than special category states, and also for Assam, Himachal Pradesh and Jammu Kashmir, the turnover limit would be 1.5 crore. So if in an entire year I supply goods worth 1.5 or my restaurant income is up to 1.5 crore rupees, I can opt for composition scheme. Otherwise, we have section 10(2)(a). Now see, you cannot supply any other services here, but you can supply goods here. Section 10(2)(a) is predominantly for services, but there is no restriction on supply of goods. You can supply as many goods you want along with service under section 10(2)(a. But here you cannot supply as many service as you want along with goods. So it is normally in our common terms we say it is for service under 10(2)(a, but generally we say other than 10(1), 10(2), everything falls in 10(2)(a, and there is no restriction on supply of goods or services. Whatever you want to supply, you can supply. And here your turnover limit would be 50 lakh rupees, and this turnover would include everything. Means what is the definition of turnover here? Whatever is my taxable supply, my exempt supply, my exports, interstate supply, everything that I'm doing on a PAN basis, on a all India basis under a single PAN. All India basis under a single PAN, everything will be covered here. Made by registered person from 1st April up to a financial year, which means even in this particular year, I have to keep checking. See, if in FY 2021, my turnover, I am from Gujarat and my turnover was 1 crore. I am eligible to opt for composition under 10.1, 10.2. I opted for composition. Also, in FY 21-22, I will have to keep checking my turnover. In my current financial year also, my turnover should not exceed the applicable limit here. Understood. Yes. Every service, every goods or service can be covered under 10.2a. There is no restriction in that. But you cannot cover other things in 10.1, 10.2. You can cover all of these things in 10.2a, which is completely fine. I will give you a logic behind same why government has done so. Wait for 2 minutes. Okay. But for the turnover of composition, you do not include GST. Obviously means you have to take taxable value exclusive of taxes. GST amount will not form part of turnover. If I have received any inward supply, on which I am paying tax under reverse charge, that is not my supply. Say for example, I am a business entity. Availing legal services from advocate. Business entity availing legal services from advocate. In that case, I will pay tax under reverse charge mechanism. But still, the supply is of advocate, added to aggregate turnover of advocate and not in my aggregate turnover. I have just paid taxes, but I still remain to be the recipient only. So if you avail any inward supply, do not add it in your aggregate turnover. And this important thing, which says that all other exempt supplies will form part of aggregate turnover under composition scheme, but specifically any interest discount income by way of any loan, deposit or advance. If I have given any loan, deposit, advance to anyone, whatever interest I earn, we know it is exempt under GST. So here government is saying that all other exempt incomes will form part of your aggregate turnover, but only and only the interest discount income that you receive by giving loan, deposit or advance to someone, that interest income will not form part of your aggregate turnover. Understood, everyone? Now there can be one doubt. See, we are in marathon, so you obviously know that interstate supplier, if I supply anything interstate, I cannot opt for composition scheme. Then what is the point of including export or interstate supply in aggregate turnover? Understand, once you enter into a relationship, you cannot cheat. Before entering into a relationship, if you had a past, will that ever be a concern? The answer is no. So once I opt for composition scheme, I cannot make interstate supplies. But before opting for composition scheme, if I was making any exports or interstate supplies, that would be completely fine. So they are saying, when I check the turnover of my previous financial year to see whether I'm eligible or not, in that year, it might be possible I have done some interstate supplies, but now once I opt for composition scheme, then I'm not going to make any interstate supply. Understood? For applicability, you check PAN-wise total turnover of pan-India basis, but once you opt for composition scheme, then for every state what supplies you have made, you will calculate for every state and make payments under GST. Yes, ma'am. Now procedure for opting, this I don't feel very relevant, so not covering in marathon. So you can opt in for composition scheme anytime if you are opting for a new registration, right? So if you are taking a new registration during financial year, whenever you want, you can take, just in part B, give an intimation that you want to be a composition person. Understood? But if you are an already registered person and now you want to shift from regular scheme to composition scheme, in that case you can shift only at the beginning of the financial year. And in this case, whatever inputs and capital goods you have in your stock, you also get ITC of the same that we study in ITC chapter. Now most important, rate of tax. What is the rate of tax that I have to pay if I opt for composition scheme? See, for 10.2a, if you have opted, not you just strike off service and write 10.2a, because you can also supply goods under 10.2a. So if I have opted for composition scheme under 10.2a, whatever is my total turnover, of that total turnover, 3% CGST and 3% SGST means 6% tax I have to pay. And we understand that whatever taxes you pay under composition scheme are paid out of your own pocket. Means I cannot collect these taxes in the name of taxes from my ultimate customer. I have to pay all of these taxes from my own pocket only. So if I'm opting for composition scheme under section 10.2a, I have to pay 6% out of my own pocket of my total turnover for a particular quarter. Now, if I have opted for composition scheme under 10.1, 10.2, if I have opted for composition under 10.1, 10.2, and if I'm a manufacturer of goods, then whatever is my total turnover, 1%, 5% C plus 5% SGST, 1% of my total turnover as a manufacturer, I have to pay to government. But if I have opted, if I am others means, let's say I'm not manufacturer, but I'm trader of goods. In that case, very much simple. Again, rate is 1%. But 1% of only and only taxable turnover. See, understand, if as a manufacturer, I manufacture certain taxable as well as exempt both goods, I have to pay 1% of total turnover, exempt plus taxable. But if I'm not manufacturer, if I'm trader, in that case, 1% I only have to pay of my taxable turnover. And if I'm opting for composition scheme 10.1, 10.2 as a restaurant service provider, in that case, 5% of my total turnover I have to pay to government under composition scheme. Now see, why they have put restrictions? Why they have put restrictions on services in 10.1, 10.2 but no restriction of goods in 10.2a? Because see, if I am a normal trader of goods, what is the rate of tax applicable to me? 1%. What I do, I actually want to start a shop to repair watches. I want to start a shop where I will be repairing watches. But I thought if I take 10.2a, I will be required to pay 6% tax. Let's just simply, I will sell only one watch in entire year. I will sell only one watch in entire year and I will say I am a trader of watch. Along with that, I am providing watch repairing services also. And I will pay tax to government at 1% only. So government will have obviously an issue because for services, government want you to pay 6%. But still you only sold one watch in entire year and calling yourself a trader. So here government is saying, but here if you say that I am a watch repairing shop, but you also happen to sell some watch, government will not have any issue because normally for trader it is 1%, but here you are paying 6% of your total turnover. Therefore, government has put restrictions on you supplying services in 10.1, 10.2, but no restrictions on supplying goods or whatever you want under section 10.2a, because here anyways government is getting higher rate of taxes as compared to here. Understood? So other points, being a composition person, you cannot collect tax from customer, therefore you cannot issue tax invoice. Whatever document you issue, we call it as bill of supply. And you have to mention on that bill of supply that you are a composition person, not eligible to collect taxes. Payment you have to do quarterly by 18th of the succeeding month. So for Jan, Feb, March till 18th April, I will file CMP 08. I will see whatever is my total turnover in a particular state and calculate taxes accordingly. And return entire year, I have to file only one return. I have to file only one return, which is GSTR 4 annually by 30th April. So after the end of financial year, so FY, let's say for FY 23-24 till 30 April 2024, I have to file GSTR 4. Annual return, there is provision of annual return, but it is not applicable currently because we anyways have GSTR 4, which is annual return. So there is provision of annual return saying that by 31st December, you file GSTR 9A, but it is not operative for now. Now, this is also important for MCQ purpose. Who are the person not eligible to opt for composition scheme? If you are a casual taxable person or non-resident taxable person, CTP, NRTP, or let's say you are a supplier of goods or services which are not leviable to taxes, means you supply the products or alcoholic liquor for human consumption, you cannot opt for RCM. If you make any interstate supply, not even exempt interstate supply, not even interstate branch transfer, nothing you are allowed to do interstate. If 1 rupee interstate supply if you made, then also you will not be eligible to opt for composition scheme. Then if you supply through an e-commerce platform, if I supply through an e-commerce platform where the e-commerce operator is required to deduct TCS under section 52. Let's say I supply through Amazon. Amazon is required to deduct my TCS under section 52. I cannot opt for composition scheme. But if I have my own website, see, if you have your own website, in that case, anyways, TCS does not apply. So they are not saying that you don't supply online. You can supply online. Through own portal you are supplying, opt for composition scheme. But through some another e-commerce operator, if you are supplying, that operator is deducting your TCS, then in that case, you cannot opt for composition scheme. And last, if you are a manufacturer of ice cream, pan masala, aerated water, tobacco, fly ash bricks, bricks of fossil, siliceous metals, earth, building bricks, roofing tiles, if you are a manufacturer of all of these things, you cannot opt for composition scheme irrespective of your turnover. Being a manufacturer of ice cream, even if your turnover is just 5 lakh rupees, then you are not eligible to take registration only. If your turnover, let's say, becomes 45 lakh rupees, you are required to take registration, but you cannot opt for composition scheme. And even if your turnover is less than 50 or 75 or 1.5, you will be required to pay tax under normal scheme only. Understood, everyone? Yes, chalo. And this important point saying that only for 10.1, 10.2 we have restriction. 10.2 no restriction, why? Already explained to you. So 10.1, 10.2 I cannot supply service. But there is an exception saying that 5%, 5 lakh rupees or 10% of my previous financial year turnover. Turnover again the same that we studied, excluding the interest and discount amount, everything. So here they are saying that I can supply service. So if I am a trader of watch, I can still repair watches. Up to what amount? Up to 10% of my preceding financial year's turnover or 5 lakh rupees, whichever is high. Now service can be anything. See, even if I'm a normal trader of watch and I want to repair punctures, that is also supply of service. I want to repair puncture which is not at all related to my goods ka supply. Still it would be allowed. Government is not poking nose in saying what service you can supply. Whatever service you want, you can supply. But the value cap says that 10% of turnover or 5 lakh, whichever is higher, only till that value cap you can supply services if you've opted for 10.1, 10.2. If your amount exceeds, then you can either shift to 10.2A if turnover is within 50 lakh. If more than 50 lakh, then you will compulsory have to become a regular registered person. Yes, ma'am. Chalo. Now, if proper officer believes that you have ineligibly opted for composition scheme, you are as such not eligible for composition scheme, either maybe due to all of these limitations or your turnover is exceeded, they can issue your show cause notice. You have to reply, and if reply is not satisfactory, in that case, they can cancel your composite registration and shift you to a regular registration. And if this happens, you will be required to pay differential taxes. Let's say the normal rate on services is 18%. You paid only 6% under composition scheme. Differential taxes you will be required to pay also along with applicable interest penalty, and your demand recovery proceedings under section 73, 74 can also start. Withdrawal for composition scheme. If I cease to satisfy conditions, let's say my turnover exceeds, I want to make interstate supply, I can just file an intimation within 7 days that my turnover is exceeded. Please shift me out of the composition scheme. So whatever date I mentioned that on this date I became ineligible, from that particular date I will be shifted to a regular registration. I am satisfying all the conditions, but we know that a composition person cannot avail ITC. Why? Because not collecting tax from recipient. But I want to avail ITC. I want to shift to regular registration. I can at any time shift. So if I voluntarily want to withdraw, I can withdraw. If you want to go from regular to composition, only at start of the year. But composition to regular, you can go anytime that you want. Just you have to file an intimation before withdrawal. And if proper officer kicks me out here, when officer thinks I have opted for composition scheme illegally, in that case, effective date will be whatever is my date of contravention. From that date, tax authorities can kick me out of the composition scheme. If I go from regular to composition, I have to reverse my ITC. If I go from composition to regular, I can avail ITC. The provisions we are going to study in ITC chapter. But for reversal of ITC, you get 60 days. But for availment of ITC, you only get 30 days whenever you are shifting from regular to compo or compo to regular. Done. So here we wind up entire charge of GST as well as composition scheme. Sections, everyone with me. Everyone with me. S for 7, S for supply, section 7, scope of supply. Chalo. By the end of this marathon, I want you all to remember GST section numbers with me. We are going to revise more than 10, 15, 20 times throughout this marathon only. S for 7, S for supply, section 7, scope of supply. 2 zeros getting mixed become 8. 2 zeros getting mixed become 8, composite and mixed supply, section 8, composite and mixed supply. Then section 9 talks about levy and collection, and these are all CGST Act sections, right? Then section 10. 10 separate tantrums to pay less tax. 10 different tantrums to pay less tax means section 10 composition levy. Okay. Then for IGST Act, I've taught you 3 sections yet. IGST Act section 7 talks about what is interstate supply. Section 8, what is intrastate supply, and section 9, territorial waters of India. So we've completed 1, 2, 3, 4, 5, 6, 7 sections till now. Done. Now let's start with next chapter, which is registration under GST. Now again, this chapter is very much a huge chapter, bulky chapter in terms of volume, number of pages, but there are certain things which are important for exam and certain things which are not at all important for exam. So in this marathon, I am not going to cover entire chapter, but only the relevant provisions which I feel are most important for exam. Other things you can just self-read and understand on your own. Yes, everyone. Done, understood. Sure. Let's start with registration under GST. It is an A category chapter, but only with respect to specific parts. The remaining parts would become C category. So not the entire chapter is A category, but yes, section 22, 23, 24, all of these things are A category only. The procedural part about Aadhaar authentication, bank details and everything, that becomes C category. Sure. Josh is high, everyone. Is the Josh high? Sure. You've promised me to stay till evening, the entire 11 hours. So energy should not go down even for a minute. Sure. But I gave break earlier only, na? Done. After registration, we'll go on a lunch break. See, it's 11. I think we will require 1 hour for registration. So it would be 12 when we complete registration. Then I will give you an half an hour break for lunch, right? So be here. Be here with me till we complete registration and then go have mast lunch. Okay, sure. Now registration. Certain specific general points that we know, that in order to obtain registration under GST, you need to have a PAN number. If you have PAN, you can get GST registration. Why? Because the GST number in itself has PAN number embedded in it. Okay. Then for every state wherever you have your place of business, if your turnover exceeds, you are required to take registration. Means one registration in one state would do. But still, if you voluntarily want to take more than one registration in one state, no one is going to stop you. See, one in one state is mandatory if you have place of business and you've exceeded your turnover. But more than one is optional if you want for business, separate business verticals for a different place of businesses to have multiple registrations, you can still have that. Understood. Who is a registered person? Every person. Registered person means every person who is registered. Hey, what time pass, man? This is the definition. Registered person means a person who is registered under GST. So if you take registration, you become registered person. Now it might be possible you are not originally liable. My turnover is only 1 lakh rupees. Still, if I want to take registration, no one is going to stop me. So here, you are liable or not liable is not a question. You've become registered means you are a registered person. But a UIN holder is not considered as a registered person. Who is UIN holder? We'll cover this point also in course of this chapter. Now, who's a taxable person? Every registered person is by default a taxable person. So if you've taken registration, maybe you are liable, not liable is not a question. You've taken registration, you become registered person, and every registered person is by default a taxable person also. And also, if I'm liable but I have not taken registration, means my turnover is 5 crore rupees, still I am not taking registration. If I have not taken registration, I cannot be called as a registered person, but I am still a taxable person. So every person who is registered is taxable. Plus every person who is liable to be registered is also a taxable person. Right, ma'am. Now section 22. 2 to 22. See, 2-2, you've started earning double. See, 2-2 means you've started earning double. How can we let you go? Hey, come and take registration under GST. You have started earning double. 2 to 22. How can we leave you? Now you become liable for registration under GST because you are earning double. Okay. So when a person becomes liable for registration, when you cross your aggregate turnover limit. Now, what is aggregate turnover? The same definition that we've studied in composition with only one difference. See, here also aggregate turnover. Here also aggregate turnover would be all taxable, exempt, export, interstate, everything done on all India basis under a single PAN is included. You exclude GST, you exclude inward supply or RCM. But this point, in composition we saw that we also exclude any interest discount income, but here this point is not given. Means the only difference between aggregate turnover of composition and registration is interest income. For registration aggregate turnover, interest income is also included. But for composition turnover, Interest income is not included in aggregate turnover. Other than that, everything is same. Okay. So now, when I check the aggregate turnover, I will check everything. Say for example, Gujarat, Maharashtra, Tamil Nadu and Karnataka. Right? 4 states I supply. Gujarat, I supply shoes. Maharashtra, I supply only liquor. Tamil Nadu, let's say I supply clothes. And Karnataka, I have a restaurant. So I make separate kinds of supplies in all of these states. Now, in order to compute the aggregate turnover, I will add everything. When I compute aggregate turnover, I will add everything and check whether it is exceeding threshold limit or not. But when it comes to taking registration, I will only take registration in those particular states where I am making taxable supply. See, Maharashtra, I am only supplying alcoholic liquor for human consumption. I will add it for the purpose of calculating. But I will not be required to take registration here. Why? Because my supply is not taxable. So when you calculate turnover, add everything. But take registration only at the places where you are making taxable supplies. Yes, understood, ma'am. Now, if we know that if any principal is sending goods to job worker for job work, and job work ultimately supplies the goods to original customer on behalf of principal, in whose aggregate turnover this will be added. Chalo everyone. If a job worker directly supplies certain goods from premises to ultimate customer on behalf of principal, in whose aggregate turnover it will be added in aggregate turnover of principal only. Job worker is merely acting as a between person who is on behalf of principal giving goods to customer. It will not be added in job worker's aggregate turnover. Also, aggregate turnover will exclude any inward supply on which you have paid tax under reverse charge mechanism. You have to take total turnover of all branches on PAN basis, means even supplies made between distinct person will form part of aggregate turnover. And you have to include everything that you make on your own account or on behalf of a principal as an agent. Everything will form part of your aggregate turnover. But registration will be required only at a place where you are making taxable supplies. If you are not making taxable supplies from any particular place, then no need to take registration here. Done. Then no liability to obtain registration in state from exempt or non-taxable supplies are being made. This point I'll explain later. Okay. Now, what are the threshold limits? This chart is extremely important. Throughout this marathon, I will be telling you about 4 to 5 charts which you have to remember. If not able to remember, simply just tear these pages on the day of examination, make a chart, keep it in your pocket and go to the examination center. So these 4 to 5 charts, one here, one in valuation chapter, one in place of supply. So these things you have to remember. You have to remember, no other alternative. If you do not remember, tear the page, make a chart and go to examination hall. Sure. But I know you are good students, you are not going to do that and you are going to remember. So threshold limit. If I make any supply from no MMT, any taxable supply from no MMT, Nagaland, Manipur, Mizoram, Tripura. If I make any taxable supply from Nagaland, Manipur, Mizoram, Tripura, then my PAN basis applicable turnover will fall to 10 lakh rupees. My PAN India basis applicable turnover will fall to 10 lakh rupees. If I am making supply but not taxable, let's say I supply only liquor from Tripura, then my turnover will not fall to 10 lakh and I will see based on other states what is the applicable limit, right? So everyone with me, if I make taxable supply from Nagaland, Manipur, Mizoram, Tripura, in that case, PAN basis my applicable limit will fall to 10 lakh. If I make supply but not taxable, or if I don't make supply only from these places, then you see the other states what is the applicable limit. Okay. If I make any supply from stamp in Uttarakhand, means Sikkim, Telangana, Arunachal Pradesh, Meghalaya, Puducherry and Uttarakhand. If I make any supply from stamp in Uttarakhand, be it goods, service, taxable, exempt, anything, my applicable limit would be 20 lakh rupees. Other than no MMT stamp in Uttarakhand, if I am in any other state or union territory supplying services or goods plus services, my limit would be 20 lakh. If I exclusively supply, most important, if I exclusively means no service involved, only and only goods, I exclusively supply intra-state goods, In other states, no MMT, as no MMT and stamp in Uttarakhand, you leave. Other states, exclusive, goods, intrastate, if I supply, applicable limit would be 40 lakh rupees to me. But if I am a supplier of ice cream, pan masala, tobacco, bricks, and here aerated water is not there. Composition we have aerated water, here we don't have aerated water. If I am supplier of these particular things, then in that case I won't get benefit of 40 lakh, still 20 lakh limit will be applicable. If I have if I have to take compulsory registration under section 24, then also these limits will become irrelevant, because then I have to take compulsory registration. Or if I have taken voluntary registration, I want to continue with my registration, you can still continue with your registration. So once again, this entire chart with me. So here we are saying, if I am making any taxable supply from no MMT, then my limit will fall to 10 lakh. Otherwise, whatever is applicable limit for other states will become applicable. If I supply from stamp in Uttarakhand, 20 lakh. Other states, any service involved, 20 lakh. Exclusive intrastate goods, 40 lakh. Now this point that I have left. See, in entire India, can you think of any person who would be doing business, wanting to take registration under GST and not having a bank account? Not possible at all. So every person in India would be having interest or discount income. And we know that for registration chapter, interest and discount income is considered in aggregate turnover. And interest discount income is not goods, it is service. So no person in India would be an intrastate exclusive goods supplier, because interest income everyone will have. Hey, government played with us. Means no one can avail benefit of 40 lakh. Is it so? The answer is no. Here government has said that only one service we can allow. Means if you are having any interest discount income from deposit, loans, advance, it is okay. We will still consider you to be an exclusive dealer of goods only. So let's say if my aggregate turnover from supply of shoes is 35 lakh rupees and I also have interest income of 2 lakh rupees, my aggregate turnover is 37, which is less than 40, I will not be required to take registration under GST. But my supply from shoes is 35 and my interest income is 10 lakh. Here my aggregate turnover will be 45, which is more than 40. I will be required to take registration. They are not saying that you do not include interest only. You include interest, but do not consider interest as service. Means we will not make you ineligible just because you are having interest income which is not goods but service. But you have to consider it for aggregate turnover of 40 lakh rupees. If your goods plus interest are less than 40, then it is okay, no registration required. But if your goods plus interest exceed 40, means you have to take registration. Chalo bolo yes or no everyone. Understood? Sure. Let's see some examples. If a person, okay, this we know that if I have multiple place of business, let's say my one shop is in Sikkim and one is in Maharashtra, then applicable limit will become 20, not 40. One in Manipur, one in Sikkim, one in Maharashtra, applicable limit becomes 10 lakh. Diya Traders has one shop in Manipur, turnover 7 lakh, and another shop in Chennai, turnover 5 lakh. Supply of shoes. Now shoes are taxable goods, right? And I am making taxable supply from no MMT Manipur. I am making taxable supply from no MMT Manipur, means the applicable limit to me would be 10 lakh rupees. And my turnover is 7 plus 5, which is more than 10, obviously. Therefore, I will be required to take registration, and not just in Manipur, in both of these states, because my PAN basis limit falls to 10 lakh now. So as one shop is in Manipur, making taxable supply, entire limit falls to 10 lakh and registration is required in both of these states. But Ruthvi Enterprises supplies taxable goods intra-state in Maharashtra, 34 lakh. Shop for liquor in Nagaland. I have a shop in no MMT, but I am not making taxable supplies from no MMT. Therefore, I will see other things. Other is saying that Maharashtra only goods. Maharashtra only intrastate goods, means 40 lakh limit will be applicable. My turnover in Maharashtra is 34 plus Nagaland I will consider for turnover, even though not required to take registration there. So 34 plus 8 is greater than 40. Therefore, I will be required to take registration, but only and only in the state of Maharashtra. Why? Because I am not making any taxable supply from Nagaland. Registration required only in state where you are making taxable supplies. You consider everything for aggregate turnover, but you do not take a registration there. Since taxable supplies are not made from Nagaland, threshold limit will not fall to 10 lakh. Therefore, applicable limit will be 40 lakh. but my registration still will be required because aggregate turnover here is 34 plus 8, 42, and no registration in Nagaland as flexible supplies are not made from there. This is transition provision, not relevant. Then successor. If you are transferring your business as a going concern, then the transferee from the date of transfer will be required to take registration. If there is amalgamation demerger, then whenever ROC, Registrar of Company, issues certificate of incorporation, from that date transferee will become liable to obtain registration. This was all about section 22, means 2 to 22. 2 to 22 you are earning double means you become a person liable for registration if your aggregate turnover is crossing, if there is a transfer as going concern, or if there is amalgamation demerger. Yes or no? Yes, Akib. Done. Noted. Sure. Can we start with next section? Section 23. Is everyone with me? Section 22 is most important of the entire registration chapter. You can find a big question, MCQ, whatever, anything from this particular section. Now let's talk about section 23. Section 23 says that a person not liable for registration. So 22 says liable, 22 says liable, and तुरंत चिपक 23 says not liable. 22 says liable, 23 says hey, wait, not liable, not liable. So here we have section 23, person not liable for registration. We have 23.1 and 23.2. So let's see, 23.1 says that if I'm exclusively, again important, exclusively, if I'm exclusively selling goods or services which are not leviable to taxes, exempted from taxes, or which my recipient is paying tax under reverse charge. So here, person engaged exclusively in business of supplying goods that are not liable to tax, let's say alcoholic liquor or the MAP products, or which are wholly exempt from tax. Let's say I'm only and only supplying milk. Milk is not liable to GST. So in all of these cases, I'm not required to take registration. Why? What is the point of taking registration? Because I will never be required to collect taxes. When I never have to collect taxes, then why will I be required to take registration? So here, person engaged exclusively in business of supplying goods that are not liable to tax or that are wholly exempt from tax. No requirement to take registration. And second, how can in India we talk of exemptions and not talk about an agriculturist? So if you are an agriculturist, means an individual HUF who is undertaking cultivation of land and selling the whatever you have grown from that out of cultivation of land, exclusively are supplying that, no need to take registration. See, if I am an agriculturist and I also run a dairy, means I sell butter, chocolates along with my cultivation of land, then registration would be required if I exceed threshold limit. Exclusive agriculturist, no registration required. And there is no condition that land has to be your own. Land may be rented land also and own land also. And you yourself have to do cultivation? No. You can do cultivation, you can get your family into cultivation, you can hire some laborers also for cultivation, that is all fine. So agriculturist takes a land on rent, allowed. Cultivation done by servant, allowed. No registration required. Petrol pump, see, only MAP is exempt. Only MAP is exempt. Engine oil is not exempt. So if a petrol pump selling engine oil along with petrol would be required to take registration if threshold limit is exceeded, because petrol is covered under MAP, engine oil is not covered, and now you are not exclusive supplier of exempt or non-taxable products. Understood? 23.2 we will do after section 24 because all the exceptions of 24 are covered under 23.2. Now section 24 talks about compulsory registration. See, 2 to 22. 2 to 22 says you're earning double means you are liable. 23 says, hey, wait, not liable. So 22 liable, 23 not liable. 24 says, what is this fight, liable, not liable? Shut up and take compulsory registration. What is this liable, not liable thing going on? Shut up and take compulsory registration. Section 24 says that you have to take compulsory registration. Who are the people who are required to take compulsory registration? They are I-9 creation. I make you remember this as I-9 creation. I means if I make any interstate supply. Forget 10 lakh, 20 lakh, 40 lakh, forget everything. If I make an interstate supply, means I have to take compulsory registration. But for service, you have to check the applicable limit. So if I am supplying interstate goods, then then I'm required to take compulsory registration. So a person making any interstate taxable supply is required to take compulsory registration. But if I am supplying services, then it is an exception that for services I get 10 lakh, 20 lakh, whatever is the applicable limit to me. Or if I am supplying certain notified handicraft goods which are predominantly made by hand, machine is not used only, or machine is used in a very minimal proportion, government says that goods to be notified handicraft goods, then also 20 lakh, 10 lakh limit I will get. Other than that, if I am supplying any interstate supply, compulsory registration. Come on, quickly. I think you must be remembering this. So even me without teaching, quickly give me answers in the comment section. Full form of I-9 creation. 9 says, if I am an e-commerce operator, means let's say I'm Swiggy, Zomato, Ola, Uber, Trivago, Oyo, all of these 9-5 people I am, where government has told me to collect tax and pay to government. So all the 9-5 e-commerce operators are required to take compulsory registration. C says CTP. I am casual taxable person. I am a casual taxable person, again with one exception, that if I supply notified handicraft goods up to 20 lakh, 10 lakh, no registration required. Other than that, if I am a casual taxable person, I will compulsory be required to take registration. R says RCM. If I receive any inward RCM supply, see in GTA also I told you, let's say I am a factory and I am not registered, but I am specified person, I am liable to pay RCM, I will have to take registration and then pay tax. Let's say I am a body corporate who is sponsoring an event. Now being a body corporate, recipient of sponsorship event, I will have to pay RCM. Even if I am not registered, I will have to take registration and discharge my liability under RCM. So R means if I am receiving any RCM supply, then I have to take compulsory registration. E says every e-commerce operator required to collect TCS under section 52. So if I am Amazon, if I am Myntra, if I am Meesho, let's say, and I am e-commerce operator through which people are supplying goods services, I have to take compulsory registration. Plus all the suppliers who supply through me. Why? Because I will deduct their TCS. They will get credit of TCS in their e-cash ledger. If they are not registered, how they will get credit? So all the e-commerce operators under section 52 plus all the suppliers supplying through such e-commerce operators are required to take compulsory registration. Again, one exception, if I am supplying services through e-commerce operator, then up to 10 lakh or 20 lakh, whatever is applicable limit, I need not required to take registration, and also my TCS will not be deducted, only for supplier of service. A talks about agent. If I am any agent making taxable supplies on behalf of a taxable principal, I am required to take compulsory registration. T means a TDS deductor under section 51. If I am a notified person who need to deduct TDS under section 51, I will have to take a compulsory and separate registration. I says ISD service provider, O says OIDAR service provider, and N says NRTP plus any other person whom government may notify. So these are the people required to take compulsory registration irrespective of their aggregate turnover. Okay. So here I, interstate supply, 2 exceptions, service and handicraft goods. 995. C, CTP, 1 exception, notified handicraft goods. R, if liable to pay tax under reverse charge mechanism or inward supply. E, all e-commerce operator, TCS wale. And plus the person supplying through these e-commerce operator other than 95 obviously. Say for example, I am let's say a carpenter and I supply through a 95 service provider covered in housekeeping services, then my TCS will not be collected. Then I don't have to take registration. But if my TCS is collected and I'm supplying through e-commerce operator, then compulsory registration is required. And I already cleared this. TCS and 95 cannot coexist. Again, exception, supplier of service up to 20 lakh, 10 lakh. A, all the agents. Then T, TDS deductor, I, ISD, O, OIDAR, and NRTP, and plus any other person whom the government notifies. Now see 23 2. 23 was person not liable. Here, all the exceptions will be covered here. See, if you are supplying services through an e-commerce operator, up to 20 lakh, 10 lakh, no registration required. If you are CTP supplying handicraft goods up to 20 lakh, 10 lakh, no registration required. If you are supplying interstate services or handicraft goods up to 20 lakh, 10 lakh, no registration required. So all the exceptions of 24 are notified under 23(2). And plus one additional point saying that person making only RCM supplies. Why? Because the person receiving RCM supply, we saw under section 24, if I am a recipient of inward RCM supply, then I have to take compulsory registration pay to government. So therefore, if I'm a supplier of only RCM supply, then what is the point of me taking registration, because my recipient will anyways do the compliances. So if a person is making only RCM supplies, if a person is supplying only RCM supplies, then no need to take registration under GST, because all the compliances will be done by recipient and you need not do anything. So this was all about section 22, 23 and 24. Till here, the chapter is extremely important. After this, there are a lot of procedures involved. You can just self-read the things. I will obviously not leave everything. I will take you for a walk through the entire chapter. But you need to understand what is important and what is not. Right, ma'am. Chalo. Now 25 says, see, 2 to 22 says you are liable. Now 22 says liable, then 23 Turant says, no, wait, not liable. 24 says, what is this liable, not liable nonsense? Shut up and take compulsory registration. Right. Now 24 talks about procedure for registration. Okay, ma'am, understood that we are required to take compulsory registration under section 24. But what is the procedure to obtain this registration? How to obtain registration? Now this we will study under section 25. So first of all, any person who is liable to take registration in every single state UT wherever you are liable, within 30 days of becoming liable, you will apply for registration. For territorial waters of India, at nearest coastal state UT, within 30 days you will apply for registration. But if you are CTP NRTP, casual taxable person, non-resident taxable person, if you are CTP NRTP, then in that case, we know that you have to apply prior to starting your business. So at least 5 days prior to commencement of your business, you will have to apply. So other cases, when you become liable, within 30 days you apply. But for CTP and RTP, 5 days prior to commencement of business only you have to apply. If you are ISD or SEC, you will always have to take a separate registration. Single registration every state UT. There is no central registration. There is no one registration which would be applicable throughout India. Every separate state you will be required to take a separate registration. Voluntary registration you can take more than one also if you want. If you opt for composition levy, you cannot do that. For Maharashtra you opt for composition, for Gujarat you do not. So if on a PAN basis you're opting for composition, you will have to opt for composition for all the states, all the registrations under a single PAN. Okay, if you are not liable, still if you want to take voluntary registration, you can. Whenever you want to opt out, you can opt out also. If you have multiple registration, your multiple registrations will be treated as establishment of distinct person. PAN is mandatory because PAN number is embedded in GST number. But if you are obtaining registration for TDS purpose under section 51, in that case, using your TAN number also, you can take registration. NRTP, see, understand, NRTP is not Indian. NRTP would not be having a PAN. Then how to give registration to NRTP? So an NRTP can get registration on basis of some other documents, let's say for example passport. Other than that, every person is required to have a PAN number to obtain registration. Now this section 25(8) says that if I am liable but I fail to obtain registration, my turnover has exceeded 10 lakh, 20 lakh, 40 lakh, whatever is the applicable limit, or let's say I am making interstate supply. I am liable but I have not taken registration and proper officer gets to know. Proper officer can suo motu register me on a temporary basis. So let's say I am liable but I fail to obtain registration. Proper officer can suo motu register me on temporary basis. So once proper officer registers me on temporary basis, within 90 days, either I can accept that okay, there was my mistake, I actually was required to take registration, and you submit application on your own. So once proper officer registers you on temporary basis, either within 90 days you can accept and yourself apply for registration, because this registration is temporary. You have to apply for a permanent one. Or you can go against proper officer, file an appeal saying that no, I am not required, proper officer is wrongly registering me. Now there are again two cases. You can either win the appeal. Appeal is in your favor. So anyways, this registration was temporary, it will get cancelled and no registration required. But if the appeal decision comes against you, means the appeal decision comes as in favor of proper officer saying that yes, you are eligible, you are required to take registration, in that case from the appeal order, within 30 days, you will go and apply for registration. So once proper officer temporarily registers you, within 90 days, either you accept and apply or you file appeal. If you happen to lose the appeal, then from appeal order within 30 days, go and apply. And in both cases, your effective date of registration will be the original date, since when proper officer has granted you registration. Understood. Then talking about unique identity number, not much important from exam point of view. UIN number simply says that for some specialized agencies of United Nations organizations, multilateral financial institutions, consulate, this is not consulate, consulate of or embassy of foreign countries, you obtain unique identity number. Why? Because these people are being given refund of certain taxes that they pay on some specified input services. So in order to claim that refund, they require this unique identity number. And they are not required to take UIN on state basis. One UIN would be valid for PAN basis entire India. So here on notified supplies, UIN is a centralized UIN applicable for entire territory of India, and a person having UIN is not a registered person. In the definition of registered person only, I told you that every registered person is a registered person, but a UIN holder is not a registered person. And once these people apply for UIN number, now see, these are foreign people. We want to give all services quickly, faster. So within 3 working days, whenever a person makes application for UIN number, within 3 working days only, a certificate is being granted to them. Done. Now, procedure for registration. Very again, a lot of procedural part. This is not very important for exam point of view. Therefore, I will not cover everything from procedure as I have been doing till now. Simply, I'll just give you an overview, and the amendment part I will emphasize. So, whenever you want to obtain registration under GST, there is this simple one form only, GST REG 01. Except for NRTP, TDS deductor, TCS collector, and OIDAR service provider. For these 4 people, we have some separate procedure, separate form. But other than that, any person who wants to obtain registration under GST, a single application form, GST REG 01. This form has 2 parts, part A and part B. Now, when you go to GST portal and you go for new registration, part A opens. In that, you have to enter your PAN number. Now, that PAN number will be validated from the CBDT database online. Now, the amendment says that earlier you were allowed to enter any mobile number, any email ID for verification purpose under GST. But now, your mobile and your email, which is linked to your PAN, can only be validated, can only be authenticated. So here we see that PAN number is validated online by CBDT database and shall also be verified through separate OTP. You get different OTP on your mobile number and separate OTP on your email ID, but those mobile number and email IDs are linked to the PAN, means any other mobile or email you now cannot verify under GST. Also, you select the state UT wherever you want registration. On submission of this, CAPTCHA code comes, you enter the CAPTCHA code and your part A is submitted. If your OTP is validated, then a TRN number is generated, which is a temporary reference number. Now, using this temporary reference number, you open part B of the registration form. Now in part B, you have to fill all the details that you can think of. Your name, your business details. If it's a company, then director's details. If partnership firm, then partner's details. The address of your registered place of business. What goods services you are going to supply. Is there any additional place of business? Your bank account details. The HSN code of the goods that you are going to supply. So every single thing that you can think of, all the details are given under part B of the GST registration form. Now let's talk about Rule 10A. So, bank details are also required when you furnish part B. But let's say you are starting a new business. You go to a bank to get your bank account opened. Bank says that you bring your GST registration certificate. You go to GST portal to obtain registration. GST portal says give your bank account details. Then how to do? So, your government came out with Rule 10A saying that it is okay, we will give you registration certificate even without you entering the bank account details. So bank account details may be entered later. So once we have given you RC, then within 45 days or due date for furnishing first return, whichever is earlier. So once we will give you registration certificate within 45 days or your due date of furnishing first return, whichever is earlier, you submit your bank account details. It is okay if you submit later also. But if you are TDS deductor, TCS collector, or here, when proper officer had suo motu registered you, means you are already doing your business, already having bank account, then why you require 45 days? So here, when proper officer suo motu registers you or your TDS deductor or TCS collector, then in that case, then in that case, you have to, with submitting your registration application only, furnish bank account details. For other people under Rule 10A, it is okay even if you furnish bank account details later after obtaining RC within 45 days or due date for furnishing your first return. Understood everyone? Yes, ma'am. Now, Aadhaar authentication, not very important. It is saying that people who are already registered or who are obtaining new registration will be required to undergo Aadhaar authentication, or at least, if not possible, then furnish the proof of Aadhaar number for new registration. We can also give registration based on physical verification if Aadhaar number not available. And for these people, no applicability of Aadhaar authentication. For a company cannot have Aadhaar number. Partnership firm cannot have Aadhaar number. So the directors of company or the partners of partnership firm or the Karta of HUF will get Aadhaar authentication done. Then we understand that for revocation application and for refund application. For revocation application and for refund application, for these two applications, you compulsory have to first undergo Aadhaar authentication. If your Aadhaar authentication is not done, we will not allow you to file revocation application or file a refund application. If you want to file refund application or revocation application, mandatory Aadhaar authentication is required. Right. Then, once you opt for Aadhaar authentication, what will be your date of filing appeal? Now see, how is Aadhaar authentication done? Once I submit my part A and my part B of registration form, and if I tick yes that I want to get my Aadhaar authentication done, I get a hyperlink on my registered mail mobile. I have to open that link, enter OTP. OTP comes on my registered number, and my Aadhaar is authenticated. So very much simple procedure, takes not more than 10 seconds to get my Aadhaar authentication done. So while furnishing my application, if I had opted for Aadhaar authentication, in that case, the day when I get my Aadhaar authentication done, or maximum 15 days government can wait. So today I submit my part B and I tick yes, that yes, I will do Aadhaar authentication. I've got a link on my mail, but I am not doing Aadhaar authentication only. Till how many days government is going to wait? So they are saying either the date when you complete your authentication after submitting part B or 15 days from submission, whichever is earlier, we will consider your date of filing application. Why this date is relevant? Because understand, from this date now we are going to see that within 7 days, within 21 days RC has to be given, etc, etc. So this date of filing application is obviously important. Now what is this amendment saying? Amendment is saying that if based on risk analysis or the data with government, portal identifies you to be a risky person, means let's say before 10-15 years you had done some fraud and now you are trying to take registration, so government is doubting on you and you are a risky person. In that case, government can physically call you at the GST center, take your biometric authentication done, means they'll tell you to put your fingerprints and everything, and all the documents that you upload while filing registration application, they can physically tell you to bring the original documents just for their satisfaction. So in that case, you will have to go for biometric based Aadhaar authentication. You will have to allow them to take your photograph. You will also take all the original copy of documents along with you, and once they see everything, then only they will say that your application is being filed. So if you've opted for Aadhaar authentication, then GST department can call you physically to get your biometric Aadhaar authentication done, to take your photographs, to tell you to bring all the original documents, and after completion of this only, your application will be deemed completed. But for now till date, this provision is applicable only in the state of Gujarat. So except for the state of Gujarat, this does not apply to any other state or UT. Therefore, it is not that much relevant for exam point of view. Understood? Now, okay, this all you can just self-read now, because taking this will unnecessarily take a lot of time of marathon. It is not relevant for exam. That if your authentication is successful, there is no deficiency, within 7 days you are given RC, if not deemed RC. If there is deficiency, they give you notice. You can reply to the notice within 7 days. If everything is satisfactory, within 7 days you get a registration certificate, or otherwise PO will reject. But if your authentication fails or 15 days has lapsed but you have not done authentication only, we will treat it same as if you have not opted for authentication only. And when you do not opt for authentication, it is very much simple. What is the need to wait? The day when you submit part B, we understood that you are not going to do authentication, and that will only be your date of filing application. So here within 30 days, officer will issue you a notice. If there is some deficiency or come for physical verification, and after physical verification you will be granted registration under GST. All of these things are simple. If you are a non-tech savvy person, you do not know how to upload documents and all, you can go to GST Facilitation Center with your physical documents. They will scan and upload them for you on the portal. Effective date for registration. Rule 10 simply says that I know that the day when I become liable, within 30 days from that date, the day when I become liable, within 30 days from that date, I am required to make application. If I make application within 30 days, then my original date, RC can be granted on any day, my original date of becoming liable will be my effective date of registration. But if I apply after 30 days, if I apply after 30 days from date of becoming liable, then whenever I actually get the RC, that will be my effective date of registration. In case of voluntary, from where to calculate 30 days? So no point of that. In case of voluntary registration, whenever you are being granted with RC, becomes your effective date of registration. So see here, SS Limited exceeded turnover of 20 lakh on 1st November 2023. Applied for registration on 20 November, means within 30 days I apply for registration. Now my RC grant date will become irrelevant. Original date when I become liable was 1st November. Therefore, my effective date of registration will be 1st November only. And had I made application, let's say on 2nd December, means after 30 days, then in that case, my effective date will be the date when I got the RC, which is 5 December. Done. GST number is a 15-digit number. First 2-digit state code, next 10-digit PAN number, next 2 entity code, and 1 is checksum character. So from the date of grant of RC, within 3 days, you get your GST number. You have to display your registration certificate at a prominent place at your place of business, and also your GST number at every notice board or sign board. Done. Now let's talk about special procedures for TDS and TCS. As in the beginning of procedure, I told you that this procedure is applicable to everyone except NRTP, because NRTP can be granted registration on the basis of documents other than PAN also, because they do not have a PAN number. Same goes to OIDAR. So OIDAR and NRTP person are not having PAN. Therefore, for them, other documents are also allowed. Now, TDS deductor and TCS collector. Okay. See, understand, their application form is GST REG 07. Normally GST REG 01. But if you are TDS deductor or TCS collector, you make application in GST REG 07. And once you file GST REG 07, the proper officer has to take action within 3 working days. So within 3 working days, either notice to be issued or registration to be granted. Now, what is a point of difference here? They are saying, as a TDS deductor or a TCS collector, I might be liable in multiple states, but I might not be having registration or a place of business. I might not be having, not registration, sorry. I might not be having place of business in that particular state. Then what to do? How to take registration? Here government is saying, let's say I have only one office in entire India, which is in Chennai. So only one office in Chennai, in Tamil Nadu. But I have to take registration in multiple states as TDS deductor or TCS collector. Then here government is saying it is okay. Whatever state, let's say I want to take registration in Maharashtra. You select Maharashtra in part A while filing application. But in part B, when you give the details of place of business, you give the details of your Chennai head office, it would be fine. So your part A and part B, both places can be different, and this is allowed in section in GST REG 07. When you have to take registration in multiple states, but you are not having place of business in multiple states. And here, registration may be cancelled. What is this amendment saying? That earlier the point only said that if proper officer is satisfied, that no more TDS, TCS liability is there, they can cancel your registration also. There was no point that I as a registered person want to go and apply. Let's see, I want to close my business. I do not want to continue as a TDS deductor, TCS collector. There was no point which would allow request to be made. So here government said that proper officer satisfied, okay. But registered person can also go and make a request that please cancel my TDS, TCS registration because now I am not eligible or I am not liable to collect TCS or TDS anymore. Done. Then 26 talks about deemed registration. See, we started with 2222. 2222 simply says that you are a person liable. You started earning double means you have to take registration under GST. 22 said liable, 23 said not liable. 24 said what is this liable, not liable going on? Shut up and take compulsory registration. Right. Then 25 said, okay, I have to take registration, but what is the procedure to take registration? Okay, now this big procedure we saw: bank details, Aadhaar authentication, part A, part B, GST 1, RG 01, RG 07. So this big procedure, would you be willing to do this procedure twice? The answer is no. So section 26 says that, okay, we know a lot of big lengthy procedure given in 25. For 26 talks about deemed registration, that you only take registration under SGST Act, and we will deemed assume you to be registered. We will deem register you in all other acts in CGST Act also. So section 26 says that registration certificate granted under SGST would deemed to be granted under CGST also, and if your registration is cancelled under SGST, it will deemed to be cancelled under CGST also. Section 26, one line section, deemed registration. Done, ma'am. Section 27 specifically talks about casual taxable person and non-resident taxable person. Now, who are these people? CTP and NRTP occasionally undertake transactions. Most important word is occasionally. Means it is not their normal place of business. They have come, let's say, for a fair, for an exhibition, where for 1 month, 2 months, 15 days, 20 days, 4 months, they want to come here, supply certain goods, services, and go back to their original place. So person is occasionally undertaking transaction of what? Transaction of supply. Supply of what? Supply of goods, services, or both, whether as principal, agent, or any capacity. Now, if I do not have a fixed place of business in India at all, I am NRTP. But I am coming for business purpose. I might have my place of business in some another state. I am normally registered in Maharashtra, but there is an exhibition, a fair going on in, let's say, Kerala. I want to go to Kerala for just 15 days in that fair. Then in that particular case, I will be considered, but business test is absent in NRTP, right? So if I ask you the definition of CTP, you will say a person who occasionally undertakes transactions involving supply of goods, services, or both, whether as principal, agent, or any capacity, in course furtherance of business in a state where there is no fixed place of business. I am a CTP. But for NRTP, everything remains same. These two lines remain same, but the business test is absent in NRTP. Just if I come and start supplying goods, services in India, and I do not have a fixed place in India, you do not check the business condition, the person will become NRTP by default. These are the definitions of CTP and NRTP. Now we know that you have to apply 5 days prior to come and start commencing your business. Also, your application will be, your registration will be valid till what date? Time. Let's say I say that for 20 days I have come. 20 days exhibition. So whatever period I specify, or maximum 90 days. Whatever period I specify, or maximum 90 days, whichever is earlier. Let's say I say 100 days. Government will not allow 100 days. Maximum 90 days. Or if I say lesser period, then that lesser period. Can this be extended, ma'am? My fair is for 100 days. My fair is for 100 days. What to do now? It is okay. One-time extension. Only one-time extension of further 90 days is allowed to you. So maximum 90 plus 90, 180 days you can stay as a CTP or NRTP. Now understand, 180 days is almost a half year. If you are staying for more than half year here, then it is not occasionally, right? Now you've become a person of your only. So you better come back. It is okay. You again cancel your registration, but you will have to now take a regular registration. Also, whatever is your estimated tax liability, you have to advance deposit it along with application. Then only we will give you registration as CTP or NRTP. Alright. Then section 28. See. Started with 22. 22 liable. 23 says not liable. 24 talks about compulsory registration. Block of 3. Then 25 says okay, understood compulsory registration, but what is the procedure? Understood compulsory registration, but what is the procedure? 26 said, oh, this big procedure, I am not going to do it twice. So we will take deemed registration under 26. 27 talked about CTP, NRTP, second block. Then we have the third block of 3 section, 28, 29 and 30. Now 28 says, okay, understood, we've taken registration. What if I want to amend something? My address has changed, my email has changed, or my mobile number has changed. Then in that case, section 28 talks about amendment. 29 says, what is small amendment things you are doing? Just cancel the registration only. So amendment 28, cancel 29. Oi ma, my registration got cancelled. My registration got cancelled. Now I want to apply for revocation of cancellation. My registration got cancelled. Now I want to apply for revocation of cancellation, section 30. So you remember this block wise. 22, 23, 24, liable, not liable, compulsory. 25, 26, 27, procedure deemed city penalty. And 28, 29, 30, amendment, cancellation, and uima, it got cancelled. So therefore now revocation of cancellation. Right. Remembering the sections, everyone. Done. Very good, Richa. Yes, for section 28 now. If I want to amend my core field means some important. Let's say I am admitting a new partner, or let's say I am changing my address, my legal name. These are all core fields. In this case, I cannot self-amend things, means I have to apply. I will have to take permission of proper officer. So if I want to make any amendment in my core field, I will apply within 15 days of such change. Proper officer will take action within 15 days. If there is a notice, I reply, and ultimately officer will take action within 7 days from the reply and allow me to amend my core field. If non-core field, it's very much simple. I want to change my mobile number, email ID. It is okay. No need to take any approval from proper officer. You just submit an application online and your RC shall stand amended. But if you want to change your PAN or your state, see, within Gujarat, if my address is changing, it is core field. But I am changing my address from Gujarat to Maharashtra. In this case, you cannot continue with same registration, because understand GST number. First 2 digits are state code. Next 10 digits are PAN. If your state or PAN changes, your GST number changes. Therefore, you need to take new registration and you have to cancel your existing registration. Go for new registration in case of change of PAN or state or UT. Done. Now 29 talks about cancellation, suspension of registration. Now cancellation can again be based on your application or suo motu by proper. So either I can apply, or if I have died, my legal heirs, my representatives can apply for cancellation, or proper officer can also suo motu cancel my registration. So these are what is happening. Once again. If iPad also hangs, then what to do? Okay. So these are these general circumstances where I decide to discontinue my business, or let's say I've transferred my business, so the transferee will now take registration, or there's a change in constitution, or I'm no more liable under 20 to 24. I had opted for voluntary registration. Now I want to opt out of voluntary registration. So these are all the general cases where I can just apply and get my registration cancelled. But proper officer can suo motu also cancel my registration, that too from a retrospective date also. In what cases? When I have contravened Rule 21. What is covered in Rule 21? I do not conduct business from my declared place of business. I issue fake invoices, means there is no underlying supply. I am just issuing fake invoices. I am violating anti-profiteering provisions. I am not giving bank details in those 45 days or due date of first payment, whichever is earlier. Means government trusted me and gave me registration certificate saying that within 45 days you give bank details, but I am not giving. They can cancel my registration. Or I have violated section 16, availed ITC. I have furnished more sales in GSTR 1 as compared to GSTR 3B. Why? Because no payment required in GSTR 1, payment required in 3B. So I furnished all the details in GSTR 1 so that my recipients can get ITC. But I have not paid taxes under 3B. Or I have violated Rule 86B. Or let's say there is this point saying that I have not furnished returns. I have not furnished returns for a specified period given in Rule 21. So what are these periods here? If I am a normal registered person, not a quarterly taxpayer, a normal taxpayer, and I do not file my 3B for 6 continuous months. So for 6 consecutive continuous months, if I have not filed my GSTR 3B written under section 39, then proper officer can suo motu cancel my registration, giving an opportunity of being heard to me. Or let's say I am a quarterly taxpayer, QRMP scheme person. In that case, 2 tax period. 1 tax period would be 1 quarter. Now 2 tax period essentially means 6 months only. But how you write is for a normal person 6 months. For a QRMP scheme person 2 tax periods. If you are not furnishing GSTR 3B for 6 months or 2 tax period in case of in case of QRMP scheme, in that case proper officer can suo motu cancel your registration. If you are a composition person, only 1 return you have to pay, or you have to file, which is GSTR 4. So on annual basis, you file only 1 return GSTR 4. So from the due date of GSTR 4, which is 30th April, within 3 months, from the due date of GSTR4 within 3 months. If you are not filing your GSTR4, then proper officer can cancel your registration. So, composition person not furnishing return for a financial year beyond 3 months from the due date of furnishing return. Done. If I have taken voluntary registration but I have not commenced my business only, I have taken registration saying that yes, I am starting my business, but it's been 6 months, I'm not starting my business. Or let's say I had obtained registration by means of fraud, willful misstatement or suppression of fact. All of these cases, proper officer will just give me an opportunity of being heard and cancel my registration. Now till the cancellation proceedings are going on, my registration is suspended. So if I apply, then whatever is my application date or the date mentioned in application, whichever is later, from that period suspension begins. When proper officer suo motu does, then whatever date proper officer determines will be my suspension date. Now after suspension, even if my registration is cancelled or not cancelled, both of the cases, so cancellation proceedings are going on, till then there is suspension. Now my registration can get cancelled also, cannot get cancelled also. Both of the cases, suspension will be revoked from the original date then when it was levied. See, let's say March suspension started, then cancellation proceedings were going on. June it was decided my registration is not cancelled, so it will not be cancelled retrospectively from March only. Or let's say they decide my registration is cancelled, then it will be cancelled from March only. So suspension will always be revoked from the date when it was applicable in either of the cases, if my registration is cancelled or not cancelled. And if my registration is not cancelled, then in that case, this intervening period, suspension and this order, whatever supply I have made, I have to issue revised tax invoices with respect to same. This revised tax invoices concept we'll study in the tax invoices chapter. Also, if your registration was suspended because of non-filing of return, so until and unless you file your pending returns, your revocation, your suspension cannot be revoked. Understood? Now, after cancellation also, so say for example, November 2023, my registration got cancelled. So after this period, so for December 23 and onwards, I cannot file return. For any period after cancellation, I cannot file returns. But for period before cancellation, I can file return later also. So October 2023, I had not filed my returns. From here, suspension or cancellation, anything begins. I cannot file return after this period. But for October 23, I can file return in December 23 also. No one is going to stop me. But for December 23, I cannot file return. So during the period, your suspension or cancellation is going on, for that period you cannot file return, but for earlier period you can still continue to file your returns. Also, if any liability arises, so my registration got cancelled in Jan 2024, but in Jan 2026 there was some liability with respect to, let's say, December 2023. I cannot say that my registration is cancelled. They are saying even if any dues are determined before or after cancellation, for a period prior to cancellation, you still continue to be liable for the same. You cannot simply escape by saying that I am not registered now. You were registered back then, means you are still liable for the same. Voluntarily, registered person can apply in REG 16 within 30 days. That is all fine. You can just self-read. Right. And suo motu department can also cancel. They will not cancel without giving show cause notice. They will give you show cause notice, 7 days to reply. If reply is satisfactory, PO will drop the proceedings. Reply not satisfactory, they will cancel you. And if you had not filed returns, that was the problem, then what reply you want to give? Shut up, quickly file all the returns and inform the PO that I have filed the returns, and PO will drop the proceedings. Understood? So when your registration is cancelled, whatever ITC you had availed for your inputs, you need to reverse that ITC, and for capital goods also reduced ITC with respect to 60 months or tax on transaction value, whichever is higher. More details on this in ITC chapter. Understood? And last, section 30, talking about revocation of cancellation. Now section 30, revocation of cancellation, says that first of all, understand, if I had applied for cancellation, if I on my own went to proper officer, or my legal hires or my representatives went to proper officer to get registration cancelled, do not do masti with department. You do masti, department will do grand masti. So if I had got my own registration cancelled, in that case, I cannot apply for revocation. But if proper officer suo motu cancelled my registration, In that case, I can go and apply for revocation, that officer, please, you had cancelled my registration, please revoke it back. So here, procedure for revocation when suo motu cancelled by PO, write here that voluntarily if I had applied, in that case, no revocation possible. Now, when my registration got cancelled suo motu by proper officer, within 30 plus 30 days, I can go and apply that please revoke my cancellation. Once I apply, within 30 days, either my application was satisfactory, proper officer will revoke the cancellation. But if my application was not satisfactory, they will issue me a show cause notice, to which I will reply within 7 days. And after my reply, within next 30 days, whatever officer wants to do, if my reply is satisfactory, accept, not satisfactory, dispose of, and do not revoke my registration. So simply when proper officer had cancelled my registration suo motu, I have this option to apply for revocation of cancellation and get my registration restored. But if everything is satisfactory, if not, there is no obligation on officer to restore. He can any day reject your application. Right. And last 2 points saying that, let's say I got an order of cancellation on this date. So on let's say on 20 March 2023, I got order of cancellation saying that I am cancelled from this date only, from 20 March. So for subsequent period, from this date, I cannot file any return. But any pending returns I can obviously file after this period also. Here government is saying that returns for this period, let's say I had stopped filing returns from November 2022 only. So all the returns from November 22 till March 3, 20 March, you first file, then go and apply for revocation of cancellation. And once your registration is revoked, once cancellation is revoked, then for this period also, from here within 30 days, you file all the returns. So if your cancellation is revoked later, then from the date of cancellation till the date of revocation, you would not have filed returns. So from here within 30 days, quickly file all the pending returns. But let's say I got cancellation order on 20 March 2023, but retrospectively PO cancelled me from November 22 only. PO said that you did not file returns from November, you are cancelled from November itself. In this case, this is my date of cancellation. Now after date of cancellation, you cannot file any return. So here government is saying that, okay, without filing these returns, you first go apply for revocation. Once your cancellation is revoked, in that case, within 30 days from here, for this entire period, you file your pending returns. Very much simple. If date of cancellation and effective date are same, then for all pending returns, you first file return, then apply for revocation. But here, since cancellation is from a retrospective date, I cannot file return only. Then I first apply for revocation, and once my order for revocation comes, within 30 days from that particular date, what I do is I file all my pending returns. Yes, everyone, exact 1 hour and we have completed entire registration chapter. I had told you that I will skip certain points, but ultimately I did not skip anything, only except for very small 1 or 2 procedures. Other than that, entire chapter, entire registration covered in 1 hour. Done, everyone? Confident? Clear with me? 71 pages we have already completed. See, the book is 350 pages, of which 270 pages are GST and remaining pages are customs. Now from customs also, valuation, duty drawback, and warehousing, if I'm not wrong. 3 chapters I've already uploaded. Entire revision along with all the question answers already there on YouTube. So out of the 100 pages of customs, more than 50-60 pages we've already covered. So remaining portion tomorrow, and plus of 270 pages of GST, 70 we are done. Out of 200 refunds and certain pages we are going to do tomorrow. So I can say that we are 40% through of our today's marathon. Yes. Understood. 71 pages done. Are you feeling confident that in 4 hours, we are able to revise every single thing? None of section I have skipped, and also I am trying to make you learn the sections along with me. So 4 hours, 71 pages done. So obviously very much easily in 2 days we can cover all 350 pages, and that 1.5 day before exam you can simply cover all the provisions, because now this marathon you are not going to listen on one speed, right? You will increase the speed to 1.5x, means this 10-hour marathon for you later would be a 6 to 6.5 or 7 hours marathon only. Yes, give me heart, fire, bomb emojis in the comment section. Just make the comment section lit, and then let's go for a lunch break, and we will resume in half an hour. So it is 12:06. We will resume at 12:35 to 12:40 somewhere. Done, everyone? Quickly, I want to see a lot of heart, fire, and bomb emojis in the comment section. And then just rate your confidence that for these 71 pages, how much percent you feel you are confident out of 100. Quickly give this rating to yourself. Everyone. Chalo. And also today's Teachers Day, I guess there are some 7950 or 7935 subscribers currently to the channel. Just make it to 8,000 today. A Teachers Day gift that I'm asking from you all to make the subscribers to 8K. Anyways, we have a target of 11K subscribers till November 23 examination. We have reached to 7.93 or 7.94K. I am not sure what is the rate now. But make sure that by the end of today, by the end of Teachers Day, we all make it to 8K. So if you haven't subscribed the channel, please do it. Like the video, share it with your friends. Yes. So let's go on a lunch break, resuming at 12:35, 12:37 or 12:40 whenever we are all back. Done, everyone. Lunch. Now no one is going to sleep, right? And ma'am, we had overeating and now we want to sleep. No, lunch break was to get yourselves energized. Then yes ma'am, then let's start with our next chapter, which is tax invoice, credit and debit notes. As such, the chapter is C category, but only section 31. Section 31 and e-invoicing, like certain provisions. Again, I would not consider section 31 and e-invoicing to be A category as such, would consider it to be B category. Because for you to understand time of supply chapter in the best possible manner, you need to know tax invoice, debit note and credit note provisions. Unless you know tax invoice, debit note, credit note, you will not be able to solve time of supply questions. So for that understanding purpose, I would consider this as B category and e-invoicing again B category. Other than that, entire chapter is a C category chapter only. So we will be focusing only on important areas. Everyone here, yes ma'am. Jitin, Priya, Parvati, Ayush, Richa, Sachin. Yes ma'am. Sure. So let's start with who can raise a tax invoice. First of all, the name in itself suggests tax invoice. Tax invoice means an invoice which is levied, which is issued on some taxable goods or services by a taxable person. So a registered person. First of all, only a person who is registered under GST can issue a tax invoice and can issue it for either supplying taxable goods or services or receiving taxable goods services from unregistered person, means the normal thing as we call it self-invoicing. Let's say under section 9(4), I am a real estate sector person. I have to pay tax under reverse charge mechanism, but my supplier is unregistered. In this case, what I will do, I will issue a tax invoice for receiving taxable goods or services. Here, everyone, 1 second. Okay, done. Sure. Now section 31, time limits for issue of tax invoice. Very much simple with me here. First of all, let's talk about goods. So if I'm supplying goods, what is the last date till which I should ideally issue a tax invoice? So they are saying normally. Normally, if my goods involve movement, if my goods involve movement means I have to deliver goods from this particular place to some another place. In that case, before or at the time of removal. Before or at the time of removal, I am required to issue a tax invoice. But if my goods does not involve movement, now I want all of you to answer. Come on, everyone. I want all of you to answer. If my goods does not involve movement, means the customer will come to my place and take delivery. In that case, before or at the time of delivery or making the goods available, I am required to issue tax invoice. But if there is a case of continuous supply of goods, there's a case of continuous supply of goods, then in that particular case, whenever is the successive statement or payment, whenever is the successive statement or payment being issued on that particular before or at that time, you are required to issue a tax invoice. If your goods are sent for sale on approval or return basis, if my goods are sent for sale on approval or return basis, then whatever is the original time of supply or maximum what I can allow is 6 months, whichever is earlier will be considered as my due date, final due date to issue tax invoice. If I talk about services, then in case of services, normally after supply of service also you can issue invoice. So before supply of service, obviously you can issue invoice, but after supply of service also you can issue invoice. But after how many days? After 30 days of provision of service. Now this 30 days becomes 45 days. These 30 days becomes 45 days in case of NBFC, bank, financial institution and insurance company. So for NBFC, bank, financial institution and insurance company, you get a time period of 45 days after supply of service to issue tax invoice. Normal cases 30 days. Okay. If it is a case of continuous supply of service, if it's a case of continuous supply of service, then in that case, you ask yourself, is due date of payment ascertainable? Is due date of payment ascertainable? If the answer is yes, then on or before that due date of payment, you issue tax invoice. If due date of payment is not ascertainable, means whenever you actually receive the payment, on or before that date you issue tax invoice. Or if your payment is not linked to a date, but your payment is linked to completion of an event, payment is linked to completion of an event, then in that case, on or before that event gets completed, you are required to issue a tax invoice. I normally give this trick to remember. You went and proposed to him, right? Let's say Richa proposed her crush. Now in that case, Richa's crush told her that, Richa, you please come on 10th of next month. I need some days to think about it. On 10th of next month, I'll give you answer. Means he has given a due date. Now in this case, on or before due date. Now Richa's crush told Richa that I need some time to think, I'll get back to you. I'll get back to you means here no particular date is given. Then whenever he comes to give answer yes or no, means whenever you actually physically receive the payment, on or before that date, you issue tax invoice. Or let's say he told Richa that you clear CA, the day I see pass in your result, at that point of time I will give you reply, or at that point of time I will give you yes. Board not visible. Okay, sorry. What happened? Once again. Done visible now. It's fine means all of these things you already knew. So I think it's fine even if you've not seen, right? So in case of goods, we see that normally on or before, when removal is there, so on or before removal. If no removal, then on or before delivery. If it is continuous, then successive statements or payment. Sale approval basis, time of supply or 6 months, whichever is earlier. In case of services, before or after 30 days is also fine, and these 30 days will become 45 days for bank, financial institution, NBFC and insurance company. Then in case of continuous, if due date of payment is ascertainable, on or before due date. If due date of payment is not ascertainable, when you receive the payment. And completion of event, we were talking about Richa. So he told Richa that when I see pass in your result, on that event I will tell you yes. So here on or before the result date, invoice is required to be issued. So these are the last dates to issue invoices. But we have a proviso here. Specifically for bank, NBFC. See, all of these things we've covered. Now for services. Okay, and whenever the service ceases in between, whenever there's a cessation of service, then till cessation, whatever service you have provided, you will issue a tax invoice for that particular amount till that date. Right. Now let's talk about proviso to Rule 47. It says insurance, banking company, NBFC, financial institution and telecom operators. If these people are making supply of services to their distinct person means same PAN, separate registration. So if insurance, banking company, NBFC, FI or telecom operator are supplying services to their distinct person only, then these 30 days or 45 days provision will not apply. Here they have an option. See, if they want to follow this provision, they can. But still here they have an option that either when the supplier is recording in books, at that point of time or before that also you can issue tax invoice, or all invoices together at the end of quarter, before the expiry of quarter in which supply is made, before expiry of that particular quarter, you can issue all tax invoices together. So very much simple. Insurer, banking company, NBFC and financial institutions, if you are making supplies to your distinct person only, not other. If other people, then these 45-30 days limit will apply. To your own distinct person, you are supplying any service. In that particular case, you may either on or before when the supplier is recording in books, or ultimately before expiry of quarter, you can issue all invoices together. Right. What are the particulars of a tax invoice? There is no fixed format, right? Anyone can follow any format they want. Just that all of these details should be there in the tax invoice. Name of supplier, address of supplier, serial number, date of issue, address and everything. Now here, this amendment point, let's see. If I am supplying to a registered person, obviously that registered person would be wanting ITC. So I would be mentioning GST number, name, address, everything of recipient on my invoice. But if I am supplying to an unregistered recipient, in that case, if my value of supply is greater than equal to 50,000, if my value of supply is greater than equal to 50,000, in that case, I have to mention the name, address of recipient. Even if the recipient is unregistered, value exceeds more than equal to 50k, I will mention name and address. If the value is less than 50k, there is no mandation, but still, if recipient wants, if the unregistered, there's no compulsion, but if the unregistered recipient wants, he can still request that you please write my name and address, and the supplier will write the name and address. This was there earlier also. What is the amendment? Amendment says that if any supply of service is made online through an e-commerce operator, through or by an e-commerce operator, or OIDAR services to an unregistered person, in that case, forget about this 50,000 limit. Once again, if any supply of service is supplied by or through ECO or an OIDAR service provider to an unregistered recipient, in that case, you forget the 50,000 limit. Every time you will be required to mention the name, address along with the PIN code of the recipient. So here, registered person shall contain the name and address of recipient along with PIN code, and the name of the state and the said address will be deemed to be there on the records of the supplier. This is the amendment. Other than that, HSN code requirement, if aggregate turnover preceding financial year was less than equal to 5 crores, then B2B supplies 4-digit HSN code. B2C supplies, you have an option. Either you mention HSN code. If you don't want, you do not mention HSN code. But if you are mentioning, then please at least mention 4-digit. So, aggregate turnover greater than 5 crore, any supply 6-digit. Less than equal to 5 crore, B2B 4, B2C you have an option. Either you don't give HSN code only, but if you are giving, then please give 4-digit HSN code. All of these things, simple description, quantity of goods, taxable value, place of supply, is RCM applicable, all of these things, signature and everything, done. Manner of issuing invoice, for goods, triplicate, for services, duplicate, because there's no transporter in services. If you're exporting, export can be with payment of taxes, without payment of taxes, you just mention on the invoice, whatever it is. Special cases, revised tax invoice. See, one we had seen in suspension and another. Let's say, my effective date of registration is this. I applied within 30 days only. I got RC on a later date, but effectively registered from an earlier date. Whatever supplies I have made during this period, tax invoices in respect to these supplies are required to be issued within 1 month from the grant of RC. So what I will do, all the revised tax invoices for supplies pertaining to effective date till date of RC, within 1 month. Within 1 month from the RC, I will issue revised tax invoices. Now see, for all intrastate B2C supplies, now understand, B2B supply, be it intrastate or be it interstate, for every single B2B supply, I will issue a revised tax invoice. But for B2C supplies, I have an option to consolidate the revised tax invoices. Now they are saying, for all B2C intrastate supplies, you can issue a single consolidated revised tax invoice. But for B2C supplies, interstate, you need to check if the value of supply exceeds 2.5 lakh. If the value of supply, B2C supply, exceeds 2.5 lakh, interstate, you cannot consolidate it, you issue separate. But for all supplies less than equal to 2.5 lakh, you can consolidate. So see, for all intrastate supplies, consolidated revised tax invoices may be issued for all supplies made to URP. All supplies made to registered person, separate invoices only required. For interstate also you can issue consolidated revised tax invoices, but no consolidated revised tax invoices if the value exceeds 2.5 lakh. And remember, in none of the cases ever, be it intra, inter, any supply made to RP, you cannot issue a revised tax invoice. If your value of supply is less than 200, recipient is not registered and recipient does not require invoice, you are not required to issue tax invoice. But at the end of the day, what you will simply do is issue a consolidated tax invoice for all of such supplies for which you have not issued invoice. 3 conditions: value of supply less than 200, recipient unregistered, and recipient is not requiring invoice. But this option is not available with multiplex screens. Bill of supply, if I am making any exempt supply, or I am a composition person, means I cannot collect tax, therefore I cannot issue a tax invoice. In whatever document I issue is known as bill of supply. Rule 46A says that if I am a person who is supplying some taxable plus exempt products to URP, if I supply a combination of taxable as well as exempt products to a registered person, I issue separate invoice and separate bill of supply. One second. But if I If I supply taxable as well as exempt products to an unregistered person, I have an option to issue invoice cum bill of supply, means a single document which would be called as an invoice cum bill of supply. Amendment simply says that this single invoice cum bill of supply should contain all the relevant particulars, means whatever are the particulars of invoice and whatever are the particulars of bill of supply, all of these particulars should be present in an invoice cum bill of supply. But this you can issue only to an unregistered person. No invoice cum bill of supply can be issued to a registered person. Whenever you receive advance, you issue receipt voucher. If at the time of receipt of advance you do not know whether it will be interstate, intrastate, or what rate will be applicable, you can by default treat it as interstate, and IGST 18% receipt voucher you can issue if you do not know. But if you already know what will be the rate and what will be the nature of supply, you issue receipt voucher accordingly only. Now, once you have issued a receipt voucher, you have received advance, but there is no subsequent supply being made, and there is a case where you have to refund the advance received. In that case, you issue a refund voucher. So if no supply or tax invoice against the advance received, you issue a refund voucher. Then talking about self-invoicing. If you receive any goods or services from an unregistered person on which you are required to pay tax under reverse charge mechanism under section 93 or 94, in that case, you being a recipient of taxable supply where you are paying tax under reverse charge, but your supplier is not registered, therefore supplier cannot issue tax invoice. In that case, you can self-invoice. You can issue a self-invoice, and this has to be issued on the date when you receive the goods or services. Right. Payment voucher. For any of the inward supply that you receive, and you pay tax under reverse charge mechanism, whenever you are making payment to your supplier. Now here no RP URP criteria. If I am a person receiving certain goods or services inward for reverse charge mechanism, whenever I am making payment of consideration to my supplier, at that point of time I will issue a payment voucher. So to be issued by RP when payment made for RCM supplies to registered or unregistered supplier. If there is any invoice, debit note, whatever issued in respect of, let's say, in accordance with fraud or detention, seizure, confiscation, obviously you have to mention that no ITC will be admissible for this particular invoice. Delivery challan, the cases where there is movement other than supply, or let's say I am moving liquid gas where I do not know when the actual recipient, see the gas evaporates while in transit, so what actual quantity my recipient is going to receive, I do not know. Or let's say I'm sending goods for job work or for other than supply reasons. In all of these cases, I cannot issue an invoice because there is no supply, but I can issue a delivery challan. So I move the goods based on delivery challan and e-way bill. Understood. Okay. So now rule 54 talks about suppliers permitted to issue any document other than tax invoice. Now here, these four people, banking company, NBFC, financial institution, and insurance. These four people are there, plus two transporters. One GTA, means transportation of goods, and another transportation of passenger, and multiplex screen. These people, these four category of people have an option to issue any document, and call it as a invoice. So suppliers permitted to issue any document other than tax invoice means they do not need to typically issue a tax invoice. Like if you go to a multiplex screen, they would just give you a ticket. If you happen to travel in a bus, the conductor would just give you a small ticket. That is also okay. We will assume that all of the compliances have been done. So insurer, banking company, financial institution, NBFC, GTA for transportation by road, transportation of goods by road, then supplier of passenger transport service, and multiplex screen. These people are permitted to issue any document in lieu of tax invoice. And for ISD, input service distributor, also in order to distribute the credits, have to issue an invoice. Right. This was all about section 31. So till 30 we completed in registration chapter. 22 to 30 we had completed in registration chapter. Now once you take registration, what will be the first thing that you are going to do? You will be issuing a tax invoice, right? I take registration, I supply goods services, and now I issue a tax invoice under section 31. Now section 32 says that unregistered person is not authorized to collect tax. Means the collection of tax from customer can only be done by a registered person. So prohibition of unauthorized collection of tax, URP not to collect tax. And 3333 section says that whatever document, invoice, anything that you are issuing, please indicate the amount of tax on it. So amount of tax has to be indicated in tax invoice or any other document that you are issuing in relation to any supply being made. So 33 talks about tax invoice, all the time limits and everything, that till what date you should ideally issue tax invoice. Then 32 talks about URP, unauthorized to collect taxes, and 33 says that amount of tax has to be indicated on the document. Then let's talk about e-invoicing. E-invoicing, very much simple. If you want to voluntarily issue e-invoice, can you do so? The answer is no. Only the person who are notified, only the people. See, if your exam is in November 23, then this limit is applicable. For May 24, it is amended. But the marathon is for November 23 only. Therefore, we are not talking about the amendments that have come recently. So here, for all registered businesses with aggregate turnover since 2017-18, when GST came into force, till date, if in any financial year, not cumulatively, in any particular financial year, my turnover has exceeded 10 crore rupees, means I become a notified person. Yes, means I become a notified person who will now be required to issue e-invoicing. Right. Situations where e-invoicing is applicable. This is kind of important and we remember it by pairs. So let's say for all B2B supplies, e-invoicing is applicable. For B2C supplies, e-invoicing not applicable. For export, e-invoicing applicable. For import, e-invoicing not applicable. Once again, B2B applicable, B2C not applicable. Export applicable, import not applicable. Then, if I am supplying 9(3), means I am supplying RCM supplies. If I am a supplier of RCM supplies, e-invoicing applicable. If I am recipient of RCM supplies, e-invoicing not applicable. And for ISD, input service distributor invoices, e-invoicing not applicable. But e-commerce operator, e-invoicing will be applicable. In pairs, everyone with me. B2B applicable. B2C not applicable. Export applicable. Import not applicable. Supplier of RCM applicable. Inward recipient of RCM not applicable. ISD not applicable. Eco applicable. This way we remember e-invoicing will be applicable in what cases and not applicable in what cases. Right. Once only if you have a valid invoice reference number, then only your e-invoice will be applicable. Rest everything you can just self-read. You cannot cancel. Sorry, you cannot amend. Once an e-invoice you issued, you cannot amend the invoice, but you can always cancel the reported invoice within a specified time. Then what, ma'am, if I have to do amendment, that you can do on GST portal. We are filing a GSTR1 and amendment tables and everything on GST portal, you can amend anything, but not on the e-invoicing portal. Exemptions. So these particular entities, even if their aggregate turnover is greater than 10 crore, no requirement of e-invoicing. See, understand. These four people are same. Insurer, bank, financial institution, NBFC. GTA, transportation of goods. Supplier of passenger transport service. Multiplex screen. These four people are allowed to issue any document in lieu of tax invoice. And therefore, for any document, e-invoicing cannot be done. So these four people are there. Plus government department, local authority and SEZ unit. These four people plus local authority, government department and SEZ unit. These people, even if their turnover is 100 crore, 1000 crore, whatever, no need to comply with the service or is given on entire entity level. Means they have said bank here. Means a bank can give banking services also, and there might be possible that bank is supplying certain normal goods also, let's say bullion, etc. Now in this case, the exemption from e-invoicing would only be applicable in respect of the banking services or for any service that I make. Here government is saying we are giving you entity-wide exemption. We are giving you entity-wide exemption, means if a banking company is providing banking service, may also be involved in making supply of some goods including bullion. Said banking company in itself will not be required to issue e-invoicing for anything that it is doing. Means it is not that for some transactions do e-invoicing, for some no. Entire bank entity as a whole, means all of these entire entities will never be required to comply with e-invoicing provisions. E-invoice schema and all not that important. Then we talk about dynamic QR code. If my aggregate turnover is greater than 500 crore, I need to comply with dynamic QR code compliances, where my unregistered person can just scan and pay in one go. And non-applicability of dynamic QR code. Again, these 4 people: insurer, banking company, NBFC, GTA, passenger transport service, multiplex screen, and plus OID, AR service provider, and export. For these cases, dynamic QR code is not applicable. And section 34, credit note and debit note. Whenever I have issued an invoice, and I want to reduce the amount, means I had charged excess tax, I want to reduce it, or my recipient has received less quantity, therefore invoice was issued for more quantity, I need to reduce it. Or let's say the goods are returned by recipient, means my original sale value has to be reduced. In that case, I issue a credit note. Is there a last date to issue credit note? Yes, because when I issue credit note, my GST liability gets decreased. So if I show sale of 1000 rupees, but I show a credit note of let's say 30, my ultimate liability would obviously fall by 30 rupees. So your government says that there is a last date to issue credit note, which would be 30 November following the end of financial year, or actual date of filing annual return, whichever is earlier. There is no chance that you do not remember this last date, because for availment of ITC, for rectification of errors, for credit note, everywhere, this same date is only applicable. 30 November after end of financial year, or actual date of filing annual return, whichever is earlier. And if I talk about debit note, means whenever the tax charged was less or the taxable value was less, I want to increase, means I will be showing additional liability. Why would government ever have a problem with that? Means there is no time limit to issue a debit note. I can issue debit note anytime for my original sale value to get increased. So this was all about tax invoice, debit note, and credit note. Are you all clear and with me, everyone? See, 2-22. Okay, let's start from beginning. S per 7, S per supply, section 7, scope of supply. 2 zeros getting mixed become 8, section 8, composite mixed supply. 9 levy collection, 10 बहाने करके भरेंगे कम tax. 10 different tantrums to pay less tax, section 10, composition levy. Then talking about 2-22, you are a person earning double income, liable for registration. 22 said liable, 23 said not liable. Every single student watching the lecture live has to answer the section numbers. I want that end of this session, you are just like puppet, we call it puppet, parrot. Just like parrots, you start from section 7, 8, 9, 10 and you are able to quickly tell all the sections. So it is mandatory for every single student to write the section numbers in the comment section whenever I am revising section numbers after every single chapter. Otherwise, you will get 5 marks less in examination. Yes, ma'am. Sure. So 7 supply, 8 composite mix supply, 9 levy collection, 10 composition. Then 2-22, you are a person liable for registration. 22 said liable, 23 said not liable. 24 said, what is this liable, not liable? Shut up and take compulsory registration. So if I am a person under I-9 creation, I will be required to take compulsory registration. 1 block completed. Then 25, 26, 27. 25 said that, okay, understood, I have to take compulsory registration. Tell me what is the procedure to take registration. Oh God, this big procedure, are you going to do it twice? The answer is no. And therefore, we study about deemed registration here. That you do the procedure once under SGST Act and we will deem assumed to be registered under the other acts also. Section 27 talks about casual taxable person and non-resident taxable person. Then 28, 29, 30. 28 talks about amendment in registration. Once you've taken registration, now you want to amend registration. Then 29 talks about cancellation. Array kids do amendment, small things. Let's just only cancel the registration. So 29 cancellation. And 30 talks about, we got a registration cancelled. Now let's apply for revocation of cancellation. Section 30, revocation of cancellation. Then 31 talks about tax invoice. So once I get registered, I will quickly issue a tax invoice. So what is my due date to issue tax invoices? Then section 32 talks about a unregistered person. Now in Hindi, 32 is known as 32. So for students who understand Hindi, we remember it as a unregistered person मुक्का मार के 32 ही तोड़ देंगे. English people can simply ignore this thing. Students who understand Hindi, just a technique for you all. मुक्का मार के 32 section में 32 ही तोड़ देंगे. A unregistered person, you are unauthorized to collect taxes. Then section 33 talks about if any document, any invoice you are issuing, please mention the amount of tax on that particular document. And section 34. Section 34 talks about credit note and debit note. These are the sections of CGST Act. Also under IGST Act, we saw section 7 interstate supply, Section 8 intrastate supply, and Section 9 territorial waters of India. These many sections we have completed. Yes, everyone is with me. Then let's begin with time of supply chapter. Done, ma'am. Understood, everyone. Chal. Now let's quickly wind up time of supply. Time of supply, again not A category, not C category, would consider it as B category. You can find this in MCQs. Normally question is not with that much frequency being asked in examination. Understood? Dawn, ma'am. Dawn. Sure. Now time of supply. Starting with section number 12. What is the time? What is the time? At 12 o'clock the time changes. At 12 o'clock AM to PM, PM to AM, the time changes. So 12 o'clock you remember time of supply. Section 12 of CGST Act, 12 o'clock you remember time of supply. Now section 12 talks about time of supply in case of goods. Section 13 talks about time of supply in case of services. And section 14 talks about rate change section. So 12, 13, 14, only 3 sections. 12 time of supply in case of goods, 13 time of supply in case of services, and 14 talks about rate change section. Chal. Quickly let's start with section 12. Time of supply in case of goods. You keep the handwritten notes open in front of you. I am not referring to notes here. We'll just write and quickly wind up the chapter. We have 6 subsections here to remember. Section 12.1 says that what is the relevance of time of supply? While you want to study time of supply, they are saying liability to pay. Liability to pay will arise when time of supply comes. Means let's say I received an advance in January month. I issued invoice in Feb month. I actually supplied the goods in March month. I received the payment in April month. When to pay GST? So here government is saying that liability to pay will arise whenever time of supply comes. Then when, how to determine time of supply? Section 12.2 talks about forward charge mechanism. So if I am a supplier of goods supplying under forward charge mechanism, for me time of supply would be date of invoice. Date of invoice, or as per section 31, my last date to issue invoice. Say for example, as per section 31 we saw that whenever there is a delivery involved or movement involved, on or before movement you have to issue invoice. But you are issuing late invoice. Then your date of invoice would be later as compared to last date. So we would always see whichever is earlier. So my original date of invoice, or if not issued on time, then my last date of invoice, whichever is earlier. If under forward charge mechanism, I am a normal person. But if I am a composition person, I am not a normal supplier, I am a composition supplier. Then for me, we will see date of invoice, obviously, or if not issued on time, then we will see last date of invoice. And we will also compare it with date of payment. See, date of payment is irrelevant for a normal person. Date of payment is irrelevant for a normal person, but for a composition person, you are going to see. For a composition person, you are going to see date of invoice, last date of invoice, and date of payment, whichever is earlier. Also remember one more thing. If the payment, the advances are small, up to ₹1,000 only, means I have received payment earlier, invoice later, but the amount is only up to ₹1,000, small amounts. Then I have an option. Either I can take whichever is earlier, or I can simply ignore this and only take last date of invoice or date of invoice. So if the advances are small, up to ₹1,000 only, then I have an option to either take this or see whichever is earlier. Otherwise, if amount is greater than 1,000, then always I will have to compare invoice payment, whichever is earlier. But for a normal person, date of payment will be completely irrelevant, amount completely irrelevant. Only what I have to see is invoice or last date of invoice. Understood, ma'am? Done. Now, what is the date of payment? We call it book bank earlier. Date of payment. Date of payment everywhere will be book bank earlier, means when I make the entry in books or the amount is actually credited in my bank account, whichever is earlier. Then section 12.3 talking about reverse charge mechanism. See, when we are talking about forward charge mechanism, the liability to pay tax to government is of supplier. Therefore, we think from the point of view of supplier. But under RCM, as a recipient, I have to pay tax to government. So when I am a recipient, so under section 12.3, you have to step yourself in the shoes of a recipient and think from the point of view of recipient, because the recipient is required to pay tax to government under reverse charge mechanism. Now here, the date when I receive the goods. the date when I actually physically receive the goods. The date when I make payment. Payment would again be book entry or bank debit, whichever is earlier. Book bank earlier. Or day following 60th day. Day following 60th day, or simply in our common language we can call it as 61st day. So my supplier would have issued me some invoice or some kind of document. From this invoice or document, 61st day I will calculate. Compare it with the day when I receive goods or I make payment, whichever is earlier will be considered as time of supply. If nothing of this is available, then being a recipient, whenever I make entry in my books, purchase entry in my books, that will become time of supply. Yes, ma'am. Oh, this is not 60th day. Sorry. This is day following 30th day. Yes, 60 days is in case of service. 60 days is in case of service. Very good, everyone. It will be day following 30th day. Very good. Chal. Just checking if you all are awake or not. Yes, Priya, Chitin, great. It is day following 60th day. Now talking about 12.4 in case of voucher. 12.4 in case of voucher. Now if voucher is identifiable at the time of issue, then time of issue will become time of supply. But if the voucher is not identifiable, then time of redemption will become the time of supply. Simple. Then 12.5 talks about residuary cases. Means nothing. If anything is not covered from 12.2 to 12.4, in that case what I will do, for registered person, due date. For registered person, due date of return, and for unregistered person, then whatever is the actual date of payment, will become the time of supply ka date. Understood. And then last 12.6 talk about if I have received any interest, late fees or any kind of penalty which is in relation to the original principal supply being made, and I have received late payment, along with that I have received some interest, late fees, penalty. The day when you actually receive this particular amount, will become your time of supply. This was all about section number 12. Now let's talk about section number 13. Time of supply in case of services. Again, majority things are same. 13.1 talks about liability to pay will arise when time of supply comes for service. Same as we studied in 12.1. Now 13.2 again talks about forward charge mechanism. Means you have to think from the point of view of supplier. Now here you will ask yourself a question. Question that you are going to ask yourself is invoice issued within time? What you are going to ask yourself, that as per section 31, is invoice issued within time? If the answer is yes, then you simply compare the date of invoice and the date of payment, whichever is earlier. But if the answer is no, that invoice is not issued within time, then you simply see the date of provision of service and the date of payment, whichever is earlier. See, if you have already studied time of supply chapter earlier, then only you will be able to cope up with my speed. We are in a marathon. If you have not studied time of supply chapter, then I would advise you to take a pause here, open the notes once, go through the chapter once, and then listen to the marathon. Students who are listening in recorded mode. Live students, anyways, stay with me. Chalo. So if invoice issued within time, yes, then invoice payment earlier. If invoice not issued within time, then service payment, whichever is earlier. Understood. If nothing is available, whenever recipient makes entry in the books. Again, what will be the date of payment? Book bank, whichever is earlier. You have option for small advances up to ₹1,000. See, this small advances option you have under 12.2 and under 12.3. Forward charge mechanism, if small advances up to ₹1,000, you have an option to ignore date of payment also. But for 12.3 and 13.3 RCM cases, you do not have this ₹1,000 option. Even if you receive ₹100 advance in case of RCM, in that case, time of supply will come. So this ₹1,000 option is in 12.2 and 13.2, not in 12.3 and 13.3. Understood, ma'am. Then let's talk about 13.3. 13.3 is RCM services. Now RCM services would say that now you think from the viewpoint of recipient, because RCM I have to step into the shoes of recipient. Now here it is similar to goods only. Goods you physically receive, services you cannot see physically coming, that point striked off. Second, date of payment will come, and day following 30th day will here become day following 60th day, means 61st day. from the invoice, whichever is earlier. So you strike off the receipt of goods part, remaining two things, payment and 30 days. Here you make it payment and 60 days, or simply you can say day following 60th day or 61st day from the invoice date, whichever is earlier. If nothing is available, then whenever recipient is making entry in the books for purchase entry will become the time of supply. Understood. Now there is one exception, or you can call there is one proviso. Whenever there is import of service. Now first of all we understand that import of service is taxable under reverse charge mechanism. So if there is import of service, I will fall under 13(3) to determine my time of supply. But if this import of service is from my associate enterprise, if import of service is from my associate enterprise, the answer is yes, then I will not follow this. I have a proviso saying that whenever I make entry in my books, or whenever I actually make payment, whichever is earlier will become time of supply. But there is import, we are not associate enterprises. If you are not associate enterprises, means there is a normal import from a normal person, not from associate enterprise. Then this general provision will only apply, means payment or 61st day, whichever is earlier. Only and only if import is from associate enterprise, means supplier and recipient are associate. In that case, entry in books or date of payment, whichever is earlier will become time of supply. But for all other RCM services, payment or 61st day, whichever is earlier. 13(4) talking about voucher simply says that identifiable issue, not identifiable redemption. Then 13(5) for registered person, due date of payment. For unregistered person, whatever is the actual date of payment. 13(6) if you receive any interest, penalties, fees for late payment, whenever you actually receive will become your time of supply. So here we wind up section 12 and section 13, both of them. Is everyone confident, trying to understand, and also you are able to recall the provisions that we've studied in class, everyone? Yes, ma'am. Now last section for this particular chapter is section 14, talking about rate change. Section 14 talking about rate change. Now there are three things involved: supply, invoice and payment. Three things: supply, invoice and payment. Out of these three, any one or two is pending and rate of tax changed during this particular intervening period. In this case, we follow a majority rule. There is no such rule. This is just for our understanding. Do not write this thing in examination. It's just for our understanding, majority rule. That if 2 out of 3 things, this is the date when the rate changed. This is the date when the rate of tax changed. If any 2 out of 3 things happened before rate change, means either supply plus payment was done, supply plus invoice was done, payment was pending. Or let's say supply plus payment is done, invoice pending. Or let's say invoice plus payment done, supply pending. In this case, I will apply the old rate of tax. But if any 2 out of 3 things are done after rate change, means I will apply new rate of tax. This is the entire crux of the chapter of the section number 14. Let's see. And how to determine time of supply, that I will show you from notes. So 12.1, 12.2 understood, 12.3, then voucher, residuary cases, interest. For 13, liability to pay again, then forward charge is invoice issued within time. Yes, then invoice payment earlier. No, then service payment earlier. If nothing is available, book entry, small advances up to 1,000 you have an option, but no option in case of RCM. Payment 61st day earlier. GST applicable on advances. Payment means book entry, bank debit earlier. Special proviso with respect to associate enterprises. Book entry or payment, whichever is earlier. Then voucher, residuary cases, interest penalty, everything we have done, completed. Now time of supply in case of change in rate. Now what you do here is you first of all fix supply. Means out of supply, invoice and payment, I fix supply. I fix that supply is before rate change. Means I know that if any one more thing I find before rate change, supply is before rate change. If I either find payment or invoice before rate change, means old rate will be applicable. So I fixed supply to be before. Invoice matches with supply before, means old rate. Here payment matches with supply before, means old rate. Now what will be time of supply? Whatever matches with supply will become time of supply. So supply I have fixed before rate change. Let's say for example 20 December 2022 my rate changed from 10 to 12. My rate changed from 12% to 18%. Supply was made on 10 December 2022, means before rate change. I have fixed that. Now invoice was issued on 15/12/2022 and payment was received on 25/12/22. Means out of supply, invoice and payment, two things have happened before rate change, means I understood old rate. But what will be time of supply? Here time of supply will be 15/12. Why? Because what matches with supply? What matches with supply is invoice. So date of invoice becomes time of supply. And whenever you are studying section 14, you have to forget section 12 and 13. Now you will not say this invoice is not issued within time or whatever. Nothing you have to see. If you are in section 14, completely forget section 12 and 13, and now what is relevant to you is only and only section 14, which is rate change section. Right, ma'am? Understood. Similarly, if I have fixed supply before, and payment is before also matching with it, means old rate and date of payment will become time of supply. If I see after, means supply is fixed after rate change. One more thing matches after. Invoice matches after, new rate. Payment matches after, new rate. Whatever matches will become time of supply. Invoice matches, date of invoice. Payment matches, date of payment becomes time of supply. But if supply is before, but invoice and payment are after, or let's say supply is after, but invoice and payment are before. So going by majority rule, I know rate will be new here because two are after. Rate will be old here because two are before. Now how to determine time of supply? For services, whichever is earlier, and for goods, I will say date of invoice. So here, new rate applicable, understood. Time of supply will be earlier of invoice or payment, but for goods, I will take only and only date of invoice. Is everyone clear with this? Yes, ma'am. Done. This is what I have written here. Quick trick. If any two out of supply, invoice, payment are before, then old rate, any two are after, then new rate, and whatever matches with supply will become time of supply. Now date of payment. See, normally in section 12 and 13, date of payment is simple. Book bank earlier. Book bank earlier will be date of payment. But in case of section 14, date of payment will be book bank earlier. Only if book bank earlier, only if I have got the amount credited in the bank account within 4 days. Within 4 days from the rate change. So let's say, for example, the rate of GST changed from 18 to 28% on 20 December 2023. Right. I made book entry on 17 December 2023. But the amount got credited in my bank account on 22 December 2023. So the amount got credited within 4 days from rate change. Yes, ma'am. Then you see whichever is earlier, means the book entry date 17 will become my time of supply. 17 will become my date of payment. But let's say this 22 becomes 28. Means more than 4 years, more than 4 days, more than 4 days has happened when the amount is actually credited. Now I will not see whichever is earlier. Now I will see the actual date when amount got credited. So amount got credited on 28th actually. So 28th becomes date of payment. So earlier of book entry bank debit, yes, but only when the amount is credited within 4 days from date of change. Otherwise, date of payment will be the actual bank credit date. Understood, everyone? Yes, ma'am. So this is all about time of supply chapter. Section 12, 13 and 14. 12 talks about time of supply in case of goods. 13, time of supply in case of services. And 14 is the section of rate change. And again, obviously, all of these sections are CGST Act sections. Yes, ma'am, with you. What is bank? Please give example. Mohik. Okay. I'll text you personally. So Mohik is actually my junior. Mohik and I were in same office only. So he is here just to have fun, I guess. Mohik is my student. Yes, Mohik has taken my lectures and Mohik was my junior in class and he needs an example for everything. I'll text you Mohik after this session explaining what is a bank. Done. Clear, everyone? Yes, ma'am. Sure. Shall we start with value of supply or you need a 2 minutes break? Break required or the Josh is high? Come on. Take 2 minutes break. Sure. I am giving you a 1 to 2 minutes small break. Just have water, have a small breather, and then we shall start with value of supply. Chalo, back guys. Done. No. You all have promised me to stay till end. The concurrent views should not fall. Come on, we are going to make it till end, everyone. Anyways, we are doing this marathon in two parts, right? And majority big customs chapters I've already uploaded. Therefore, I'm going slow so that if any topic is missed out, because I'm not uploading separate English revisions as I've done in Hindi. So for Hindi, we have chapter-wise revisions, but for English, I'm doing this marathon extensively only so that any single chapter you can come back and refer. So do not worry, we are not going to overburden things. Whatever topics are left, we will cover tomorrow, because customs majority we've already done in a 1 4-hour live session earlier also. So that these revisions you can refer later also. All you have to do is stay with me till the end to keep your Josh as well as my Josh high. So now let's start with value of supply under section 15. So value of supply under section 15, very much simple. Again, it is, let's see. 15.1 says transaction value is only value of supply. Plus we do inclusions of 15.2 and minus we do exclusions of 15.3. With me everyone here. 15.1 talks about transaction value. 15.1 talks about transaction value, which says price actually paid payable. Price actually paid payable, where money is the sole consideration, or let's say price is the sole consideration and recipient is unrelated. Price actually paid payable, money is the sole consideration and recipient is unrelated person. In this case, we call it as transaction value. This transaction value will only be the value of supply. Plus, I make 5 inclusions under section 15.2. Inclusion number 1 says that any other tax duty being levied. Any other tax duty being levied except for GST or TCS. You do not include GST and TCS. Any other taxes being levied on a particular supply will also form part of value of supply. 15b says that if there is any obligation of supplier being met by recipient, any obligation of supplier being met by recipient will also be included in value of supply. Then any incidental charges being incurred by supplier and recovered from recipient, or charged from recipient will also form part of value of supply. So this would include all the packing charges, commissioning charges, loading, unloading, testing, freight, insurance. All of these charges incurred by supplier and collected from recipient back will form part of value of supply. Then talking about 15D. 15D says that any other interest, late fees, penalty, whatever is being collected, whatever is collected will also form part of value of the original supply. And last, E says that any price linked subsidy which is not a government subsidy, means any, I would say, non-government subsidy, any non-government price linked subsidy will also form part of value of supply. So these are 5 inclusions under section 15.2. Now talking about exclusions. So under 15.3 we say if there is a before supply discount. So let's say discount is given on or before time of supply. At the time of supply I am giving any discount and I am showing it in invoice. I am showing this particular discount in invoice. In this case, there is no doubt about it that discount will be excluded from the value of supply. But if I am giving post-supply discount, then in that case, 3 cumulative conditions you have to satisfy. For post-supply discount, 3 cumulative conditions you have to satisfy. Condition number 1, there has to be a prior agreement. Second, you can link the particular discount to invoice. Prior agreement is there, you can link the particular invoice discount to invoice. And point number 3, recipient has reversed proportionate ITC. Recipient has reverse proportionate ITC. Come on, I want all of you to write these three conditions that I cumulatively have to satisfy so that I can exclude post-supply discount from my value of supply. One, there has to be a prior agreement. I can link it to invoice, and recipient has reversed proportionate ITC. If answer to all of these things is yes, then post supply discount also I can exclude. Otherwise, I cannot exclude. This is all about section 15.1, 15.2 and 15.3. So, value of supply simply says transaction value, price actually paid, payable, recipient not related, price is sole consideration. Inclusion, all the taxes, obligation of supplier met by recipient, then incidental charges charged by supplier, including commission packing, and you have again collected these from your recipient. Then interest, late fees, penalty, delayed payment, everything. Subsidies directly linked to price but exclude government subsidies. Discount if it is before at the time of supply shown in invoice, deduct from invoice. But after supply discount, three conditions if you satisfy, then only you can exclude this particular discount. Right. Now talking about 15.4. Now 15.4 says, what if recipient is my related person? I cannot take transaction value. What if money is not the whole and sole consideration? There is barter or exchange transaction happening. In this case, how will you determine value of supply? Let's take a simple example. I am a supplier of mobile, right? I have supplied a mobile. Let's start with first rule 27, which says how to determine value of supply when money is not the whole consideration. Means it is not only money that I am receiving. I might be receiving some additional goods or services along with money for this particular supply. So a mobile I am supplying, and in exchange of this mobile I have received a calculator plus 60,000 rupees. So I have supplied a mobile, and what I have received as consideration is not only money. Means now I cannot take 60,000 as transaction value because I have also received a calculator. How to determine value of supply? So you have to go chronologically first of all. You cannot break the sequence. If I have open market value available, I have to stop here only. I cannot directly go to point number 3. So question might give you a lot of data, but you need to analyze and identify going by chronology what data is relevant for you. So first of all, open market value of supply is available. Means I have supplied mobile. What is the open market value of this mobile? This mobile, if normally any person purchases in the market, it is available for 64,000 rupees. If yes, then 64,000 will become my value of supply. So is open market value of the supply available? Yes, take it as value of supply. But this mobile is a special kind of mobile not sold in open market. Okay. In that case, what money I have received? I have received 60,000 rupees. I have received 60,000 rupees plus I have received a calculator. What is the fair market value of this calculator? The fair market value of this calculator is 1,000 rupees. In this case, 60 plus 1,000, 61,000 will become my value of supply. So first of all, you see, the original supply, is open market value available? Yes, take it. Not available? In that case, what money you have received and plus the fair market value of the additional thing that you have received, take it as value of supply. Now, I do not know what is the fair market value of this calculator also. This calculator is also some special kind of calculator. Then you again come to mobile. You ask mobile, is there any like kind quality of this mobile available? Let's say not the same mobile, open market value is available, but there is a similar mobile having all similar characteristics and it is sold for 65,000 in market. It is sold for, let's say, 59,000 in market. Then in that case, the value of like kind and quality 59,000 will become my value of supply. If that is also not available, then finally what money I have got? 60,000 money I have got, and plus the monetary value of additional consideration. Means this calculator, I would have whatever was my manufacturing cost of purchase cost of this particular calculator, I will take 110% of that cost and determine value of supply. Let's say I had purchased mobile for 500 rupees. So 550, 110 of 500. So therefore now 60,550 will become my value of supply. If I do not even have this monetary value available with me, then last final option is the best judgment residuary method under rule number 31. That going by best judgment method, you see what can be the value of supply. So very much simple. Under rule 27, we understand if the open market value of supply is available, take that. If not, then what money you have received plus fair market value of additional consideration. Not available, like kind quality. Not available, money plus monetary value determined by 110% of the cost. If not available, go to the best judgment assessment method. And this is a chronology which you cannot break, and you have to mandatorily follow the chronology here. But there is one proviso saying that only and only for services. Always you have to follow chronology. Only for services you have an option to apply rule 30 before 31. Why? Because 110% of cost of service, it can be difficult to determine. So therefore, only for services you can apply best judgment before this monetary thing. Other than that, all the entire chronology remains same and you have to follow that. Then rule number 28 talks about supply between related and distinct person except agent. See, we have a separate rule for agent, and also understand if the question mentions sole agent. If the question mentions sole agent, then it will be covered here only, because as per SOFA Copes, sole agent is a related person. So sole agent is covered under rule 28, but a normal agent would be covered under rule 29. So in case of related or distinct person, what to do? Everything remains same. Just strike off these 2 points. Because now there is no additional consideration. There's normal supply between related and distinct person. So open market value available? Yes, take that. Not available? Like kind quality. Not available? Rule 30, rule 31. Very much simple. This is same as section 20, rule 27 only. Just strike off the fair market, means the additional consideration points, and you get your rule number 28. But there are two provisos saying that if the goods are further supplied, so I supply to my related person. I supply to my related person. My related person is further supplying it to ultimate customer. Whatever. Let's say my related person is supplying for 100. I can take 90 as the value of supply. Means I can simply ignore this if 90 is beneficial. Let's say open market value is 110. Open market value is available with me, but it is 110. My recipient is supplying to ultimate customer for 100. Taking 90% of it, 90 would be beneficial, it is okay. You can take this advantage of taking 90% of the ultimate supply value between your recipient and the ultimate customer. Or you forget everything. If your recipient is eligible for full ITC. Means I am supplying to my related person or distinct person, and my related person or distinct person is eligible for full ITC. Then I will forget everything. And whatever I am declaring in invoice will become deemed value of supply. Right. Here also you have to follow this chronology. Proviso you can apply anytime. Rule 29. When I am supplying goods, not services, through agent, in that case there is no chronology. You have an open option available. No sequence, no chronology, you have an open option available, either open market value of goods or 90% of whatever my recipient is charging to ultimate customer. Whichever is beneficial for me, I can take. If none of this is available, rule 30, rule 31. So this was all about rule 27, 28, 29, 30 and 31. We call them valuation rules, when you cannot simply take the transaction value. Then there are some special notified supplies for which there are separate rules. First of all, we talk about lottery by organizing state. So in case of lottery, we know whatever is the official gazette notified in the gazette or whatever is the face value of ticket, we consider it as inclusive of 28%, make the values exclusive of 28%, and whichever is higher will be deemed value of supply. So the face value of lottery ticket or this value which is notified in the official gazette of the state, whichever is higher, I just assume it to be inclusive of 28%, make it exclusive and make it value of supply. Done. For other actionable claims, means betting, gambling, horse racing, whatever I am paying, 100% will become my value of supply. Now under rule 32, we have 5 optional valuation methods, 5 special methods for 5 certain special things. Let's start with first, which is foreign currency. So for sale purchase of foreign currency, rule number 32.2. This is not a section, this is a rule number. So rule number 32.2. Now if I am selling or purchasing foreign currency, let's say I exchanged $1 for 80 rupees. Let's say I exchanged $1 for 80 rupees. So let's say I exchanged $10 for 800 rupees. Now in this case, how will you determine value of supply? One thing we know, that we have changed from one form currency denomination to another form currency denomination for consideration, means there is supply of service. Now in this case, how to determine value of supply? Now you have an option. So under rule 32.2 for forex currency, you can either go by this 32.2a chart or you can go by 32.2b slab rate table. Let's understand chart 1 is extremely simple. So first of all, you need to ask that the two currencies which are exchanged, do they involve INR? Means I have exchanged $10 for 800 rupees, means yes, INR is involved. But here in this same thing, if I had exchanged dollar for yen or let's say pound or euro, then in this case, what will have to do? So first question you ask, is INR involved? If the answer is no, INR is not involved. Simply you convert both currencies into rupees. So if I exchange, let's say dollar for yen, whatever are the dollars involved, convert into rupees. Whatever yen involved, convert into rupees. Whichever is lower, take 1% of the same. Whichever is lower, take 1% of the same to be the value of supply. But if currency involves INR, yes, means there on one leg, either I have exchanged dollar for rupees or let's say rupee for dollar. At one end, we have INR involved. Then you ask another question, is RBI reference rate available for that particular currency? If the answer is no, no reference rate available, means rupee is involved but no reference rate available, then whatever money, whatever rupee, either you've received or paid based on what leg you are, 1% of that you simply take. Means let's assume there is no reference rate available for dollar. So $10 is equal to 800 rupees. 800 rupees are involved. I will simply take 1% of 800 to be my value of supply. But if INR is involved and reference rate is also available, then simply whatever is your actual margin. Let's say the reference rate was 80, but obviously the forex dealer would be keeping some commission. The forex dealer did the transaction for 80.5, multiply by $10 exchange. So now this becomes my value of supply. So simply you ask yourself, is reference rate, is INR involved? If no, convert both currencies into rupees and 1% of the lower amount. INR involved? Yes. Second question, reference rate available? No. Then 1% of INR involved. Reference rate available? Yes. Then you calculate the actual margin and determine the value of supply. But if you do not want to go by this chart, you always have an option to go by slab rate. But remember, once you opt for slab rate method, for remaining financial year, means till the 31st March of that particular financial year, you cannot go back to chart method. So once you come to the slab rate method, you cannot shift back to chart method for the remaining financial year. Now slab rate simply says that if up to 1 lakh rupees are exchanged, up to 1 lakh currency is exchanged, then 1% of the amount or 250, whichever is higher. Let's say I exchange 70,000. What will be 1% of 70,000? What will be 1% of 70,000? 700 rupees or 250 rupees. Whichever is higher, means 700 will become my value of supply. Done. So till 1 lakh, 1% or 250, whichever is higher. Means I understand that minimum 250 will be my value of supply. Right. Now if amount exceeds 1 lakh but up to 10 lakh. So for first 1 lakh, 1%, 1,000 fixed. For first 1 lakh, 1%, 1,000 fixed. Whatever is in excess of 1 lakh, you take 0.5% of the same. Say for example, I exchange 2 lakh rupees. First 1 lakh, 1%, 1,000 rupees fixed. Next 1 lakh, 0.5% means 500. My answer would be 1,500. So first 1 lakh, 1%, then up to 10 lakh. Up to 10 lakh, for the remaining 9 lakh rupees, you take 0.5%. Now if the amount even exceeds 10 lakh rupees, then for first 1 lakh, 1%, 1,000. Remaining 9 lakh, 0.5%, 4,500. Means 5,500 are fixed for first 10 lakh. Plus whatever is in excess of 10 lakh. You take 0.1% of the same. Compare everything with 60,000 rupees and take whichever is lower. Means my range in the slab rate method is fixed that my value of supply would be somewhere between 250 rupees to 60,000 rupees. It can never exceed 60,000 rupees. Understood, ma'am? This was all about Rule 32.2, the Forex rule. Now Rule 32.3 talks about air travel agent. So for domestic booking, 5% of basic fare. For international booking, 10% of basic fare. It is done. For life insurance, if there is only risk cover, then 100% of your entire premium. Means whatever is your total premium, take that as your value of supply. If single annuity plan, take 10% of your premium to be the value of supply. Then if there's a savings policy, means risk plus investment both covered, and at the time of collection of premium only, you intimate your policy holder. At the time of collection of premium only, you intimate your policy holder that this particular amount is going to be go towards investment. Then let's say I received the premium of 100 and 80 I have allocated towards investment. Then remaining 20 will only be my value of supply. But the condition is this amount has to be intimated to policyholder. If you do not intimate this amount to policyholder, then entire 100 will become a part of all other residuary cases. So if you are not covered elsewhere, you come by default to the residuary cases, saying that for first year of insurance, 25% of total premium will become value of supply, and for subsequent years, 12.5% of premium will become value of supply. Quickly tell everyone yes or no. Yes, ma'am. So entire only risk 100%, annuity 10%, other cases 25 for first year, 12.5 for second and subsequent year. And for investment plus risk policy, if amount is intimated, then you reduce it. If not intimated, then everything will become residuary case and 25% of that will become value of supply. Amendment. The amendment is a simple clarification saying that what to do of the no claim bonus. Now, what is a no claim bonus? Say for example, I have taken an insurance policy, but I have not claimed anything in this particular year. Now, next year when I go to renew my policy, in that case, I will be getting a no claim bonus. Means, let's say normally just an assumption, my premium is 100 rupees, but I have not claimed anything in previous financial year. They will tell me that, okay, you pay 90, we are giving you a no claim bonus of 10 rupees. Now, in this case, first question is this no claim bonus a consideration? The 10 rupees that I have received as a no claim bonus, is it a consideration? Why? Because I have agreed to not take the claim. Is it so? See, whether deduction on account of no claim bonus allowed by insurance company from insurance premium payable can be considered as a consideration. Why? Saying that we have agreed to not claim the bonus, not claim the insurance claim. The answer is no. See, we saw that agreeing to refrain from an act, to do an act, or to tolerate an act. Three things are supply of service. But there has to be a contract and there has to be a consideration. Now, there was never a contract. I never told insurance company that I don't want to claim anything. You just give me no claim bonus. I took the insurance policy to claim, not to not claim. Therefore, customer purchases insurance policy to indemnify himself. And there's no contractual obligation that I do not claim the amount of the insurance. And therefore, this is not a supply because there is no express or implied contract. And second question says that in subsequent year, when my premium is 100, but I have got no claim bonus of 10 and I only pay 90, then GST will be levied on 100 or 90. The answer is 90. That after reduction of no claim bonus, whatever is the net premium paid in the subsequent year, GST will be charged on this net premium. Because why? Because this 10 was a pre-agreed discount. And as per section 15.3, whatever is pre-agreed, you can reduce that particular amount. Done. Now, next is second-hand buying and selling. Again, very much simple. It says that not important for exam point of view, so do not get confused. Just simply listen to once, read once, and let it go. If you have ever availed ITC, then you cannot take benefit of this provision. If you have not availed ITC, then for second-hand goods or services. If you have not availed ITC, not services, sorry. If you have not availed ITC, then for second-hand goods, what you can do is take your value of supply as your margin. Margin means selling price minus purchase price, whatever margin I have earned. Selling price minus purchase price, whatever margin I have earned will become my value of supply. But the condition being I have not claimed ITC on purchase of these second-hand goods, then only I can get benefit of this scheme. And if in any case selling price is less than purchase price and there is a loss on sale, then your value of supply will become 0. Alright, defaulting borrower case simply says that selling price we know, but let's say I have sold some goods on hire purchase or anything like that, but my borrower is not paying me EMIs. Therefore, I repossess those goods from my borrower. Now, these second-hand goods I am selling. In this case, what will be the purchase price? Selling price, so I know when I will repossess and I will sell, I will know the selling price. How to determine the purchase price? They are saying whatever will be the purchase price of the original defaulting borrower, unregistered. Why? Because if he would be registered, he would have taken ITC and then normal provisions will apply. Means the entire value will become value of supply. We are talking about specifically for unregistered borrowers who has defaulted and we are repossessing back those goods. Now in this case, what will be the purchase price? Selling price we will know. Now we need to reduce purchase price from selling price to arrive at margin. What will be the purchase price is what we are determining. So the original purchase done by the original defaulting borrower, from that date, whenever I am after repossessing, selling those goods back, for this particular period, for every quarter, you reduce 5%. Let's say, for example, 1st Jan 2023, the goods were purchased by the original defaulting borrower for 1 lakh rupees. And now, I repossess those goods, and after repossessment, I'm finally selling on 11 November 2023. So, how many quarters are there? Jan, Feb, March, April, May, June, July, August, September, and October, November. Part of quarter will be full quarter. So, 4 quarters are there. So, 1 lakh minus, I will do 1 lakh into 5% into 4 quarter. Whatever is my reduced amount will now be considered as my purchase price. I will reduce this purchase price from the sales price now, and then the difference will be treated as value of supply under margin scheme. But for used and old motor vehicle, for old and used motor vehicles, it is again simple that if I have claimed depreciation under Income Tax Act, if only and only for old and used motor vehicle I have claimed depreciation under Income Tax Act, then I will not reduce purchase price from selling price, but I will reduce the depreciated value under the Income Tax Act. So, in case only for used old motor vehicles when I have not availed ITC, simply whatever is my consideration, means my selling price minus depreciated value as per Income Tax Act, I will reduce. But remember, not for all capital goods, only for motor vehicles. Understood? Right. And last optional method here is token, voucher, coupon, stamp. If then let's say I purchased a token or a voucher for 900 rupees. But while redeeming this voucher, I can purchase goods worth 1000 rupees. The voucher you can purchase for 900, but when you go to redeem the voucher, you can purchase goods or services worth 1000 rupees. What will be the value of supply here? The answer is 1000. So they are saying that the money value of goods or services, that you can redeem against that voucher or coupon will become your value of supply. Yes, everyone clear with this point? Yes or no? Done, ma'am. So this is all about whatever was important in value of supply chapter. Now there is this pure agent rule that whenever as a pure agent you incur certain expenses, it will not form part of value of supply. For rate of exchange, we know. For goods, it is CBIC rate on time of supply. For services, it is GAP rate on time of supply. How to back calculate? Exclusive amount? We know that if I tell you 200 is inclusive of 12%, then you will simply do 200 upon 112% and you get the exclusive value. Done. Everyone clear with me? Yes, ma'am. 100 pages we are done. Chalo. The Josh is high. Done, ma'am. So let's now start with place of supply. Let's start with place of supply. So till now we've been doing CGST Act sections, S for 7, S for supply, composite mixed supply section 8, 9 levy collection, 10 composition scheme, 12 time of supply goods, 13 time of supply service, 14 rate change, 15 value of supply. Then 22 person liable, 23 not liable, 24 compulsory registration, 25 procedure, 26 deemed registration, 27 CTP NRTP, 28 amendment, 29 cancellation, 30 revocation of cancellation, 31 tax invoice, 32 unregistered person not to collect unauthorized tax, 33 talks about on any document invoice you issue mention tax amount, 34 talks about debit note and credit note. So this is all about CGST Act. For IGST Act, we've studied section 7 interstate supply, section 8 intrastate supply and section 9 territorial waters of India. Now let's complete the remaining section 10, 11, 12 and 13 of IGST Act under place of supply chapter. Important chapter because every attempt you will find at least 4 to 5 marks question of place of supply in the descriptive part, MCQs separately. So here, no Priya, not required. You need not remember the rule numbers and everything. If you know the section numbers, that would do. Sure. Rule number 27, 28, 29. Rule 27, 28, 29 that we studied for valuation. This you remember. Other than that, it is okay. Optional rules 32. If these rules you are able to remember, that is fine. For all other chapters, there's no need to remember the rule numbers anywhere. Okay. Now, talking about place of supply, which is IGST Act, because the exclusive power is with Parliament to deal with place of supply related matters. Okay. Now, we know that GST is a destination based tax. So, whatever is the place of supply of consumption will become the place of supply under GST. Means that particular state is going to share the revenue of GST. Now, let's talk about section number 11. So, 10 and 11 are for goods, 12 and 13 are for services. Section 11 says that place of supply of goods imported into or exported from India. Place of supply of goods imported into or exported from India. So in case of import of goods, what is the place of consumption? India, and therefore the location of importer. Importer is from India. When I'm importing certain things from outside a place to India, my location of importer will become place of supply. And we understand import as well as export both are always treated as interstate supplies only. And for export, simple place of supply will be the location outside India where the goods are going out of India. So import, location of importer. Export, location outside India becomes place of supply. Done with section number 11. Then section 10. Section 10 says other than import and export of goods. So situations when I am not importing or exporting goods means I am domestically supplying the goods. Then how to determine place of supply? So if supply involves movement, of goods, then again very much simple, wherever the movement is terminating. So my ultimate destination of goods will become place of supply. If the goods are delivered on bill to ship to model, bill to ship to model simply means, let's say we have Mr. A, Mr. B and Mr. C. So the original buyer is Mr. C. Mr. C has purchased some goods from Mr. A. Means the billing is done to Mr. C. But ultimately Mr. C called Mr. A and said that you deliver the goods to Mr. B. So the delivery, or let's say the shipping, is done to Mr. B. So billing to someone else and shipping to someone else. Now in this particular case, government is saying that there are two separate supplies involved, and for the supply between this person A and C, billing is done here, shipping is done here, place of supply will still be the location of Mr. C. So we call that Mr. A is a consignor. Mr. A is consignor, Mr. B is consignee, and Mr. C, the original buyer, is known as the third person. From the viewpoint of consignor and consignee, Mr. C, the original buyer, is known as the third person, and the location of the third person, or let's say the original buyer, will become the place of supply for supply between Mr. A and Mr. C. If supply is not involving any movement, then no doubt as such at all, whatever is the location of goods at the time of delivery, means wherever I'm making the delivery, will become the place of supply. If the goods are to be assembled or installed at some particular site, then wherever the place at which you are carrying out such installation or assembly will become place of supply. Then supply on board a conveyance. Means let's say a flight is going from Ahmedabad to Chennai. And on board here I purchased some goods. Let's say I purchased cashew nuts or cookies or any goods on this conveyance. Now in that case, what will be place of supply? You'll check that we are flying above which state. The answer is no. Wherever the goods were loaded, wherever the goods were taken on board. Let's say when I departed from Ahmedabad, the goods were loaded from Ahmedabad in this particular flight. Now even if I have entered Chennai, the flight is flying here, I know I am just above the Chennai airport. Still, place of supply will be Ahmedabad only. So whenever goods are supplied on board a conveyance, in that case, the place from where the goods were loaded in the conveyance, the goods were taken on board the conveyance, that place will only become place of supply. Done. This was all about goods, very much simple. Section 10 and section 11. Now let's talk about section number 12. Place of supply in case of services. Not domestic services, but we do not use the word domestic. We say that location of supplier as well as location of recipient both are in India. Location of supplier as well as location of recipient both are in India. Then how to determine place of supply? So section 12. Place of supply of service. In case where location of supplier as well as recipient both are in India. So generally means if you are not falling under any exception from 12.3 to 12.14, you are not falling under any exception, then generally as per 12.2, place of supply for service would be determined as, if you are supplying to a registered person, I want all of you to be extremely active because place of supply chapter is a chapter where majority of the students struggle. I will try to give you some techniques, some points, a lot of examples so that you can understand things in a better way and remember it with me here and here only. But for that you have to be active and keep answering me whenever I am asking questions. I can see 50% students are almost gone now after lunch break. Slowly, I can see 1, 2, 3, 4 students getting less. But the students who ultimately make it till the end will be the real survivors. Sure. So generally, whenever I supply to a registered person, the location of this registered person will become place of supply. If I am supplying to unregistered person, if address is available, then the address on record. Otherwise, location of supply means simple. See here Riddhi Baghmar. I am supplier in Gujarat, supplying service to MNO who is registered in Delhi. Place of supply will be Delhi. If MNO is unrelated, still if I have address, place of supply will be Delhi only. But if I do not have address and they are unregistered, then I am left with no option, but I have to take location of supplier, which is Gujarat, to be the place of supply. Understood, ma'am? Then 12.3 talks about service in relation to immovable property. Now this we all must be knowing only, that if there is any supply in relation to immovable property, let's say construction, architecture, interior designing, anything like that, or accommodation in a boat, hotel or vessel, then the place where this immovable property is actually situated will become place of supply. So the property is located or intended to be located. But there is one exception to this. Let's say I am a supplier. I am a supplier in Mumbai. There's a recipient in Chennai. Now this recipient has purchased a property in, let's say, Paris. Now he wants this Paris property to get interior, he wants the interior decoration of this Paris property to be done. Supplier India, recipient also India. Therefore section 12 will apply. Section 12 says wherever the property is located. Now this way the place of supply will become Paris. But we do not want place of supply to be Paris. Otherwise, it is in then non-taxable territory, becomes export. So here government is saying if property is outside India, but both supply recipient are in India, then place of supply will be location of recipient, which is Tamil Nadu, which is Chennai. So if the property is in India only, then very much simple. Supply recipient in India, property also in India, place of property will become place of supply. But supply recipient in India, property outside India, then the location of recipient will become the place of supply. And if in any case the property is in more than one state UT, we take on proportionate basis. You can just read this example for more better clarity. Okay, now restaurant catering, personal grooming, fitness, beauty, health services. Okay, you are in awe with the beauty of this cutie. You are in awe with the beauty of this cutie. You want to take her on a date to a restaurant and catering services, but you know that she will not tell you yes. So first of all, you went to a salon for some personal grooming. You went to a gym for fitness and you became ekdam healthy. So here for these particular services, you are in awe. You are in awe with the beauty of this cutie. I say cutie ki beauty pe dil aaya hai. I say cutie ki beauty pe dil aaya hai. I am in awe with the beauty of this cutie. I want to take her to restaurant for a date, but she will not tell me yes. So first of all, I went to a gym to get fit. I did some personal grooming. I took care of my health. So for all of these services, wherever this service is actually performed, becomes the place of supply. Irrespective of the fact that supplier is from another state, recipient is from another state, the supply took place in a particular state, that will only become place of supply. But for training and performance appraisal services, if provided to a registered person, then location of registered person. Otherwise wherever they are actually performed. So for training and performance appraisal services, if provided to registered person, then location of registered person. If provided to any other person other than registered person, then similarly, same thing as we saw in restaurant, catering and everything, wherever it is actually performed. Right. Then we make pair of these two things. See, first of all, we make pair of this. So actually performed, but for training appraisal, if provided to RP location, otherwise actually performed. Similarly, we see for admission of event and organization of event. Now, if there is admission of event, you again take wherever the event is actually held. For admission of event, wherever the event is actually held. But for organization of event, if provided to registered person, location of registered person. If provided to unregistered person, then wherever the event is actually held. So if you see, point 4 and 5 are similar only. Then point 6 and 7 are similar only. That for 4 as well as 6, wherever actually done. But for 5 as well as 7, if provided to RP, location of RP. Otherwise, wherever they are actually performed. So admission to event, always wherever the actual event is taking place. But organization to event, you will say event actually held only if unregistered person. But if the event is held outside India, then again we will take the location of recipient. Understood, ma'am? Then we make a pair of 12.8 and 12.9. See, so then we make a pair of 12.8 and 12.9. Now 12.8 talks about transportation of goods and 12.9 talks about transportation of passengers. So here, transportation of goods simply says that whenever freight is being charged for transportation of goods, again if provided to registered person, location of registered person, unregistered person, wherever the goods are physically handed over. So let's say I want to transport my goods from Ahmedabad to Mumbai. So the destination of goods, for goods Mumbai will become place of supply. We are talking about transportation service, right? So Ahmedabad, I went to a transporter. I gave my goods to transporter in Ahmedabad and told him that you please deliver these goods to Mumbai. For goods, place of supply is Mumbai because that is destination. But for transportation, we understand that I am handing over my goods in Ahmedabad, means Gujarat becomes the place of supply. So supply to location. See, for goods, you take location of goods, the destination of goods. We are not talking about goods. We are talking about transportation services here. So transportation service, as such, I availed in Ahmedabad only because there only I handed over my goods. So RP, location of RP. URP, wherever you are handing over the goods. But in both of these cases, if the goods are going out of India, if the goods are going out of India, then in that particular case, location of goods will become place of supply for transportation service also. Once again, note, if the goods are transported outside India, then place of supply will be destination of goods. And what is this clarification? Exact same thing that I explained to you is given in the clarification. Still, let me take you to clarification once. So they are saying location of supplier and location of recipient both are in India. But goods are to be transported outside India. What will be place of supply? The place of supply will be the place outside India. Why? Because goods are going outside India. Example, Mr. X registered in West Bengal. Availed transportation service for some goods from operators U is also in West Bengal. Now supplier in India, recipient in India, but still the goods are going to USA and therefore place of supply for transportation will be USA only. So you charge IGST, recipient will get ITC, and while filing GSTR1, you take the destination, the state code to be code 96, which is the foreign country code. Understood, ma'am? Now, talking about passenger transportation service. So passenger transportation service, again it is similar to goods only. So if provided to registered person, location of registered person. If provided to unregistered person, now see, goods you hand over, right? Passenger you do not hand over. Passenger would embark, right? Passenger would embark in that particular conveyance. So goods you hand over, passenger we simply understand that the location from where the passenger is embarking into the conveyance becomes the place of supply. But if I have issued a right to passage, means I have said that during this particular month, you can, from entire India, for our company bus, you can any day board the bus and travel. So I do not know from where the passenger is going to embark. There is a free open pass. Now in this case, if address of recipient available, take that. If not available, take the location of supplier. Right. So this two, again, you understand transportation of goods and services together. See, admission organization together. These services and performance appraisal services together. So 1, 2, 3, 4, 5, 6, we have already remembered. Also for immovable property, we remember the provision. Now, service supplied on board a conveyance. See, for goods, we can physically see where the goods are boarded on conveyance. Service, you cannot see. So, simply they are saying first scheduled point of departure. So, if the flight is going from Ahmedabad to Mumbai, or let's say the flight is going from Ahmedabad to Chennai, any service being taken, any service being availed while the flight is in movement, then the place of supply will be Ahmedabad, means the first scheduled point of departure from where the journey started. Understood? Okay. Then telecommunication service, again very simple. Telecommunication service says that whenever there's a fixed line of cable, you can see where the cable or line is being connected. So the place where you are installing the device will only become place of supply. For postpaid mobile connection, a bill आपसे bill आएगा ना, bill for postpaid mobile internet connection, आपको bill, you will be receiving bill. So in this case, location of the billing address of recipient, whatever is the billing address of recipient, becomes the place of supply. For prepaid connection which is not done online, if it is done through some agent, we see small grocery stores, some small mobile repair stores where you can go and get your recharge done. So if these things are sold through agent, then address of agent, otherwise wherever the payment is received. And any other residuary case or when prepaid connections done through online payment, if address of recipient available, take that, not available, location of supplier, means the general residuary rule. So very much simple it is. For fixed line cable, you can see the device being installed. So wherever the device is installed will become the place of supply. For postpaid connection, you will get a bill. So wherever the location of billing address becomes the place of supply. For prepaid, if done through agent, address of agent, otherwise wherever payment received. And for other cases or online prepaid, address available of recipient, take that, not available, location of supplier. Now again, pair of these two things. So first of all, we see banking, financial and stock broking services. Now money makes no difference. Money makes no difference for registered or unregistered person. So bank, financial, stock broking has no criteria for registered, unregistered person. They are simply saying if address is available, take address of recipient. If address is not available, take location of supplier. So for banking, financial and stock broking services, money makes no distinction between recipient and unregistered and unregistered person. Bank, financial and stock broking services simply say that address available, take address. Address not available, take location of supplier. For insurance services, if supply is made to registered person, location of registered person. Unregistered person, again location of recipient. See, understand. Insurance is just like banking only. How? Because there would not be possible that an insurance policy is being sold and insurance company is not having address, because insurance contract cannot be made without address. So every time insurance company will be having your address all the time. Therefore, this is not possible. So if RP, location of RP, if URP, then also location of that recipient, because it will be on records. You cannot say that what if my insurance company is not having address. That is not possible, only because no insurance can be issued without your address. Done. So for bank, financial, stock broking services, address available, take address, not available, location of supplier. No criteria for RP or URP. But insurance not possible, only that address is not available. Therefore, always location of recipient becomes the place of supply. And last subsection, section 12.14. Section 12.14 talks about advertisement services availed by government. See, if I as a normal person avail advertisement service, then my general 12.2 will apply. We are talking specifically only about advertisement service by government. So if CG, SG, LA or stat body avails any advertisement service, then in that case you have to take proportionate amounts. Say for example, government entered into a contract with Times of India that all the editions of Times of India that you sell in India, you have to put on front page Swachh Bharat Abhiyan ad. So the number of editions sold in particular state, the place of supply will be determined proportionately. So for newspaper, number of editions, utility, number of consumer. For hoardings, each hoarding, you can simply count the hoardings in every single state. And for advertisement of train, the length of track, etc. So whenever government is doing advertisement, then on proportionate basis, we consider place of supply. This clarification I have already taught you. Section 10, goods domestic. Section 11, import export of goods. Section 12, service, where supply recipient both in India. And final section 13, which talks about place of supply regarding location of supplier or location of recipient is outside India. So place of supply of service where either recipient or supplier is outside India. I come to section number 13, the last section of this chapter. Right. So again, general rule says that if the address is available, take location of recipient. If not available, take location of supplier. General rule we understand. Now, performance-based service. See, in section 12, When supplier recipient both are in India. We do all of that restaurant beauty separately, then we see performance things separately, goods separately. Here it is nothing like that. Simply they are saying if any performance based service is done on an individual, let's say I've done makeup of an individual or I have done training of an individual, whatever it is, wherever that service is performed becomes the place of supply. No distinction under section 13. Means if supplier or recipient, anyone is outside India, I apply section 13, and for any performance based service on individual, simply the location where service is performed becomes the place of supply. And if there is a performance to be done on goods, let's say I have to repair some goods or anything like that, in that case, if physically the person comes to repair, so wherever this service is actually performed, so if the service requires physical presence, wherever physically coming, that repair service is done becomes the place of supply. But let's say there was some issue with my laptop, my software of my laptop. So the person from US did not come to India. He told me to give AnyDesk TeamViewer or the system access. I gave the system access and he repaired my laptop. So in this case, service provider provides service from a remote location. So wherever the goods are situated, my laptop is here, therefore place of supply will become here, this particular state. So here, in case of individual performance services, wherever the service is performed. Now in case of goods, if physical presence is required, then the location where physically present. If physical presence is not required, then also the location where goods are there. Means had that person came physically, he would have came here. Therefore, he would have come here and therefore that becomes the place of supply. Now one exception, good exception, it is says that whenever I am importing certain goods into India, just for the purpose of repairing those goods and I re-export them. Let's say Miss Geeta from Nepal sent her laptop to get repaired from Mr. Abhi Bangalore and I will repair. Means Abhi imported a laptop, will repair the laptop and will send back the laptop out of India. Now in this case, going by this general rule, Abhi is in India, recipient is outside India. Therefore, section 13 would apply. Now physical presence is required. Yes, physically the laptop is being repaired in Bangalore. Therefore, going by general rule, place of supply should be Bangalore. But the exception says that whenever you are temporarily importing certain goods for repair, you are not using them. You are just repairing the goods and exporting those goods back. In that case, apply general rule of 13.2, saying that if address of recipient is available, take location of recipient only. So in this case, Geeta is from Nepal, sending her laptop to get it repaired from Mr. Abhi Bangalore, which is to be sent back without being used in India. Place of supply will be Nepal, the location of recipient, and not Bangalore, where the service is actually performed, but only and only for this particular exception where I temporarily import goods, repair them, do not use them and re-export them after repairing. Yes, ma'am. Now 13.4, service in relation to immovable property, similar to section 12 only, wherever the property is located. So real estate, construction, grant of right or accommodation of hotel, inn, club, guest house, whatever it is, location of immovable property. Admission or organization. Again, there is no distinction here. Be it admission of event or organization of event, wherever the event is actually held becomes the place of supply. Now if performance-based service, immovable property and organization admission of event. For all of these three services, one leg is in India. Let's say Justin Bieber decided to do a concert tour. Now one concert was done in India and 2 or 3 concerts were done outside India. But everything was organized by a single person. Means one leg is in taxable territory. We will consider entire supply to be in taxable territory only. Now if in taxable territory also there are 2 states involved, then how to do? Let's see. Mr. Rohit provides testing services in relation to bikes. Means it is some performance to be done on goods from Japanese supplier Suzuki. Okay, so here Rohit is a supplier who is providing testing services to Suzuki, who is recipient. See, with respect to testing services, they have written supplier Suzuki, but Suzuki is sending bikes and we are testing the bikes in India. Therefore, we are testing service suppliers and Suzuki is testing service recipient. One is in India, one is outside India. Therefore, section 13 will apply. Now, 5 bikes are to be tested in total. Consideration of 6 lakh. Now they are saying we tested 2 bikes in Mumbai, 1 in Gujarat and 2 in USA. Now 1 leg is done in India. Therefore we understood that for entire 5 bikes, place of supply will be India only. But India mein what? Gujarat or Maharashtra? Gujarat or Maharashtra. So here they say you take it proportionate basis. What is the total bikes repaired in India? Total bikes tested in India? 2 plus 1, 3. So you divide the entire consideration of 6 lakh into 2:1 ratio. So for Maharashtra, place of supply would be 6 lakh into 2:2 upon 3, 4 lakh. And for Gujarat, 6 lakh into 1 by 3, 2 lakh. So whatever is done in USA, for that also place of supply will be India only. Done. For these three services only specifically, when supplier or recipient, anyone is outside India, and for these three services are taking place, you always take location of supplier to be the place of supply without thinking anything for these three services. But in section 13, do not confuse it with section 12, right? Banking we've always studied in section 12 also, but that is when supplier recipient both are in India. Here we are talking about when one of them is outside India, then in that case, place of supply for banking company, financial institution, NBFC giving services to their own account holders will get covered here. If they're providing service to any other person, they can provide service to some person who are not their account holders, then general rule will apply. If I'm providing service to people who are my own account holders, not current account holders, see, they are saying that we include all account holders other than current account holders. So we exclude current account holder. Other than that, NRE, NRO, every account we include. And also if any person other than account holder, then also general 13(2) will apply. So in this case, if services by banking company, financial institution or NBFC given to their own account holders other than current account holders, location of supplier means location of banking company will become the place of supply. Second, any intermediary service in relation to goods or services or securities, whatever is the location of the supply, means location of the agent, the intermediary becomes the place of supply. And hiring of means of transport up to 1 month. What if more than 1 month? Then general 13(2) will apply. Only up to 1 month you hire any mode of transportation other than aircraft or vessel. Again, for aircraft vessel, 13(2) will apply. Other than aircraft vessel, including a yacht, if you are hiring for up to 1 month, then section 13(8) will apply, means place of supply becomes the location of supplier. Then transportation of goods, we understand destination of goods for section 13. Passenger transport service, wherever the passenger is embarking. Then on-board services, whatever is the first scheduled point of departure. All of these things are same as we have studied in section 12. Then OIDAR services, we understand location of recipient becomes the place of supply. Now what are OIDAR services? All these services which are delivered electronically and there is no or very less human intervention. Let's say Netflix, Amazon Prime, the e-books, movies, online advertising, or Drive means digital data storage, gaming, online supplies of digital content, everything is OIDAR services. So if these OIDAR supplies are provided B2B, then recipient will pay under reverse charge mechanism. But provided B2C means given to non-taxable online recipient NTORs. In this case, the OIDAR service provider will take registration, collect tax under forward charge mechanism and pay it to government. What will be the place of supply? The location of recipient will become the place of supply. Understood? And for these notified free supplies, you can just self-read, and we are done with the chapter of place of supply. One of the very much crucial chapters, I would say, where students face a lot of issue remembering the provisions. I have made sure to make pairs, explain it in that ways with lots of examples wherever possible. So section 10, 11, 12, 13 and also 7, 8, 9 we have done with the chapter of charge. So these many sections of IGST Act we've completed, and now we do not have to study IGST Act anywhere else. It is done over. Now whatever we study further, everything will be CGST Act only. Quickly tell me everyone, yes or no. Clear with everything? Chal, are you all with me? Josh is still high. Come on. We are halfway through now. The marathon was of 11 hours and it is already 6.5 hours. So we are more than half done. Are you all active? Come on everyone. Yes ma'am, quickly give me dil dil aga bomb bomb emojis. Yes ma'am. Okay. Now see, for exemption chapter, we cannot cover entire chapter in marathon, not practically possible. because exemption chapter in itself would take 1.5 to 2 hours individually. Therefore, I am only covering the amendments of exemption chapter for this particular marathon. Right? We understand what is exempt supply. Any supply which attracts nil rate of tax or wholly exempt from tax also include non-taxable supply. There can be general exemption, special exemption, all of these things are clear. Charitable, so we've broken down exemptions into charitable, religious, agricultural activities. Then we have healthcare services and all of education services, everything. So I'm not covering all of these things. I am for now taking only and only the amendment portion of exemptions chapter. Maybe we can have a separate session for exemptions, or you can just self-read the chapter also, because there is nothing much to explain in exemption chapter as such. So quickly come to page 134. All the amendments with respect to exemptions are summed up in a single page, 134. Other than that, there is nothing new. All of the other things are same as you have studied in your May 23 examinations. Sure. Yes, ma'am, the Josh is still high. Done. So come to page 134. Let's just quickly in 5 minutes go through only the amendments of exemption chapter. So first thing, access to road, bridge on payment of toll charges. What is the amendment here is they've striked off the word annuity. They have striked off the word annuity. So earlier, for access to road, toll as well as annuity both were exempt. But now only toll charges are exempt, and any other additional FASTag charges being levied, means let's say your FASTag was not working and therefore some FASTag charges were levied with the toll charge, that will also become exempt, because essentially it is in relation to toll charge only. So access to road toll charges are exempt, but annuity charges are not exempt. So access to road, bridge and payment of toll is exempt, not the construction of road service, and hence GST is not exempt on any deferred payment or annuity paid. Understood? This I have explained you with the chapter of charge of GST RCM provisions. Let's see, normally renting of residential dwelling for residential purpose is exempt. But if given to registered person, in that case, registered person will be required to pay tax under reverse charge mechanism. But understand, when renting is in personal or own capacity or on own account, not that of proprietorship firm. Let's say, as I said, I take a property on rent for my employee, then RCM applicable. But I take it on my own capacity, not claiming it as business expense, then no RCM will apply. It will still be exempt. Done. Then bank charges. See, there is no amendment with this point. Earlier also, any of the bank charges with respect to credit debit card up to 2000 per transaction were exempt. They are still exempt. See, all the interest discount income under GST are exempt, except for credit card interest. If there is any credit card interest charged from you, it will be taxable. It is covered here. See. See, any interest on loan, advance, forex conversion, bank to bank or dealer other than interest on credit card. So any interest on credit card service, it will be taxable. Other than that, all interest are exempt. That is point number 1. Second, any of the bank charge for credit debit card transaction exempt up to 2000 per transaction. Now this clarification on applicability of incentive paid by MeitY, which is Ministry of Electronics and Information Technology. So here, government came up with a scheme, I would say, where government said the banks that if any person is making small UPI transactions, if any person is making low value small UPI beam transactions up to 2000 rupees, or if a person is using RuPay debit cards to make payments, in that case you do not charge any bank charges from them. You do not charge any transaction charges from them. The bank said, then who will pay the charges? Why would we bear the charges? So government said, we will not recover any of the transaction charges from either the recipient or the supplier or even the bank. Then who will pay the charges? Government will give these charges in the form of incentive to the banks. So here we say that, see, incentives are in the nature of subsidy. Incentives are in the nature of subsidy, that for any RuPay debit card transactions or any low value Bhim UPI transactions up to ₹1000, any of the bank charges will not be required to be paid either by the merchant or the recipient. Then who will bear the charges? Government, central government will pay these charges in the form of incentive. And in the definition of consideration, I had taught you that any government subsidy received is not a consideration. And therefore, we are saying that this subsidy received from government is not taxable because it is in the nature of supply, it is in the nature of subsidy, therefore it will not be a part of consideration and not value of supply as per section 15. Because under section 15 also we see that non-government subsidies are included in value of supply. Any government subsidy never forms part of value of supply, and no GST on this subsidy for low value UPI transaction bank charges and RuPay debit card bank charges given by government to banks. Done. And last point here says that any accommodation service by Air Force, Mess and other similar Army, Navy, paramilitary, police force. So any Army, Navy, Air Force, police, paramilitary force giving mess services to their own personnel or any person other than business entity will also be covered under exemption. So accommodation services by Air Force, Mess or any other Army, Navy, paramilitary, police force, mess to their own personnel or to any person other than business entity, it will also be exempt, because we consider that these people are government only and they giving services to their own personnel. How can we charge GST on the same? So this is all. What is 5K? No, Priya, it is not 5K, it is 2K. It is 2000 and not 5000 here. Understood, ma'am? So this is all about the amendments in the exemption chapter. Rest exemption chapter you can self-read. If there are any doubts, you can ask me, or if possible, maybe after marathon, after 3-4 days or next week, we can keep a separate session only for exemption. We can plan out that. Okay, so now the time has come to start with input tax credit. Input tax credit, the most important A+ category chapter of the syllabus. 14 to 16, 17 marks, whatever weightage you can assume. 14 marks the compulsory question, plus 1 or 2 MCQs you can expect, or for other questions also there can be small points for input tax credit chapter. So are you all ready for it? Yes, ma'am. I think we should take a small break because it's been more than 2 hours at a stretch. You will not be able to grasp ITC chapter. So you can take a small 5 minutes break and then we start with input tax credit. Just go listen to a song and come back in 5 minutes, right? So it is 14:47. Maybe we can resume at 14:55. Right, ma'am? Okay. And then in good half an hour, 45 minutes or maybe 1 hour, we will shanti se, आराम से complete ITC chapter. Okay. Go come back at 2:55. Yes, welcome back, guys. Chalo. Are we all back ready to start with input tax credit chapter? Anjima. So we all know the chapter is very much important. So I would expect you all to keep giving me answers continuously. Yes, ma'am. Sure. So starting with section number 16. Starting with section number 16. As soon as you turn sweet 16, your family knows now you are no more a kid, and therefore they start putting conditions and restrictions on you. So as soon as you turn sweet 16, they start putting conditions and restrictions on you, and therefore section 16 is eligibility and conditions to claim ITC. Talking about section 16.1 eligibility. Section 16.1 eligibility, which says that for me, in order to be eligible to avail input tax credit, it is extremely simple. I need to be a registered person, and whatever input services or capital goods I have received has to be in course furtherance of business. Right? No doubt about it. Eligibility simply means that a registered person availing course furtherance of business, availing input services or capital goods in course furtherance of business. Now let's talk about 16.2, which are conditions to claim ITC. Section 16.2, conditions to claim ITC. We have 6 conditions here. First of all, you need to have an invoice or any document for that matter which would evidence of you having paid taxes to your supplier. So evidence means it is a proof that yes, you have actually availed input services or capital goods and you have paid taxes. Second, your supplier has furnished the details of this invoice in GSTR 1. So you have invoice and your supplier has furnished details with respect to this in GSTR 1. Then you have physically received goods, services or both. Fourth, this ITC communicated to you is not restricted. Then your supplier has paid taxes to government. Your supplier has not just collected taxes from you but also has paid taxes to government, because understand, filing GSTR 1 does not indicate payment of taxes. You just have to declare your sales in GSTR 1 but no payment is made from GSTR 1. Supplier has paid taxes and this would be subject to section 41. Right. And last, me as a recipient, if I want to claim ITC, I am required to furnish my valid proper GSTR 3B. So here we say that I need to be in possession of a relevant proper document. Supplier must have furnished details with respect to this invoice in GSTR 1. I have received goods, services. ITC is not restricted. Supplier has paid taxes and I have also filed my valid GSTR 3B. Right. Now talking about this, subject to section 41 where supplier has paid taxes. Now in this case, section 41 says that once when my supplier files GSTR 1, it starts to show in my GSTR 2A 2B. So based on self-assessment, based on GSTR 2B, I can avail this credit while filing my GSTR 3B. Okay. Now I will not wait for that particular month only for my supplier to file 3B and then I will file my 3B. It is okay. If supplier has furnished GSTR 1, we will assume that okay, it is all done. He will pay the taxes and we file our GSTR 3B. Now, and this ITC will be final ITC that I have availed. But at a later date, if I get to know that my supplier filed GSTR 1 but did not file GSTR 3B, then in that case, I will have to reverse this ITC. In that case, I will have to reverse this ITC, and during this period, if I ever utilize this ITC, then I will also have to pay interest on the same. But till what date I will wait, at what rate of interest I will pay interest, all of these things are given in Rule 37A. Now, what does Rule 37A says? Rule 37A says that for any particular financial year. Let's take example of FY 21-22. For any particular financial year, let's say FY 21-22. Okay. Assuming September 2021, my supplier has furnished 1 but not furnished 3B. Therefore, based on 1, credit started to reflect in my 2A and I availed the credit. Now I will have to wait. I will have to wait till 30th September after the end of this financial year. So 30th September 2022, I will wait for my supplier to file his 3B. If my supplier files 3B till 30 September 2022, then no action is required to be taken on my side. Then in that case, whatever credit I have availed in 3B is full, final, okay, nothing is required to be done. But if my supplier do not file his 3B till 30th September 2022, then till 30th November 2022, me as a recipient is required to reverse my ITC, whatever I had availed. And if I reverse this ITC till 30 November, no interest will be applicable on me. Once again, for any particular financial year, if my supplier filed 3B, filed 1, did not file 3B, after the end of financial year, I will wait till 30 September for my supplier to file 3B. If he files 3B till this particular date, I am not required to take any action after this. But if the supplier has not furnished 3B till 30 September, then I have time till 30 November. Then I have time till 30 November to reverse this particular ITC. If I reverse till 30 November, then no interest is required to be paid. But after 30 November, reversal will still be required to be done. But here now, along with reversal, I will also be required to pay interest if I ever utilize this ITC. Interest at what? Interest at the rate of 18% per annum. This is what the provision says. Right. So supplier has to file 3B till 30 September. If supplier files 3B till 30 September, no action required to be taken on my side. If supplier is not filing 3B till 30 September, then till 30 November, I will reverse my ITC. If I reverse till 30 November, no interest. After 30 November, reversal will still be required along with interest at the rate of 18% if I ever utilize this particular ITC. This is all about Rule 37A. Then talking about Rule 37, we call it 180-day rule pyar se. So 180-day rule, Rule 37 simply says that from the date of invoice, within 180 days, the recipient is required to pay the consideration to the supplier. So from the date of invoice, within 180 days, the recipient is required to pay the consideration to the supplier. If not paid within 180 days, then the day on which 180 days expire, immediately from that date, the first 3B that I filed, the day on which my 180 days expire, immediately from this date, whatever is the first 3B that I am going to file, I will reverse this wrongly availed ITC in my 3B along with interest at the rate of 18% if I have utilized this particular ITC. Let me take you through an example. Yes, thank you everyone for Teachers' Day wishes once again. Sure. So this example says that Mr. Free received an invoice and goods on 27 April 2023. Availed and utilized ITC while filing April month return on 20 May 2023. Amount of ITC was 10,000. Payment was made to supplier on 26 Jan 2024. Now see, date of invoice was 27 April and date of payment was 26 January, which is more than 180 days only. So first of all, I will calculate 180 days from 27 April 2023. This is 27. So date of invoice is 27. Date of invoice here is 27. So 180 days from 27 April would be 24 October 2023. So I should ideally have made payment by this date, but I have not made by this date. So after this date, what will be the immediate first 3B that I am going to file? So I would have already filed September month 3B on 20 October. So now October month 3B, I will file on 20 November 2023. Therefore, on 20 November 2023, I will reverse this entire 10,000 ITC that I have availed. And since I had utilized this ITC on 20 May, since I had utilized this ITC on 20 May, from 20 May till 20 November, I will also pay interest at the rate of 18%. So from utilization till reversal, I will also pay interest at the rate of 18% on this 10,000. Now later when I make payment to my supplier, actually in January, so later on 26th January, when I actually make payment, I can re-avail this 10,000 ITC, but this interest gone is gone. Interest you cannot get back, but the ITC amount you can re-avail once the payment is made. Right, everyone understood? Sure. But this is not applicable in 3 cases when tax paid under reverse charge. If there is deemed supply, we already know Schedule 1 activities are supply without consideration. So from day 1, we know no consideration is ever going to flow. And last, if there is a third party payment made on behalf of supplier, then for these 3 cases, we do not consider this 180-day rule. Otherwise than that, proportionate to whatever amount you have not paid, proportionately you reverse your ITC. And if utilize that ITC, then in that case, interest also from utilization till reversal. You cannot claim depreciation as well as credit, both on the GST amount. So if I have purchased, let's say, some capital goods worth 1 lakh rupees, paid 18,000 GST, either I capitalize 1 lakh in my books and take 18,000 as credit, or I capitalize entire 1 lakh 18,000 for income tax purpose. I'm talking. I capitalize entire 1 lakh 18,000 and take depreciation under income tax on entire amount. So for the GST component, you either take depreciation, leave credit, or you take credit, leave depreciation. You cannot take benefit of both. Again, last date for taking ITC, that same last date as we studied in credit invoice, as we studied in the credit note chapter, 30 November following the end of financial year, or last date of filing, or the actual date of filing annual return. Sorry. So 30th November after the end of financial year, or actual date of filing annual return, whichever is earlier. Right. Then we talk about section number 17. Now section 17 has 2 things, apportionment as well as block credit. So there are 2 things under section 17. One is apportionment of credit and second is blocked credit. So first of all, let's talk about blocked credits. So block credit says that this particular list of goods and services, you cannot avail ITC. Even if you are using them for your business purpose, you cannot avail ITC on these particular goods or services. Point number 1, motor vehicle designed to carry passengers. So including driver, if the vehicle has a seating capacity of 13 passengers, you cannot avail ITC on the same. If more than 13 passengers, ITC allowed. Or let's say if there is the motor vehicle is for transportation of goods, then also ITC allowed. If there's a bicycle or railway or 2-wheeler or 3-wheeler with engine capacity only up to 25 cc, if the engine capacity of 2-wheeler or 3-wheeler is more than 25 cc, then also ITC will not be allowed, or any special purpose vehicle. So for these things, ITC allowed, but normal motor vehicle with up to 13 passenger seating capacity, ITC is not allowed. But if it is used for further supply or for driving training or for transportation of goods passengers, then ITC is allowed. Aircraft vessel, again, no ITC allowed. But again, if further supply or for transportation of goods passengers or for imparting training on flying navigating, then ITC is allowed. If the insurance, repair, maintenance and service of original, if the credit of original vehicle is allowed, as per this provision, then the insurance, service, repair and maintenance of that vehicle will also be allowed. But if the credit of that original conveyance is blocked, the motor vehicle is blocked, in that case, you will not be allowed for ITC of its repair, insurance, service or maintenance also. So you have to ask yourself, is motor vehicle, aircraft or vessel eligible as per this? Yes. Then the credit of insurance repair will also be allowed. But if the original vehicle credit is only not available, then ITC of insurance repair will also not be allowed. But if you are insurance company or manufacturer, we will allow you the ITC. Then for food, beverages, outdoor catering, health services, cosmetic, plastic surgeries, or let's say you are not purchasing these vehicles, but you are taking these motor vehicles on lease or you are renting, hiring them, then also ITC will be blocked. But if you are further supplying as such or as a composite or mixed supply, you are further supplying these particular goods, in that case ITC will be allowed. Let's say An airline company, Indigo. So if you travel in Indigo, they provide you with cookies. Now those cookies are purchased from Unibic company. Now normally if Indigo Airlines purchases cookies for its own consumption or for consumption of employees, then ITC will be blocked. But they are purchasing these cookies so that they can sell to the ultimate customers flying in the plane. Means they are further supplying these catering services. Then in that case, ITC will be allowed for the cookies that they are purchasing from Unibic company. Or let's say there is some statutory obligation on the employer by government to provide these services to employees compulsorily under statutory requirement, then also ITC will be allowed. Or let's say membership of club, health. Now further supply is not possible in these cases. So if they are mandated by the any obligation, any stat obligation on the employer, then ITC will be allowed. Any goods services used for personal consumption, we know. For personal consumption, no ITC. For tax paid under composition scheme, a composition taxpayer cannot avail any ITC, cannot even collect tax from its customers. Then any goods lost, destroyed, stolen. Any goods lost, destroyed, stolen, written off or disposed of free of cost, means you are the final recipient here. You are not collecting taxes from anyone. Then how can government give you the credit? So goods lost, destroyed, stolen, written off or disposed by way of gift or sample, no ITC is allowed here also. If you have paid any tax under fraud, confiscation, search during transit, then we obviously understand no ITC will be allowed with respect to this. Then point number 8, if you are NRTP, non-resident taxable person. If you domestically purchase any goods or services, no ITC. If you are non-resident taxable person and you domestically purchase any goods or services, no ITC. And if you import any goods, then we allow you ITC, but if you import any service, then we do not allow you ITC. So any goods or services purchased by NRTP except goods imported. So for goods imported by NRTP, ITC is available. Other than that, domestic purchases of goods services or import of services, no ITC is allowed to. No ITC is allowed to NRTP. Right. And then last point of block credit, which talks about construction and works contract. So even if for business purpose, now today you are a chartered accountant and you want to construct your own office, and for that either you avail construction or you avail a works contractor service. Means you can either go to the market and get paint, bricks, cement, steels, everything on your own, hire a laborer and get everything constructed. Or let's say you can hire a works contractor, giving him the entire contract to construct your entire immovable property. In both of the cases, no ITC will be allowed to you on construction of immovable property, even if it is for your business purpose. But if you are constructing any plant or machinery, then ITC will be allowed to you. So any goods services used for construction of immovable property except plant, machine, for own account, even in course furtherance of business, not eligible for ITC. Or let's say I give works contract used for construction of immovable property except plant, machinery, not eligible for ITC. However, if it is not on own account, means I am works contractor on my own, I am availing all of these goods services for construction, but I am constructing for this CA, not for myself. Means it is not on my own account, I am constructing for someone else. In that case, obviously, this works contractor will be allowed ITC. See, it is his normal business to construct properties for other people. But other than that, if I am constructing for my own account, then no ITC will be allowed to me. Except plant, machine, ITC will be allowed. But government knew you are going to do masti, therefore government did great grand masti. So your government is saying that these three things will never be plant, machine. Means if you call your entire factory, your entire building to be a plant, we will not consider it. So any land, building or a civil structure or telecommunication tower or pipeline outside the factory, you cannot call them plant, machine. Means for this ITC will always be blocked. ITC is available, allowed for plant, machine, but we do not consider these three things as plant, machine. Therefore ITC for land, building, civil structure, telecommunication towers and pipeline outside the factory will be blocked in itself. And if you do not capitalize anything, you write off anything in your books. See, GST does not make any distinction on its own. GST says that if you capitalize certain thing in your books of account, we consider it as capital goods. If you do not capitalize, we also do not consider it as capital goods. So if you write off any repair, renovation expense in your books, we will allow you the ITC. But if you capitalize, then you go by these particular provisions. Yes or no, everyone? Yes, ma'am. So this is all about blocked credit. Now let's understand about apportionment of credit. Now we have rule 42 for input services and rule 43 for capital goods. Let's first understand about input services, which means, say for example, I have a factory. And here what I do, I make flour and I make biscuits. Now just let's assume flour is exempt under GST but biscuits are taxable under GST. Now I purchase some packing material. Let's say packing material which will be used for both. Flour and biscuits means it is a common packing material. ITC on same was 100 rupees. Also, I availed, let's say, certain input services exclusively with relation to biscuit. Some input services exclusively with relation to some biscuit. ITC on same was 50. I availed some inputs exclusively with relation to flour, and ITC on the same was, let's say, 70 rupees. So these are my total input services for this particular period. And after the end of period, I saw that my turnover for biscuit was, let's say, 1000 rupees, and my turnover for flour was, let's say, 4000 rupees. Now, how do I apportion this ITC? What should be the eligible ITC allowed to me as per rule number 42? So first of all, you have two methods to start with the answer. Either you can start with T or you can directly start with C1. See, T means whatever total taxes that you have paid. Whatever total taxes you have paid on input services are known as T. Now, out of this we know that if I am using anything for exclusive non-business purpose, exclusive for exempt supplies, or these things are blocked under 17.5. So for these three things, if exclusive non-business purpose, exclusive exempt supply, or blocked under section 17.5, I do not get ITC at all. So you reduce T1, T2, T3 from T and you arrive at C1, which is known as ITC credited to electronic credit ledger. So if the question asks, point number A, what total amount you are going to credit in your electronic credit ledger, the answer is C1. So here in this particular question, see, my total credit is 100 plus 50, 150 plus 70, which is 220. Now 220 is T. I can either start my question with T and then see this input service exclusively in relation to flour 70. I know flour is exclusively exempt. So anything that I am availing for exclusively exempt supply, I will never be allowed ITC. So I have this option to start my answer with 220, reduce 70 from the same and come to 150, or I can directly start my answer with, I know 100 plus 50, which is 150. I would advise you, if possible, always start your answer with C1 only. You simply ignore the exclusive exempt non-business and blocked supplies because no ITC is allowed with respect to same. So answer to point number 1. What ITC I will avail in my electronic credit ledger? So for now, I will avail 150 in my electronic credit ledger. Now, for calculation purpose, I have already availed this ITC, right? This 150 has come in my electronic credit ledger as a balance. Now they are saying for calculation purpose, whatever is exclusively taxable and zero rated, that you keep on side. So I know that this 50 is exclusively for biscuit, which is exclusive taxable, means full credit of this 50 will be allowed to me. So out of 150, I reduce 50 and I arrive at 100. See, I have not done anything in my credit ledger. Credit ledger 150, I have availed and that is still lying there. But this 50 I have reduced only for my calculation purpose. So now I arrive at C2, which is common credit. Now I arrive at C2, which is common credit, means now this 100 is input services, which is in relation to both exempt as well as taxable supply, means this is my common credit. Now I have to make apportionment. So they are saying of this C200, what is in relation to exempt supply, that you reverse. So out of 100, which is my C2, my exempt turnover is 4000 and my total turnover is 5000. Right? So 100 into 4 upon 5. Whatever is my answer here. So 100 into 4 upon 5 comes to 80, right? So I will reverse 80. I had already availed 150 in my credit ledger. Now of this, I will either reverse 80 or I can also add. I can also pay it separately through DRC03. I have both the options available. For now, I am reversing. So I reverse this 180 and now ultimately, finally, what is the final credit that I have availed is 70 rupees. The final credit that I have availed is 70 rupees now here. So this is how you calculate. This was in relation to exempt supply. Now, if there is any non-business purpose, now either question will give you a percentage. Either question will give you a percentage that, let's say 50%, 30%, 40% is non-business purpose. If question gives me this thing, then I will take the actual percentage. So if question says that out of total common credit, let's say 15% is non-business purpose, you simply C2 into 15%, you reverse. If question is not saying anything about non-business purpose, you don't do anything. If question is not saying anything about non-business purpose, you are not required to do anything. But if the question says there is non-business purpose, but they do not tell you how much. See, if nothing is given about non-business purpose, do not apply 5%. If they give actual proportion, you take actual proportion. However, if they mention that there is non-business purpose, but what percentage that they have not mentioned, then by default, your assumption would be to take 5%. Let's say here I said, there is some non-business purpose, but I don't know how much. Then in that case, 100 is my common credit. 100 into 5%, 5, I will reverse here. And now my credit, eligible credit will become 65 rupees. So if they have not given anything, do not subtract. But if they have given that there is non-business purpose, but we don't know what is the actual percentage, then you by default take a 5%. So I reduce 5% here. And now whatever is left will be my remaining credit which is available to me. So of this C2, which is C1 was 150, right? C1 was 150. For this, only for calculation purpose, I had reduced this 50 because this was full eligible. So for this, I reduced. Now I was left with 100. Now from 100, I reversed this, and whatever is left in the credit ledger is automatically left only because I have already availed 150. Now I need not avail anything also, and I need not reverse anything also. This is all about rule number 42. Now E means exempt supply, and any supply where recipient is paying tax under reverse charge. It would include nil rated, wholly exempt, non-taxable supply also. Do not include any interest income. See, normally interest is exempt. But if you have earned any interest on loan, deposit, advance, do not consider it as a part of E. It will still be a part of F, but not a part of E. Means no reversal required for any interest income if you are not a bank. See, if you are a bank or financial institution, then interest will be considered as E because your major portion comes from E. So for you as a bank or financial institution, reversal for E, interest will be required. For other people, interest will not form part of E. Schedule 3 list will not form part of E, but there is one exception saying land and building. So land and building will form part of E also, will form part of F also at stamp duty value. Transfer of goods, see, this becomes irrelevant because anyways government has made it taxable now. Earlier it was exempt. And any duty free scripts if you are transferring, do not even consider it as a part of E. F is simple, F is just total turnover. So all supply, taxable, exempt, rated, everything. Also for land and building purpose, in E and F you take stamp duty value, and for securities you take 1% of sale price. So question would give you sale price also, purchase price also. Make sure that for securities you take only 1% of the sale price and include it in E also and in F also. This credit reversal activity you are going to do every month and at the end of year also. So now at the end of year, if I get to know that consolidating all the things month by month, if I have short availed ITC, it is okay. Last date to avail ITC is 30 November or due date of annual return or actual date of annual return, whichever is earlier. So till this last date, I can avail the remaining ITC. But if I had excess claimed my ITC, I will have to reverse it as soon as possible because after the end of financial year, let's say if I'm talking about FY 22-23, then right from 1st April 2023 till I actually make reversal, my interest will continue. So reverse such excess ITC along with interest at 18% per annum interest from 1st April of succeeding financial year till the date of reversal. If there is no supply in current tax period, means I do not have E and F available for current tax period, it is okay, you can take E and F of your preceding tax period also. Then rule 38, we understand that for banking company, financial institution and NBFC, for these people, interest will become a part of E and interest is their major income. means their calculation for E and F can become extremely complex. Therefore, government has given them an option. See, if they want to go by normal rules, they can. But if they want to avail the benefit of this optional procedure, then government says that whatever is non-business or blocked, do not take ITC. Simple. Whatever supply you are doing with your distinct person, you take full ITC. Now whatever is remaining, see, for non-business and blocked, no ITC. For supply with distinct person, you take full ITC. Now whatever is remaining, you take 50% ITC and let 50% ITC go. Means you do not need to do any E by F reversal. Government is automatically by default assuming that 50% would be available and 50% would not be available. This was all about Rule 42 and Rule 38. Now Rule 43, ITC in case of capital goods. ITC in case of capital goods says that if there is any capital good used exclusively for non-business purpose, any capital goods used exclusively for non-business purpose, no ITC available, non-business or exempt purpose. But if a capital goods used exclusively for taxable or zero rated supply, used exclusively for taxable or zero rated supply, then in that case, full ITC is available. So exempt, non-taxable, zero rated, exempt, non-taxable, non-business, no ITC. Taxable, zero rated, full ITC. But if there is a capital good, which is to be used for both taxable as well as exempt supply, means a common capital good, in that case, in the month of purchase, once you take full ITC and we call it as TC, let's say in the month of February 2023, I purchased a capital good worth 1 lakh and paid 18,000 tax on the same. But this capital goods was essentially for use in both, means for my production of flour as well as biscuit, I was going to use this machine. So once when I file my Feb month return, I will take full ITC of 18,000 and I call it as TC. Then from this month only, I divide 18,000 by 60. Why 60? Because under GST, the useful life of all capital goods is assumed to be 5 years, and 5 years means 60 months. So for every single month, I divide 18,000 by 60 and I call it as TM. Now what I do, 18,000 divided by 60. So 18,000 divided by 60 comes to 300 rupees. So for every month, I do 300 into E by F, and whatever amount comes, I add it to my output tax liability. So very much simple. For once, what I will do, I will avail full ITC in the month of purchase, which is 18,000. Then I compute attributable ITC to every single month, right from this month only, which would be TC upon 60 giving me TM. Then I take all such TMs of all capital goods together, multiply them by E by F, and this amount I will add it to my output tax liability for every month along with 18% per annum interest if ITC is utilized any time. Yes, ma'am. This is very much clear. But what if there is a change in usage of capital goods? Now I have taught you a very much simple technique with respect to same. That whenever you have to avail ITC in case of change in usage, whenever you have to avail ITC in case of change in usage or special circumstances, you do 5% quarter reduction. But whenever you have to reverse ITC, you do 60-month proportionate calculation. Nowhere this rule is given. This is just our classes special where you understand with this technique and you never make a mistake. Means, let's say for example, earlier I was using this machine for taxable purposes. But now from today, I decide to use it only and only for exempt supplies. Means earlier I was using exclusively for taxable, I would have availed full ITC, but from this month I am going to use it for exempt purpose. Which means proportionately how many months are left. Let's say I have used this machine for 5 months. Now 55 months are remaining. Very much simple. 18,000 into 55 upon 60. This amount you reverse one shot because from today you are going to use it for exempt supply. So whenever I have to reverse, I will take proportionate 60 months, the period left in months. Right. Then point number 2 says that I was earlier using it for exempt supply. but now I decide to use it for taxable supply. So I have already used it for some period for exempt, and now I decide to use it for taxable. Now here we have 1 year limit. Means if the invoice is older than 1 year, they will not allow you to take ITC. We are assuming that invoice is not older than 1 year. Now here, since I have to avail ITC, because earlier I was using for exempt, now I will use for taxable. So here when I would have purchased, I would have thought that I'm going to use it for exempt. Okay, then I would not have availed ITC. But now I need ITC. How much ITC? Because availment, we do 5% quarter reduction. So 18,000 tax I had paid at the time of purchase minus 18,000 into 5% into whatever are the number of quarters. So whatever number of quarters I have used it for exempt purpose, I reduce 5% for every single quarter from 18,000, and the remaining amount I avail as my ITC. Right. Now, if I was earlier using it for taxable, but now I'm going to use it for taxable and exempt both. Means ITC I would already have availed. I would already have availed 18,000. Let's say 7 months have gone. Now for remaining 53 months, I decide I'm going to use it for both. Nothing you are required to do. Simply you start with monthly reversal. So you do 18,000 upon 60 into E by F. But this exercise you are going to do for 53 months. So whatever credit I had availed earlier, it now becomes my common credit. And for the remaining 53 months, I will do 18,000 upon 60 into E by F. So whenever I have to reverse, I will do proportionate 60-month calculation. But whenever I have to avail, I do 5% quarter calculation. And last point which says, earlier I was using for exempt, but now I am going to use it for taxable and exempt both. Here there is no one rule. Means here if the invoice is even older than 1 year, it is okay. So now I was using it for exempt. Let's say I have used it for exempt already for 7, 8, 9 months. Now I decide to use it for taxable exempt both. So first of all, I will have to avail ITC because I had not used it earlier for taxable. So I had not availed any ITC only. So first of all, I will have to avail ITC. What will be the ITC availed here? The original tax paid, which is 18,000. So first of all, I will avail entire 18,000. First of all, I will avail entire 18,000. But is this right? The answer is no. So I will have to reduce what? I will have to reduce 18,000 minus 18,000 into 5% for whatever quarters I have used it for exempt, and then I avail the ITC. So for the time of availment, I will reduce 5% and then I will avail this. So I will reduce simply I will reduce 18,000 into 5% into whatever quarters I have used, and this will be the net figure that I avail. But now also I am not using it for exclusive taxable, I am going to use it for both. So whatever is my remaining life in months, for that particular period, I will do 18,000 upon 60 into E by F, but only for the remaining months. Not this reduced 5% amount. You take original 18,000 only for reversal because you think it as that way. That since beginning had I known that I am going to use it for both purpose, then in that case I would be doing this only today. So for remaining period in months, you are going to do this only. So when you avail, you do 5% quarter reduction, but when you reverse, you do 60-month proportionate calculation. Right. And all of these same things apply when you shift from regular to composition or when you shift from composition to regular. So in all of these cases, if I shift from regular to composition, means I have to reverse ITC. Now if you have to reverse ITC, you do 60-month calculation for capital goods, and for input services, you can, with invoice, every single invoice you can see. When I go from compo to regular person, I have to avail ITC. So when you avail ITC, you do 5% quarter reduction. Understood, everyone? Sure. So this is all about section 18, special circumstances. When you shift from regular to composition, composition to regular, taxable to exempt, exempt to taxable. Done. When you are taking fresh registration first time, in that case, you only get ITC for inputs. No capital goods allowed, no input services allowed. So if I am taking fresh new registration for first time, whatever inputs I am having in stock, invoice not older than 1 year, only for those inputs immediately preceding the effective date of registration, I will get ITC. Effective date of registration, we already know, we've studied in registration chapter. Right. And this last treatment which says sale disposal of capital goods. So if I am selling or disposing of my capital goods, then in that case, tax on transaction value or ITC reduced by 5% per quarter, whichever is higher. Let's say Mr. Kullu purchased machine for 10 lakh rupees, 18% GST means 1 lakh 80,000 ITC I would have availed. Now on 14/9/21, I sold this machine on 7/5/23. See, 2021 2023 quarters are fixed. So this is September, October, November, December. September means July, August, September, October, November, December. So 2 quarters of 2021 plus 4 quarters of entire 2022 and 2023 Jan, Feb, March and April, May, June. So 2 quarters of 23. So total 8 quarters I have used this machine. And now I have sold it for 5 lakh rupees. So simply first tax on transaction value would be 5 lakh into 18% GST, 90,000. Compare it by reducing 5% amount for 8 quarters. So 1 lakh 80,000 into 5% for 8 quarters, I reduce from 1 lakh 80,000 and it gives me 1 lakh 8,000. Higher of 90,000 or 1 lakh 8,000 is 1 lakh 8,000, and this will be the tax payable by me on sale or disposal of capital goods. So you compare the transaction value with 5% quarter reduction at the time of disposal, and whichever is higher will be required to be paid tax on capital goods. This is what is important for ITC chapter section 16, section 17 and section 18 special circumstances. Now other than that, in case of demerger, amalgamation, can you transfer ITC? The answer is yes. For case of demerger, let's say a company XYZ is registered in 2 states, in MP and in UP. Assets in Madhya Pradesh are 60 crore, asset in Uttar Pradesh are 40 crore. I have total 100 crores worth of asset. I transfer 40 crore to another company, means I demerge a company. I transfer 40 crore asset to some another company, of which 30 crore from MP and 10 crore from UP. Means directly 40% of 100 ITC you cannot transfer. What you will do, you will give 50% ITC from MP registration and here 25% ITC from UP registration, means state-wise in the ratio of assets transferred. What you do, you transfer the ITC balance to the demerged entity. But there's a condition that assets should be transferred with liabilities. So whatever assets you are giving to your demerged company, you should also give liabilities to your demerged company. Then in the ratio of assets for every single state, you can transfer your ITC. Understood? Manner of utilization. See, manner of utilization very much simple. The IGST balance will be first used for IGST balance. Anything remaining I can use for C and S, any manner, any proportion. Then I come to CGST. I use it first for CGST. If anything left, I use for IGST. I cannot use it for SGST. Then SGST balance, I use first for S, any remaining I use for I, and I cannot use it for CGST. Very much simple. So first of all, you fully have to exhaust your IGST balance. Whatever is my IGST balance, I have to fully exhaust my IGST balance by using it first against I, then against C and S, whatever in manner proportion I want. Then I come to CGST. I use first against C, then against I. Then I go to SGST and I use it first against S and then against I. This simple is known as utilization of ITC. Then Rule 86A simply says that even if you have balance in a credit ledger, if you have done anything, you have availed ITC fraudulently, or you do not have an invoice, you are not doing your business from declared place of business. So all of these cases, the officer can put restriction on your credit ledger, means they won't allow you to use the credit. Or Rule 86B says that if my supplies other than exempt and zero rated, my other normal taxable supplies in a particular month are greater than 50 lakh rupees, then I can pay my payables through my credit ledger only up to 99%. So whatever is my total outward payable, 99% of that I can utilize my ITC, but 1% I will mandatorily have to pay via cash. But it will not apply when I have paid income tax of more than 1 lakh rupees in preceding 2 financial years, or I have availed a refund from GST of more than 1 lakh rupees in preceding financial year, or let's say I've discharged more than 1% cash liability cumulatively already from 1st April till today, or registered person is government department, PSU, LA or stat body. In this case, this provision will not apply. Otherwise, Rule 86B says that if sale is more than 50 lakh rupees in a particular month, then outward payable ka 99% only you can pay via credit, but 1% you will have to pay via cash. So this is all about input tax tax credit chapter, section 16, 17 and 18, and plus few rules that we have seen. Now talking about ISD, which is Input Service Distributor. Again, section 20 and 21 is what we are going to study here. So section 20 talks about ISD. See, understand, there is this head office availing a lot of services. Let's say advertisement service, accounting service, security service, everything. So a lot of input services availed by head office. But head office is not providing any output service. Then in that case, there are a lot of branches. Let's say the head office is in Ahmedabad. Now, one branch is in Surat, means Gujarat only. Ahmedabad is in Gujarat, Surat also in Gujarat. One branch in Bangalore. One branch in, let's say, Chennai. Now in this case, branches are providing outward supplies. Head office is availing input services. ITC is getting accumulated here. Outward payable is getting accumulated here. But you cannot utilize this ITC available with the head office. In this case, what to do? Here government has introduced the concept of ISD, Input Service Distributor. Means only input services, not inputs, not capital goods. Only the credit with respect to input services that is available with this head office can be distributed to the branches, and branches can then use this credit for payment of their outward supplies. Here, the same month credit have to be distributed in same month only, and ISD service provider is compulsorily required to take separate registration, and on 13th day till 13 days of after every month they are required to file their GSTR 6. ISD cannot accept any invoice on which tax is discharged under reverse charge mechanism. If credit is attributable, let's say I am in Ahmedabad, my branch is in Surat, Bangalore and Chennai. If I know that this particular advertisement service I have taken for Bangalore unit only, so I give the credit to Bangalore unit. But there is some accounting service, common accounting service available for all. In this case, based on their turnovers, based on their preceding financial year turnover, if not available preceding quarter turnover, I apportion this ITC in respect to all of the branches. So in the proportion of their turnovers, of preceding financial year, if not available preceding quarter, I apportion this. And also remember, eligible as well as ineligible, both of the credits will be distributed. Means, let's say the Chennai branch is providing certain exempt supplies. Means whatever ITC this ISD will be giving to Chennai branch will not be eligible for Chennai branch. Still, ISD will not think about it. ISD will distribute eligible as well as ineligible credit to all of the branches. Now this receiving branch has to think that this is not eligible for me, therefore I will not avail, but ISD will not think and distribute. And last important point for this chapter, if my branch is in same state, then I give the credit in same manner only. Means I am in Ahmedabad and my branch is in Surat. If I have availed some intra-state services, means C plus SGST is charged, or I have availed some IGST, C plus S will be transferred in the form of C plus S only, I will be transferred in the form of I. Because we both are in Gujarat, same state, we both have same C plus S GST. But let's say my branch is in Bangalore. Now the Karnataka branch cannot do anything of Gujarat state C plus S GST. Therefore, here the mechanism of ISD says that if your recipient is located in some different state, then the credit of C plus S will get converted into IGST, and then you give this credit as IGST to your branch, and IGST can be set off against any of the tax. So IGST is always distributed as IGST. But C plus S, if your branch is in same state, then under same category. But if your branch is in different state, then it will be distributed as IGST so that it can be used for utilization purpose. So this was section 20. And 21 simply says that if ISD has distributed excess credit anytime, then in that case we are not going to recover it from ISD. We are going to recover it from the ultimate recipient branch along with 18% interest. So if there is an excess distribution to any recipient branch, same shall be recovered from recipient along with 18% interest and not to be recovered from the ISD. This is section number 21. Is everyone with me? Dil dil, aag aag and bomb bomb emoji. Yes, everyone. Finally, we have completed input tax credit, and here I can say, see, let me take you to index. The purpose of marathon is served as such, I can say. The remaining chapters we will cover, we will see, but even if, see, the weightage of all the remaining chapters is not that much. Okay, payment, TDS, TCS, refunds is important, or let's say demand recovery is important. But other than that, if you see, returns would be C category, job work would be C category, assessment I would call C category, inspection C category, demands recovery is A, liability would be C, offenses penalties would be A, appeal revision, since we have amendment, you can call it as B or A also. Advanced ruling, export, import. So the joint weightage of all of these chapters is very much less, but giving C means these are not asked in exam. No, it is not the case. A cumulative weightage of like 20 marks around you can consider from all of these chapters all together. Whereas single ITC chapter has a weightage of 14 to 18, and combined weightage of all of these chapters is 20 to 25. So based on that percentage terms I am saying, but the purpose of our marathon is served since we have completed ISD. Let me take you with all the sections once again. See, GST introduction, we saw constitutional provisions, article 246, 246A, 279A, everything. Important terms, what is goods, what is services, what is consideration, related person, distinct person, establishment of distinct person, export of goods, export of services, everything. Supply, section 7. S for 7, S for supply, 7.1 supply include, 7.2 supply exclude, 7.1A what is goods, what is service, and 7.3 government has simply the power. Composite mixed supply, section 8. 8A composite supply, 8B mixed supply. Charge of GST, we saw section 9, which is levy and collection. Then 9.1 normal levy, 9.2 NAP, 9.3 list of RCM, 9.4 real estate sector, and 9.5 HUT rate, e-commerce operator services. Composition levy, we saw section 10, then 10.1 and 10.2 for goods restaurant, and 10.2A for others. Registration, 2 to 22% liable, 23 not liable, 24 compulsory, 25 procedure, 26 deemed registration, 27 CTP and RTP, 28 amendment, 29 cancellation, and 30 revocation of cancellation. 31 tax invoice, 32 URP not to collect tax, 33 mention tax amount on document, and then 34 credit note, debit note. Time of supply, section 12 time of supply goods, section 13 time of supply service, and section 14 rate change section. Section 15 value of supply, where 15.1 says transaction value plus inclusions under 15.2 and exclusions under 15.3. Then valuation rules, 27, 28, 29, 30, 31, 32 we have seen, and those 5 optional valuation procedures. Then place of supply, IGST Act, section 7 interstate supply, section 8 intrastate supply, section 9 territorial waters, 10 and 11 for goods, 12 and 13 for services. 1 balle balle, 1 balle balle, why balle balle? Because we have got exemption from GST. Therefore 1 balle balle is section 11 for exemptions. Then section 16. You have turned sweet 16. You have turned sweet 16 means your family will start putting conditions, restrictions on you. Therefore, section 16, eligibility to claim ITC. Section 17, we obviously remember block credit and apportionment of credit. And section 18 are those special circumstances, compo to regular, regular to compo, how to deal with ITC. See, once you become 18, you become adult from teenager. You become adult from teenager, means you become regular for composition, composition till regular. So this ways you can remember section number 18. Then ISD. All the provisions of ISD are under section 20, and if you have done excess distribution, then recovery is done under section 21 of ISD. Quickly tell me yes or no. Right from section 7 till all of these sections that we have completed in 7 hours, are you confident? It's 7 hours 47 minutes, but we have taken a 35 minutes break and small 5 3 4 minutes break also. So 7 hours and we have completed these many sections, that too in utmost detail possible. I'm trying to write each and everything so that it stays in your mind. If I do not write and I just simply keep on saying the provisions, the marathon can be completed in half of this time. But I want this revision to stay relevant till the exam date, that whenever you want to revise, you can. So yes, everyone is with me. Done, ma'am. Okay, you can just take a 5 minutes break and then we start with payment, TDS and TCS. Now we will continue till you all have energy, because we also have part 2 of the marathon tomorrow, And from customs, I have already uploaded video for, duty drawback. I have uploaded video for valuation and I guess baggage. So for these chapters, video along with all question answers we've already uploaded. So only remaining topics we have to cover tomorrow, which would only take like 2 to 3 hours. So remaining time we can use for remaining GST that we will cover tomorrow. So till you all have energy, we will continue today. Otherwise, remaining portion we will take on tomorrow. But at least till TDS and TCS, I will take today only. After that, as you all say, right? So just go on a 5 minutes break, come back with energy, make it possible that we at least cover till returns and job work today only, so that tomorrow we can end up early. Done, everyone. Chalo. So quickly come back in 5 minutes. We all back, everyone? Yes, ma'am? Yes, sir. Shall. Then shall we start with payment of taxes? Yes, ma'am. So before starting, let's just understand the dynamics of payments of taxes chapter means. Just like we study in accounting, we have three ledgers under GST. So we have e-liability ledger, or you call it as e-liability register. Then we have e-credit ledger and e-cash ledger. So whatever are my liabilities under GST, whatever are my liabilities under GST are debited in e-liability ledger. Now these liabilities can arise either from filing of returns, means I show my liabilities in my returns, or there is some show cause notice order being issued, or anything like that. Liability can arise with respect to any particular thing. All liabilities are debited. Then when I file my returns, whatever credit I am availing, that credit is credited in my credit ledger. When I pay amount via challans, then cash is credited in my cash ledger. So I have some debit liabilities pending in liability ledger, and against it I have some credit balance in my credit and cash ledger. So what I simply do, I debit my credit ledger, I debit my cash ledger, I credit my liability ledger, and I set off all of my liabilities. This is the simple mechanism working under payment of taxes chapter. So let's start with section number 49, payment of taxes. So here 49 says that payment of tax, interest, penalty and other amounts. Rule 85, no need to remember the rule numbers. It is okay. If you remember, good. If you do not remember, then also no problem. Electronic liability register in GST PMT 01. So all the amounts that are payable by me are debited in this register, and then I use my credit ledger and cash ledger. I debit my credit and cash ledger just to settle the liabilities of my electronic liability ledger. But understand, for payment of these five particular things, I cannot use my credit ledger, means compulsory I will have to use cash ledger only. If I have to make payments under section 51 TDS, section 52 TCS, or RCM amount to be paid composition person, or other than tax, means I have to pay any interest, penalty, fees, or any other amount which is not tax, means I cannot use my credit ledger for same. I will mandatorily have to use my cash ledger only to set off these payments, which simply implies that only for tax dues, only for taxes I can use both credit and cash ledger. For other things I can only use my cash ledger. What five things, everyone? Everyone in the comment section, what five things? TDS under 51, TCS under 52, RCM amount, composition person, and any amount other than taxes, means any interest, penalty, late fees, or any other amount that is required to be paid by me. I will have to mentorily pay it from my cash ledger only. If you have any discrepancy, means you want to cry, means there is any discrepancy in either of your three ledgers, be it cash ledger, credit ledger, or liability ledger, you want to go and cry, there is a discrepancy, you go and cry in GST PMT 04. So if there is any discrepancy in any of the ledger, you go and cry in GST PMT 04. Also, let's say an order was issued saying that there is a liability of 200 crores. I made an appeal and I won the case. Now, tribunal said here that okay, your liability is not 200, it is only 120 crore. So without using my cash or credit ledger, directly 80 crore will be credited here. Why? Because of the order. So it is not necessary that always you use cash or credit ledger. With order of tribunal or court also, my liability can get reduced. What will be the order of discharge? Very much simple. Unless you are free from your previous bounds, you cannot go into a new relationship. So here, first of all, I clear all my previous tax period dues. Then I clear all my current tax period dues. So first of all, I clear all my previous tax period dues. Then I clear all my current tax period dues. And then if any other demand with respect to section 73, 74, anything is pending, that I will clear. So order of discharge, that I have a lot of amounts payable in my liability ledger. First of all, pay the dues of previous tax periods, then current tax periods, then any other demand or anything outstanding, you pay it later on. This is all about section 49 liability ledger. Then let's see credit ledger. Again, whatever credit I am claiming, everything is credited to this particular ledger. And then whenever I'm using it to discharge my liabilities, it will get debited. If I have any time used excess ITC, more than required ITC, I can claim refund of the same. Or if I made a refund application, now we know, as soon as we make a refund application, our credit ledger is debited at that point of time only. If later my refund is rejected, means this amount will be recredited to my ledger. Understood? And if, let's say, there was some erroneous refund being issued to me, means I was having 100 crore balance in my e-credit ledger. I took a refund of, let's say, 70 crore. So this amount would have been debited in my credit ledger, and now this came in my bank account. I have this 70 crore because I took refund from credit ledger and I have 70 crore in my bank account. Later I got to know now my new balance would be 30. Now later I got to know that this refund was erroneous. Therefore I paid this 70 back to government from my cash ledger. So I deposited this 70 in my cash ledger via challan and paid it to government. Now we are saying to government, you debited our 70 crore credit ledger, gave us in bank and took it back. Now at least you recredit our credit ledger so that we can stand at the original position. First of all, we agreed that here you debited 70. Arey yaar. Here you debited 70 crore. This was okay because we got it in our bank account. Now you've taken it back from our bank account. Then at least you give us 70 here so that we can again restore it back to 100 crores. So your government is saying that whenever you had availed some erroneous refund and you returned that refund through cash ledger, we will again recredit your credit ledger with that particular amount. And okay, again, if you want to cry, there's any discrepancy, you go and in GST PMT 04, you can cry for discrepancies. Then talking about cash ledger. Again, electronic cash ledger is simple. Whatever amount I deposit through challan is credited in my cash ledger and then I can use it for payment of any of the amount. Are any manual challans allowed in GST? No. So in GST, always common portal pay you can generate challan. There is no concept of manual challan. Once challan is generated, it is valid for a period of 15 days. You can use internet banking, credit debit card, IMPS, UPI for payments, and offline like NEFT, RTGS can also be used. You can also go to bank and make over the counter payment by giving cash or check, but that would be allowed only up to 10,000 per tax period per challan. If the amount is more than 10,000 for any tax period, you cannot avail the benefit of over the counter. Right. Upon successful generation of challan, a common portal identification number is generated, 14-digit number. Then after that, bank adds a 4-digit number bank code, means challan generated this. But then when you make payment, 4 digits of bank code is added and challan identification number, CIN number is generated, which is 18-digit number. Now this amendment says that there might be possible that amount is already deducted from your bank account. Means ideally bank should have added the 4-digit bank code and given you the SIN number. But it has not happened. So Transbank fails to communicate this SIN to the common portal. In that case, RBI also has records of all transactions. So from the e-scroll of RBI, you can update your cash ledger if your challan details match with the e-scroll of RBI. So if your challan details are in conformity with the e-scroll of RBI, you can update your e-cash ledger without bank communicating the SIN number to you. Other than that, every bank has e-focal point branch, means one branch nominated on pan-India basis every single bank has, where they open the accounts of various governments under various heads. So we have major heads, ICSU and SES, and we have minor heads under these major heads. Now normally, if I have cash balance in my IGST tax head, I cannot use it for my CGST interest head, means major minor head amounts cannot be used. But you can just file GST PMT 09, transfer that amount, and then you can use, means you can transfer any cash amount, not credit, right? Not credit ledgers, we are not talking about. PMT 09 is only and only for cash ledgers, not for credit ledgers, mind it. So for cash ledger, if I want to transfer amount from any of the major minor head to any of the other major minor head, I can just by filing GST PMT 09. Also, if I have my distinct person, means separate registration under same PAN, my another separate registration needs some cash balance and I have spare cash balance, I can even transfer it by filing GST PMT 09. So RP may transfer any amount available in e-cash ledger to e-cash ledger for CGST, IGST of a distinct person by filing GST PMT 09. But make sure none of your liabilities are pending. So no such transfer shall be allowed if your own liability are pending. Your entire e-liability ledger has to be paid off, settled off, and then if you have any spare balance, you can go ahead and transfer it to your distinct person. Alright. And then, yeah, all of these simple things. If you want to cry, just go and cry in GST PMT 04. Every transaction is given a separate identification number. That is all about section 49. Now section 50. We have reached half century and hence you start developing interest. Once the player reaches half century, you start developing interest in his game. This way you remember section 50, which is interest on delayed payment. Now since we have reached half century, therefore we start developing interest. What does section 50 talk about? Interest on delayed payments. So if you are making any delayed payment, means you had either not paid or short paid amount and now you are paying it on a later date. You pay it along with 18% interest. If you had wrongly availed and utilized ITC, in that case, you pay it along with 18%. Ma'am, why have you written 24 and striked it off? Because the Act still says 24. The Act still says 24% per annum interest, but with the notification, government has reduced this rate to 18% for now. So for our exam, the applicable interest is 18% in both of the cases, be it delayed payment of interest or be it ITC wrongly availed and utilized. But understand, no interest. If you have just availed ITC but not utilized it, no interest. Interest will be levied only if you avail as well as utilize that particular ITC. Manner of calculating very much simple. Let's say I'm filing late returns. My liability is 100, but I have 30 credit. Means I have to pay 70 only via cash. I am making late payment, right? January month return, I was required to file by 20th Feb. Let's say I'm filing on 25 Feb. So for 5 days, I will be required to pay 18% interest on what amount? 100 or 70? The answer is 70. So whatever net amount I am paying from my cash ledger after reducing my credits, on that net amount paid via cash, I will apply 18% interest for whatever days delay I have done. Right. Then talking about wrongly availed and utilized ITC. Quickly see this example with me. Wrongly availed and utilized ITC. Let's say, for example, January month, I purchased food. ITC on the same was 180 rupees. Now ITC on food is blocked, but I still availed ITC on 20 Feb 2023 when I filed my Jan month return. I just availed the ITC. Since there was no sale, I did not utilize anything. Means this 180 is lying in my e-credit ledger, but this is ineligible ITC. Now, I made some sale in the month of Feb. So, Feb month, I made some sales. And there was an outward liability payable of 120 rupees. Now here, when I was filing my Jan month return, I already had balance of, let's say balance of 300 available. Plus, I took 180 and my balance became 480. So while filing Jan month return, there was already an opening balance of 300, which was okay, eligible, correct balance. I took 180 more and my balance became 480. Now here, in the month of February, let's say for sales, my outward payable is 320 rupees. My outward payable, or let's say it is 220 rupees. I will see, I have 480 balance, I utilize 220 and make my payable 0. Now, when I was filing my March month return, see Feb month return, I filed on 20 March. Now March month return, I will file on 20 April. Now here my outward payable is, let's say 130 rupees. Now I will see that I had 480 balance earlier, from which I used 220. Therefore, now my carried forward balance would be 480 minus 220, which is 260. Right. Now out of this 260, I can pay 130. Yes, I can pay 130. So now my carried forward balance would be 130. In April month, when I filed the return on 20 May, I realized that there was some outward liability of 100 rupees. I thought no problem, I have 100 and I utilized this entire 100. Now I have 30 balance. While filing my May month return on 20 June, I realized that shit, there was this ineligible ITC of 180 that I am utilizing since so many months. So I decided to reverse 180 here. I decide to reverse 180 on 20 June 2023. Now my question is interest will be what? What will be the amount of interest? With this example, everyone, we know that interest will be levied on amount availed as well as utilized. Can you give me the amount of interest that will be levied here? Waiting for 2 minutes. Sure. Just try once. Okay. See, from the date of utilization till the date of reversal, I have to calculate interest. Date of reversal, I know 20 June. I have reversed the interest on 20 June only. Now let's see date of utilization. Jan month, filing return, I just availed the ITC, did not utilize anything. Feb month, my payable was 220. I had balance of 480. My first assumption would be that I have paid from this correct eligible ITC. Means this 220 I have paid from 300 only. Means no utilization from the ineligible ITC. Then while filing Feb month return, then while filing March month return, I used 130. Now understand this 130 I have used from 260. My ineligible ITC here. So remaining 50. 1 second. What happened? Okay. So see, so of this 130, I utilized my 80 which was eligible, but 50 which was ineligible, means this 50 I utilized from this 180 which was incorrect. So on 20 April, I utilized 50 ineligible ITC. Then on 20 May, I utilized more 100 of ineligible ITC. So on 20 May, 100 more was utilized which was ineligible, and this 30 is still lying in my credit ledger today when I am reversing. Means on 30 no interest will be applicable because I never utilized this 30. I just availed 30 and 30 is continuing in my credit ledger, but I have never utilized this 30. Yes, everyone. Done. So now for 50 rupees, I will calculate interest from 20 April till 20 June. Means April we have total 30 days minus 20. 10 days of April, 31 of May and 20 of June. So 61 days interest on 50 rupees at 18%, and then from 20 May till 20 June, 31 days. So 31 days interest we are going to calculate on 100 rupees at 18%, and this will be the total interest which I will pay. Means I will reverse entire 180 ITC, but interest I will pay only on 50 and on 100 for the number of days that I have utilized the ITC. This is all about section 50, which is interest on utilization. So here they say that first of all, we will assume that you are utilizing your correct ITC only. When your balance falls short at that point of time, we say that it will be utilization. Done. So this was section 49, payment of taxes, and section 50, which is interest in case of short payment or wrong availment or utilization of ITC. I don't know what is the issue with the stream. I cannot see preview here. Maybe we can keep this session till here, because I feel if I end this session, I don't know if this portion is going to stay in YouTube or not. So that would create an issue if the marathon is not staying later on. Anyways, we've completed more than what was required for today. Now tomorrow's target would be to like 3 to 4 hours we will give for remaining portion of GST. So 3 to 4 hours remaining portion of GST, and then 2 to 2.5 hours I required for customs, because the valuation under customs, then baggage and duty drawback I have already uploaded on customs. If you have not seen it, maybe you can utilize the remaining day of today to complete that customs portion, so that tomorrow you can wind up entire IDT with me. So for tomorrow, the target would be 3 to 4 hours for remaining GST and 2 to 2.5 hours for custom. So almost like including breaks, within 7 hours, we will complete our full syllabus, entire IDT marathon. I wanted to take TDS and TCS today only, but I am not sure if this is getting recorded because I cannot see preview in my system. So might be an error. So better to wind up here only so that you can in fact later see this. So for half an hour, I do not want to take that risk. Okay. Right, everyone. Sure. So we end the marathon for today here. Part 2 tomorrow for remaining portions. Just keep revising, because see, tomorrow the things will be super quick because there are a lot of chapters to be covered and the weightage is very much less, right? So going by importance, I will quickly take you through provisions which are only important and relevant for examination point of view. Other things we will skip. And customs, I'll take you again through the important and major portions which are relevant. For, as I said, valuations, baggage and duty drawback, please make sure to refer the video today only. I have uploaded it in the same playlist of the English videos. Done. Tomorrow again 8 a.m. same time, same place. 8 a.m. link is already shared on YouTube. I will again share it on Telegram channel. You also share it with your friends who have not joined today, so that they all can also join live tomorrow, and we will wind up entire IDT subject tomorrow along with certified copy analysis, how to write MCQ, paper writing tips and everything. Done. So before ending, 1 minute, just quickly give me dil dil aga bomb emojis. Chalo, quickly, heart, fire, bomb emojis. Give me a lot of energy before we end this session, and promise me to come back tomorrow at 8 a.m. and stay with me as you have stayed today till end. So for all the students who have stayed since beginning till end, very good. Proud of you all, super proud of you all. And tomorrow also you are coming and staying with me for whole day. Yes, ma'am. Yes, and make sure if you have not seen the customs portion, the already shared customs portion, you see it today and then come tomorrow for the marathon. Done, everyone. Thank you for being the most amazing students for this marathon. I am ending this session here. Bye-bye. Take care. See you all tomorrow for part 2. Do share the video with your friends. Tag me on Instagram or Twitter if you use. I'm there on all social media platforms. We had a lot of fun. Bye-bye.